Good morning, everybody. Welcome back to another episode of the Market Open. It is Thursday, July 17th. We are here. We are live. And oh boy, do we have some things happening in the pre-markets right now. Yesterday was crazy based on the roller coaster market we had with Jerome Powell potentially being fired. Then Trump coming out and saying, well, I don't really like the guy, but I'm not really going to fire him. So we kind of dumped and then we pumped. And then throughout the end of the day, you had some pretty momentous milestones in terms of some of these stock prices. Palantir got to 151, Rocket Lab got to 48, Robinhood got to 104. Well, I guess we can continue yesterday's momentum in the broader equity markets into today because we're having some fun. Robinhood trying to get back to 104. Palantir is 152 in the pre-markets. Tessie trying to break 325, 323.75 right here. Nvidia is trying to break 173, and the reason for that is because TSM, and we'll talk about it, absolutely demolished earnings. They're up 3% on the day, revenue growth of 40% year over year, EPS growth of 60% year over year. TSM crushed it. TSM, one of the main components in the semiconductor supply chain, they're doing very well. As a result, AMD, which hit 160 yesterday, trying to break 161 in the pre-market. SoFi, 2140. Google, 182. Grab actually closed above 510 yesterday at 514. We also have some pretty freaking bullish news on Grab that I'll talk about in a bit. But, I mean, we've got a pre-market right here that's reflecting a lot of momentum that we saw from yesterday, a continuation of that momentum, and a lot of that is led by TSM. We do have some other company earnings that we'll talk about, like Pepsi and a few others, but ultimately TSM is, I think, the reason this morning why the market is so excited, because it means the AI trade, the CapEx trade, the overall semiconductor ecosystem is not slowing down. And that's why we're getting some momentum. Now, a couple quick headlines before I get into macro data, and then we'll go into these headlines even deeper. Lucid got a $300 million investment by Uber to build robotaxis. I got this news 5 minutes before I went live. I don't even know if I have an opinion about this. My gut reaction is I don't know if Uber and Lucid are going to figure out robotaxis. I don't, quite frankly, but I think Tesla's up just based on the idea that the market's like, okay, so robotaxis are really going to be a thing, and then the market's going to expand, and therefore, Tesla's TAM is going to grow as well. But that is the headline. Uber is going to be giving Lucid $300 million in order to build a partnership. Uber is investing hundreds of millions in Lucid and Neuro to roll out at least 20,000 robotaxis in the US over 6 years, starting in 2026. Again, Tesla has 7 million vehicles on the road. They press one button. Theoretically, at least 10% of them could become part of a robotaxi network. That is kind of the moat with Tesla and how fast they can expand into robotaxis, but it looks like Uber and Lucid are going at it. The fleet will use Lucid's Gravity SUV with Neuro levels for tech and run exclusively on Uber's app. Uber's putting $300 million into Lucid with a bigger undisclosed amount into Neuro. I don't know if this is how the incumbents plan to work against Tesla to try to compete on robotaxi, but I think the reason it's bullish Tesla is because all of them are realizing, oh, holy crap, this is going to be a market that eventually becomes fully autonomous. This is why Elon said the difference between Tesla being worth 0 and $1 trillion is autonomy. And although I personally am a bit skeptical that Uber and Lucid kind of work together and figure this out, because Lucid really hasn't done anything over the past 10 years, it does seem like Uber is saying, hey, we got to make some investments. It kind of screams a little desperation from Uber, I'm not going to lie. And I'm not thinking it's a bad thing for Uber to do. If you have the money, you should try doing it. But I think Uber is also realizing, hey, our partnership with Waymo is not enough to compete against Tesla. We have to make other investments. And that's what they're doing right here with Lucid. Those vehicles cost like $600,000 each. How many can they afford? Yeah, dude. Like it's the news to me was bullish Tesla as soon as I saw it, because I was like, oh, robotaxis is like legit becoming a thing. But it also screamed like, wait a second, Lucid? This is going to be the company to go after. So we'll go deeper into this partnership later, but that is one of the main headlines. And then the other headline real quick that I know, I felt this stock was going to explode in the pre-markets just based on what I saw it do last night. Open Doors up another 30%. It hit 220. It hit 220 like 10 minutes ago. Now it's at 196. I mean, look, my only thing here is if you're chasing Open Door, you just got to be a little, cautious and patient, because if you bought it at 220 and now it's down at 198, it might gap right back up to 220 when the market opens. It might gap right down. So this thing was at 60 cents a couple of weeks ago. It's at 195. Obviously, there is a lot of momentum from retail in terms of where this name can go. The meme is Open Door to 82. That is the meme that everyone is thinking. Open Door to 82. I don't know where they get $82 from, but everyone's saying Open Door is going to go to 82. So if you believe in that meme, I guess you're part of this community. But that's what you have on Open Door. Real quick on the treasuries, SBET continuing to crush it, up another 10% for Ethereum. 41.44. BMNR 47.73. That's up 6.5%. And then BTBT, that is also up 5.3%. Ethereum did cross 3,400. It's just under 34 right now. Actually, it's just above 34, 34.36 in the pre-markets, which is why some of these treasuries are also getting momentum. Now, what is the main reason that the market is open? Not open. The market is up. The market is going to open soon. What is the main reason the market is up? Folks, we got some pretty freaking bullish macro data. Like, really bullish. Take a look at this. Retail sales data for the month of June, 0.6% versus 0.1% expected. You beat by 0.5%. Last month, it was negative 0.9% for the month of May. So that is a massive beat. And then jobless claims, we expected 235,000. They came in at 221,000 on jobless claims. Jobless claims is how many people are filing for unemployment. So if we believe these numbers, which I know there's controversy on like how relevant and accurate are the numbers that are calculated by the BLS, especially around the jobs data, but if we can only say that we have to go by these numbers, the truth of what's going on right here is consumers are spending, because we just had a 0.5% beat in the month of tariffs, right? Like the whole idea of June was like, oh, retail sales are not going to be that good because there's all these tariffs. People are not going to want to spend because prices are going to go up, yada, yada. That narrative doesn't match reality for the month of June. Number two, the labor market's strong because, again, a recession is 350 to 375,000 jobs or people filing for unemployment every week. We are nowhere near that, and we're definitely not even matching expectations because jobless claims missed by 14,000, which is a good thing. So, I mean, it's one of those things where I think that's why the pre-markets were already pretty green, and then you had this macro data come out, and then everything started getting a little bit more of a bid. AMD right there, breaking 161, S&P 625, Tesla looks like she wants 330, 325 right there. Palantir 152, Robinhood trying to get back to 104. I think 105 maybe on the deck today. We got very close yesterday. Would be nice to see us get to those levels. Google right here at 182. And then Rocket Lab, are we crossing 49? Rocket Lab wants 50, dude. Look at that. 49. Rocket Lab wants 50. And it is just pretty incredible to kind of see how this is playing out. I know it also is giving 2021 vibes. I feel it as well. Not because NVIDIA's at 172, but because if there's an entire community on the internet dedicated to Open Door getting to $82, yes, that does feel very 2021-ish. I get it. The Ethereum treasuries feel 2021-ish, but then again, there's an underlying thesis behind them called Ethereum, which is not like a scam by any sense of the imagination. By the way, the Ethereum deep dive is happening next Wednesday at 9:30 p.m. I got a really good guest to join. I have two people. One is an expert in Ethereum treasuries. One is actually building a lot of stuff on Ethereum. And the other guy, some of you guys may know him, David Hoffman. I got David Hoffman. David Hoffman, he's one of the co-founders of the Bankless podcast. He is like elite Ethereum knowledge when it comes to also communicating Ethereum to people that are not from the cryptoverse. So that'll be a good one. I think next Wednesday, 9:30. I wish I could do it today, but people's schedules just didn't line up. Next Wednesday, 9:30 p.m. I think that'll be a really good deep dive on Ethereum. So you're getting a lot of momentum across the board. And yes, there are some pockets of froth that make it feel very 2021-ish, but that is not the entire market at all. The entire market are the earnings that we've seen from a company like TSM that we'll talk about in a bit. And that is what's giving this market momentum and a premium. And that's why I think we're seeing the level of momentum that has been taking course basically over the past couple of weeks. So that is what we got on TSM. Is there an update on Joby and Archer? Okay, so I was reading something about Joby last night. Correct me if I'm wrong. So there wasn't like an official press release or anything. Joby right here up another 3% after being up 15% yesterday. What I read was that they had a flight take place and it was successful from like one destination to another destination. I'm probably getting some of the details wrong, but the big news a couple weeks ago was a Toyota investment. The big news after that was doubling their manufacturing capacity. And yesterday, the reason it surged as much is because they had a very successful flight in one of their eVTOLs that had no issues. And someone wrote an article about how successful it was. And that's the street basically saying, oh, Joby's, like they're legit. They're getting ready to really expand and scale. And Archer, as a result, also got some momentum out of that because, if Joby's going to win, hopefully Archer can win as well. Archer right here up 1%. As well. They had a 1 meter flight. There you go. A 1 meter flight. Yeah. So that is why Joby and Open Door, or Joby and Archer, are doing their thing. Okay, cool. So that's what we got in the context of some of these pre-market moves. Let's get into some of the other macro data and different things we have going on. Also, we had someone very important on CNBC this morning, folks. We had Kevin Warsh, who might be the potential next Fed on CNBC, and his segment was pretty damn incredible because of what he said about the current state of the Fed. And so we'll listen to him. He seems like he's going to be in the running to at least be one of the top 3 candidates for the next Fed chair. And we'll listen to how he ends up articulating his goals as potentially being a Fed chair. Oh, wow. Hold on. Before we get into that, we got some news. Wow. BMNR. They have $1 billion of ETH. Holy moly, $1 billion of ETH. It was supposed to be 500 million. Did they raise an extra 500 million? BMNR, company's total of approximately 1 billion of ETH, exceeds the initial 250 million PIPE proceeds by over 300%. That means they raised more money. Wow, Tom Lee's BMNR now holds 300,000 ETH. 365,000. That's just a little bit behind SBET, if I'm not wrong. Holy crap, dude. Wall Street is not... Dude, what you guys are seeing, what I'm seeing right now, what all of us are witnessing is the embracement of Ethereum, this cryptocurrency that's kind of been left for dead for the past 3 years by Wall Street. That is incredible. BMNR right here, not really reacting too much to that news. 5.96%. That the one thing that means for BMNR is that their net asset, their premium to NAV is going to go down a little bit because their NAV is going higher based on the amount of ETH that they have. So SBET was one of the main reasons, one of the main reasons people like SBET over BMNR is because they had way more Ethereum. SBET right here up 9%. But if BMNR is going to catch up and they're just going to do what Michael Saylor's been doing with Bitcoin, which is just buy as much Ethereum as they can and hope Ethereum goes to the moon, then the alpha on the underlying might reciprocate and gain a lot of momentum as well. The company's Ethereum treasury strategy to strengthen their broader Ethereum ecosystem. This is a press release that they just put out now. It's almost double than SBET. Okay, so it's either very close or SBET I think has 260,000 Ethereum. Yeah, so it's not exactly double if they have 300,000, but it's close to being a decent amount more. Wow, dude, this is incredible. VLCN announces 500 million placement to initiate Bitcoin treasury. VLCN. I don't even know this ticker symbol. VLCN. Volcon. They're up 333%. Oh my goodness. Good morning, everybody. Good freaking morning. Yeah, SBET has 280,000. BMNR has 330,000. Or BMNR has 300,000. So BMNR has 20,000 more Ethereum than SBET. What is Volcon? Do you guys know this company? Volcon stock? What are these guys? They're a company in Texas. They have 36 employees, if I'm reading this right. Volcon. Or no, this is a sorry. This is in New Zealand. Wait, what is Volcon is the HF1 is your new performance UTV, the ultimate vehicle for heavy duty job. They make UTVs. They make motorcycles. They make like these bikes. they make motor vehicles. What's their market cap on these guys? VLCN. Let's see. They raised 500 million for Bitcoin. All right, there you go. VLCN market cap is 5 million. Oh my goodness. That's not 5 billion. That's $5 million. Well, now their market cap is 15 million based on this surge in the pre-market. How did a $5 million company raise 500 million to buy Bitcoin, bro? What the hell is going on? Is that correct? 500 million? I think that's correct. $500 million to buy Bitcoin. Who the hell is giving them $500 million? Yeah, 500 million. My goodness, dude. My goodness. Well, there you go. There you go. Or are they might be issuing shares to raise that 500 million. They might be issuing 50 million shares at 10. But oh yeah, so so it's not like necessarily, but still someone has to be buying those shares. They had to have some agreements with some banks to buy some of those. They can't just dump them onto the open market. You need some buyers for that. So I guess they convinced some people to give them money to buy Bitcoin. So Dude, see, this is the type of stuff this is breaking news as soon as we get into the live. Like, I got some topics I want to get into, but like this stuff breaks. And yes, it really does feel very 2021-ish. Coinbase right here at 400. But the one pushback I'll say against that is if you're initiating a Bitcoin treasury and Ethereum treasury and Bitcoin and Ethereum go up, I mean, it's hard to say that's bubblish until Bitcoin and Ethereum go down. And that gets into a broader question of, okay, are Bitcoin and Ethereum going to have this 75% collapse like they've had in previous cycles? And I don't know the answer to that question. Maybe in 2026, maybe it doesn't happen. But if it doesn't happen, I don't know if it's bubbly. I think it's more so a company that wants to recapitalize their balance sheet, not using U.S. Treasury, as Michael Saylor was saying yesterday on that clip I showed, but rather with an asset that is highly liquid, highly tradable, and that has lots of volatility, which is, if you believe in Saylor's thesis, volatility is vitality. You get life from the volatility of an asset. And we're just hoping, everyone who's into crypto, that volatility is not going to be to the downside like it was in previous cycles. And given the institutionalization of this asset, maybe it's not going to be as bad as it was before. Now, there's other parts of the market that do feel bubbly, like Open Door. But granted, maybe I don't understand the Open Door thesis as much as everyone else. So, yeah. Weeble's running because I sold it yesterday. So that's why Weeble's running. So there you go. If you're in Weeble, congratulations. you are getting a run because I sold it yesterday at 12.54. I took the money. I bought Robinhood instead. I sold a call against Robinhood to collect the difference in premium. So I lost 17.50 by selling my Weeble. I sold a call on Robinhood for 120 March 2026. I picked up 17.50 in premium, bought another 100 shares. And so I broke even on the Weeble trade. But of course, now that I sold, it's going to want to go to the moon. So you're welcome for those that are in Weeble. Now, granted, I had 14.50 covered calls this week anyway. So unless if it goes to 14.50, I still would be breaking even. In this case, I just broke even in a different way. If it goes to like 17, then I'm actually going to be losing money on the trade. But it is what it is. Look at this. Look at this. It wants to go to 14 now. Then why not above 14? Then why not 15? Then why not 16? Why not? Is there any news on Weeble? Or is the news just Amit sold it? So the market universe is like, you know what? Let's make this go higher. Up, here we go. Weeble, consolidation of Weeble Pay positions Weeble Corp for Q3 reintroduction of crypto trading. Okay, so they're bringing crypto back to the platform. I mean, look, that's bullish, but it's also like they've got to put up actual numbers of people buying crypto on Weeble in a meaningful way for the street. Like, the biggest issue I have with the Weeble thesis is that they're not really growing in options and equities. It's like relatively minuscule growth. So unless a lot of people start buying crypto on Weeble, I don't know. I think it's less because of crypto. It's more because I sold. So if you're in Weeble, congrats, 1380. We're going to see if this one can hold as the market opens. Maybe it does, maybe it doesn't, but we'll see how that one plays out. Triple V, thank you for the 110 euros. Appreciate you. Thank you for being here, being part of the channel. Speaking of Triple V, one of his favorites, JetBlue, is that running? That is up 1.3%, and that is likely up because of United. United, real quick. Oh, wow. United's up 3%. All right, so real quick on United, and then we'll get into what's going on with the Fed. United is up 3% right here because they had a pretty good earnings. The only problem with United's earnings is that their gross margins were down a little bit, and their revenue estimates were down by like 2% because of what happened in the Newark airport. Now, if you're from the New Jersey, New York area, you know that Newark airport, which is in New Jersey, I've been to it like 500 times, is one of the largest United hubs in the country. And they had like a 4 to 5 week, not shutdown, but kind of major issue in terms of just planes going in and out of the airport. And that led to a lot of delays, a lot of cancellations. So they cited, hey, the reason we had a crappy quarter, crappy being, it was a good quarter overall. Business class was up year over year, but the reason they didn't exactly hit their numbers is because of that Newark airport delay. However, on the guidance, last time, remember in Q1, they gave a recession guidance and a non-recession guidance. This time they just gave guidance, and the guidance was at the midpoint of what the street expected, which is actually really good. So when the stock was down 3% yesterday, it was a little confusing because outside of the Newark stuff, which is not really in their control, they had a great quarter. And United right here is getting some love for that in the pre-markets, up about 3%. JetBlue probably reciprocating some of that love. That's up about 0.5%. Delta, which was up 15% last week, that's up another 1%. And the airlines are doing great. Southwest, that is also up a little bit. The reason the airlines matter so much is because we need to know that consumers are spending, that they're traveling, that business travel is going up, and that ultimately there is the ability for the market to essentially, say that consumers are healthy, they're not going anywhere, and that they're going to be in a strong position to survive going into Q2. So that's what we got on Lucid. Triple V again, thank you for the super chat. Thank you for being here. 2 points. Thank you for the $10. United Airlines and JetBlue are moving. Yep. Probably moving based on those earnings that we got from UAL. Where is Open Door in the pre-markets? Open Door is at 30%. It was at 220. We're going to see when the market opens how this one explodes. Again, if you are chasing this from a pure trading perspective, I guess you just have to be a little careful because it can go up, it can go down, but the retail momentum around this name is massive. I will say that. The retail momentum around this name is absolutely massive. And, as a result, people are definitely seeing there is something theoretically that's exciting around Open Door. Okay, TSM. Let's talk about TSM because this was the main company that really framed earnings. 245.6 on TSM. That's up about 3.31%. So they beat on revenue and estimates and they beat on guidance. I mean, that's kind of the main thing for TSM, and that's why the street is enjoying this. So here's what the CEO said on demand. He said the demand from AI is getting stronger and stronger if you pay attention to what for trading companies as CEOs say. And so the makeup of the trend of AI is continued to be strong. And so now we are in a mode to try to narrow the gap. I don't want to use the balance. The last time you guys misunderstood what I said, you saw the bad wording. So I want to say we try to narrow the gap. Momentum is still there and very healthy. So basically he's saying, hey, there's no way you guys should misinterpret my words. Like, we absolutely are seeing massive demand. The only issue we have is supply, not demand. And as a result, we are getting tons and tons of momentum, which is why the market is getting the benefit. Quite frankly, one of the reasons why Palantir is running is also because of the fact that TSM is showing that this AI trade is alive. And again, Palantir is just a software derivative of the LLMs that are being trained from the GPUs. And so if you have way more demand for AI compute infrastructure, GPUs, et cetera, that probably means more demand for software. Palantir right here, a new all-time high, 152 in the pre-markets. That's up 1%. Tesla right here, 324, and then NVIDIA, 172.58. So the takeaway from TSM, 60% revenue growth, 60% EPS growth, 40% revenue growth, is that they're not slowing down. And if they're not slowing down, then it's going to be very hard to see, the broader AI trade slow down. I think this could be one of those things that could take NVIDIA much higher, just based on the pure idea of the fact that, if people were worried about any level of the supply chain in regards to AI from the other companies that are part of the stack, then they shouldn't be that afraid based on what we saw from TSM. Now, obviously, ASML, I didn't go that deep into what happened in their earnings, but from the people that I've kind of read some of their analysis on it, it's not that big of a deal. Some of them are saying it's sandbagging. Some of them are saying it's just some holdups in the supply chain. It's not really something indicative of the broader semiconductor ecosystem being in jeopardy. But some of the hardware companies like a Micron, quite frankly, which is down another 3% right here, took a beating yesterday because of ASML. They are layers in the supply chain. They are not the thesis for AI. That's more of the NVIDIAs and AMDs of the world and the TSMs. And so that's why those took a little bit of a hit. But I don't think it's the most concerning in the world for the broader AI CapEx trade that we have right now. You already know that NVIDIA earnings will be good because of this. Yes. I mean, I think NVIDIA earnings are going to be great because of this, simply based on the idea that TSM is not slowing down at all. So that's what we got in the context of TSM. Now we do have some news on Palantir right here. This news was not heavily publicized, but this came out a couple of hours ago. We don't have any understanding of how much this money or how much the deal is going to be worth, but we do have a new deal. Velocity Clinical Research partners with Palantir to solve clinical trials payments headache. So we got another healthcare partnership for Palantir. This collaboration marks a milestone in applying advanced artificial intelligence to one of the industry's most persistent administrative challenges. Reconciling invoices and payments in clinical research has long been a fragmented, time-consuming, and error-prone task. Sites often use multiple siloed systems to manage invoices, while sponsors and CROs maintain their own financial systems, creating inconsistencies and inefficiencies. Velocity and Palantir's automated reconciliation solution integrates Palantir's agentic AI technology with Velocity's proprietary workflows. The application successfully possessed and reconciled customer payment report entries, saving Velocity Finance's collections team a significant amount of time and freeing them up to work on high-value tasks. So again, another diverse partnership. We've seen many partnerships over the past couple of weeks. Velocity Clinical Research now partners with Palantir. Sham Sankar was on Fox News this morning. I don't have the clip yet. I will try to get the clip as soon as it comes out. He is at the conference right now, the conference for Industrialize in Detroit. And he's likely talking about American reindustrialization. But that is another partnership in the healthcare space, specifically around reconciling invoices within clinical trials for payments that Palantir is becoming an operating system for. I mean, to me, it's just becoming obvious that every single company on the planet will need something like Palantir. Hopefully it is going to be Palantir. But again, this is one of those things where the TAM is growing, the market opportunity is growing, and their ability to capitalize on that growth is why the street is paying a multiple for this. So that's why we're getting some momentum right here on Palantir 152 in the pre-markets. We covered Open Door to the extent that Open Door is green and they're up a lot, and I think it's a lot of momentum. Again, if anyone has some really good reasons why Open Door is up, please let me know. I didn't get too much time. I didn't get to watch Neil's video, is what I'm trying to say. I would have watched his video last night, but I just didn't get time to watch his video. But for those that did watch his video, to be fair to Neil, though, he said it's a very speculative bet. He threw $1,000 at it for fun, right? And so it's not like he's like super, super bullish Open Door. It's just like, hey, it's running. I'm going to chase a little bit. I don't know, dude. I mean, this is very indicative of just people jumping into a trade. But then again, it's $1.94. I mean, you might have a lot of people jump into that trade, and then that $1.94 turns into $3 for whatever reason, right? So it's one of those things where if you're ready to deal with the volatility to the downside and you want to have some fun, then yeah. But realistically, I don't know if there's an investment case for Open Door. Yeah, okay, so that we'll bring this up after the open. Yes, I did see this. I didn't read this yet, but there is a big Wall Street Bets post about Open Door. I actually have it pulled up, so we'll read that in a bit. My friend sent it to me last night. Again, I just got busy last night, so I didn't get a chance to read it, but we'll read that together and see if they actually have a point and if there's something meaningful to look into. Okay, so let me pull this up right here because we do have the potential next Fed chair that was on CNBC this morning. And I thought this interview was just incredible in terms of what he was saying. Kevin Warsh, this is someone a lot of you guys might recognize because he was he actually interviewed Palantir's Alex Karp back in 2022. And well, he's a great interviewer. I didn't know that he was part of the Fed, but he was, and he may be the guy who potentially is the next Fed chair. Here's what he had to say this morning. If he ends up becoming the next Fed chair, we're probably going to get rate cuts, but also he was very critical of Jay Powell, and this was his logic for why the Fed is off the mark right here.
Look, sometimes it's better to wait so that if there is a mistake, you can recalibrate much more quickly.
So I heard a little bit about that interview, and I heard Nick say something like, well, what we need is continuity. My goodness, I think that's the last thing that we need. The broad conduct of monetary policy has been broken for quite a long time. The central bank that sits there today is radically different than the central bank I joined in 2006. I don't think we need policy continuity that brought about the greatest mistake in macroeconomic policy in 45 years, that divided the country, that caused a surge in inflation. I don't think we need continuity when the central bank doesn't have credibility. Last September, Becky, as you'll recall, the Fed cut interest rates 100 basis points, 50 basis points before the election, 50 basis points after. Inflation was 50% higher then than it is now. And what did the bond market do when they cut rates? Long rates went up 75 basis points. That's a credibility crisis. So listen, this isn't the first time you've heard me in the last decade say we need regime change at the Fed. It's not just about a person. It's about an approach to economics. It's about approach to what they're doing. And I'm troubled when I see them moving the goalposts. It is very puzzling to me, Becky, how you could think that we should do emergency rate cuts last September, and now all of a sudden you stand there like a hawk. That's not good for the institution. I don't think it's good for the economy to be changing the goalposts like that.
Let me ask you, as somebody who's been there before, how much power/influence the chair ultimately has if you're in a room with 11 other voting individuals who may not agree with that person? Historically, there's been sort of an alignment. Everybody's tried, I think, to come to a unanimity on most things. And whether you think that the Fed, I don't know if in history there have been times where there's been, complete and utter distinctions between views on the Fed and what it ultimately means.
So there have been exactly those times. Paul Volcker, when he came in, not only have 12 years of experience in government and 6 at the Fed, I've got some knowledge of Fed history. Paul Volcker came in and said, we don't need continuity, we need regime change. And it was that regime change that brought inflation back and reestablish the Fed as this beacon of credibility. But the president at the time put in some members under the Volcker team afterwards that forced what some thought would be a coup. It hasn't always been pretty. In fact, my own view, Andrew, is what the Fed needs is more robust discussion of ideas, less groupthink. I don't like it that everyone's following the same models. To give you just one simple example, the dominant models at the Fed, which might have been the best models there were in 1978, what do they think, Andrew? They think inflation comes if the economy runs too hot and workers get paid too much. That's not my view. I think we could use a new idea, a new theory of inflation. So let me practice one for you.
Okay.
Literally, he's saying a new theory of inflation. I mean, it seems like this is going to be the guy, if not Kevin Hassett or Besant, that's going to replace Jay Powell, given that he is quite literally articulating that the Fed's paradigmatic approach to how they think of inflation is wrong and that we need a new theory. So whether Jay Powell is fired or not, whoever's going to replace him is absolutely going to usher in a new era of interest rates.
Inflation happens when the government prints too much, spends too much, and lives too well. That theory that money has something to do with monetary policy is nowhere in the central thinking at the Fed. I think if those ideas were imported into the discussion, we could have a good family fight about it.
You don't get to decide how much is spent. That's up to Congress, and the president has to sign off on those things. Would you support them? And I guess the biggest question, Kevin, is people are wondering, the next Fed chairman, is he going to be independent? Is he going to say, and I say he because right now the candidates that we're hearing are all men, is he going to be independent? Is he going to do what he thinks is right, despite what the White House may advise or think, what the administration thinks?
So in a word, yes. So I've strongly believed for 20 years, and history tells us that the independent operations in the conduct of monetary policy is essential. But that doesn't mean the Fed is independent in everything else it does. In fact, if I look at the track record of the Powell Fed over the last 6 or 7 years, they've tried to say, how dare you be critical of us? We're independent in everything. Well, that's nonsense. They wandered into climate change, a subject upon which they have no comparative advantage. With a change of this administration, they said, just kidding. They wandered into another political area of which they were never assigned, diversity, equity, and inclusion. They changed the remit that Congress gave them about whether they were in the business of full employment or full inclusive employment. This change in their definition in 2020 is one of the key reasons why we had the great mistake, the great inflation. And on spending, Becky, during the period of the last administration, what did they say to Congress? Spend, spend, spend. So like you, I think they should stay in their lane. But it's very strange to me that they're asymmetric. Spend a bunch of money when it's popular. And now if you get asked about spending constraint, what does the leadership at the Fed say? Oh, no, that's not about us. You should establish what the rules of the road are and stick with it, regardless of the administration. I think the Fed has done a very good job of blaming others for their mistakes. It's been very popular to blame the president because he's being so mean to them. Well, most of the Fed's mistakes are because of choices they've made. They've done a very good job in the business of politics. The inflation that has done huge harm to the American people. First, they blamed Vladimir Putin. It was because of the war. Then what did they do next? They blamed the pandemic. Supply chains, they would say.
Well, supply chain was legit for a lot of inflationary.
Well, it changed the level of prices because that's what happens in a market economy. But that's not what inflation is. Inflation is what happens to the Fed. The Fed is responsible for inflation. The Fed makes a choice about inflation, and the problem is the Fed has made that choice poorly. So they've got someone new to blame for all these mistakes, and a lot of their co-conspirators in the media seem to believe it. The new mistake is the reason why they're not doing the right thing on rates is because of the president and those tariffs. Well, he's being so mean to them.
I will say changing the goalposts.
That's not the cause of inflation. The Fed controls that.
I mean, bro. He just said the Fed and their co-conspirators in the media are the reason for why the American people do not have low interest rates. He said they are basically saying, hey, they hate Trump. That's implicitly what he said, right? They're political. They hate Trump. And I don't really know if I follow his argument about when when we had a supply chain issue because of Russia, Ukraine, and prices went up, and he's like, oh, but that's not inflation. The Fed is inflation. I'm not sure. Maybe I'm not smart enough to exactly understand what he's saying right there. But to me, if you have a supply chain bottleneck, that would create more demand for less supply. That would be inflationary. But he's blaming that on the Fed. I don't exactly follow the logic there. But the point is, the dude is completely, for lack of a better word, shitting on Jay Powell and the Fed. And you could tell why Trump has this guy to potentially be the next Fed chair based on that interview. So, look, I don't think Jay Powell's getting fired. Trump gave a lot of stability to the markets yesterday by saying it is highly unlikely that he will fire him yesterday after multiple reports claimed that he would get serious to begin the process of firing him. But whoever is going to be replacing Jay Powell, which, I mean, Kevin Warsh is a good shot based on how we just saw him articulate his thoughts and views, they will definitely be a bit more dovish in the context of monetary policy. So that's what we got from Kevin Warsh. Lucid, for those that are just joining, the reason it is running is because Uber has invested. Also, they're doing a 10-for-1 reverse split. So if I'm not wrong, this thing is going to trade at $30 eventually, like in the next week. But it's at $318 right now. Uber's investing $300 million to build robo-taxis inside of Lucid, or with Lucid. My gut reaction right here is I feel like this is desperate from Uber. Like, I don't know if putting $300 million into Lucid is the way to compete against Tesla and Waymo when it comes to robotaxis. Like, I just don't think that makes a lot of sense. But I think Uber is realizing they got to do something to be able to compete. And as a result, they are going down this route. And, that's why we're seeing some of this momentum right here on Lucid. Now, Lucid, I don't know, dude, if it holds this pump. 37% up. I mean, like, yeah, the Uber thing is bullish for Lucid, but is it actually going to result in meaningful revenue changes over the field? Like, I don't know. There's also over the course of 6 years, like, Lucid's just been one of those stocks that hasn't executed, and they haven't been able to really compete in the global marketplace of EVs and luxury vehicles. So I don't know, but that stock is running right here based on some of this momentum in the pre-markets. Real quick, let's look at some earnings. General Electric beat by 16% on EPS. EPS is up 38% year over year, 166 versus 143 expected. 10.15 billion of revenue versus 9.5. That's a beat by 6%. GE, let's look at their stock in the pre-markets. Is that one doing well? That one's up 1.3. Not too bad. Not too bad for General Electric. Again, even if you don't own these names, we want to make sure that companies are beating on their earnings, because that is going to be ultimately what determines the ability for us to have a strong Q2 earnings. Then we have Pepsi. 4% on EPS on a beat, 212 versus 203. And then 27.2 versus 22.3. That's a beat by 2% on revenue, beat by 4% on EPS. Revenue's up 1% year over year. EPS is down 7% year over year. Pepsi stock is up. Wow, 6%. Pepsi doesn't move that much. So that's actually a big move for Pepsi. Coca-Cola, Trump announced yesterday that Coke is officially going to get rid of high fructose corn syrup and start using real cane sugar. So that is something that I think could be relatively bullish for the American consumer in terms of their health. Now, granted, how quick is Coke going to be able to transition their supply chain? I don't know, but we're going to see how that plays out over the coming weeks or months, whenever they announce it. But Trump did announce that is going to be taking place, and that's why we got some momentum right there in the overall beverage industry. Pepsi right here, 143. Where's Celsius? Pepsi does own a little bit of Celsius, right? Yeah, Celsius up about 0.31% as well. Did they actually say get rid of or start using? That's a good point. I don't fully recall. I don't think Trump explicitly said they're going to get rid of high fructose corn syrup. Also, it's not reasonable for their complex supply chain to get rid of that overnight. So that will take some time if they do plan to phase that out. But that's RFK. I mean, that's the reason why he picked RFK to lead health and services. So that's probably what they're trying to get done. AMD right here, 161. Is Webull still running? Webull is at 1344. Webull's up 4%. Again, I sold Webull yesterday at 1254. Put it into Robinhood. I sold a call against Robinhood, so I'm break even on the Webull trade. If this goes above 1450, then maybe I should have held, even though I did have covered calls for 1450 anyway. That's the thing. If it breaks out to 20 by this week, I had covered calls at 1450, so I kind of would have had to sell at 1450. So we'll see. We'll see how Webull works. But if you're still in this, you're getting a move right here because they are reintroducing crypto in the next month. That is why Webull's moving up 4%. They are reintroducing crypto, and that's why it is up. Crypto firm Bitcoin Standard Treasury Company is aiming to list on the NASDAQ through a merger with Cantor Fitzgerald SPAC. All right. Another Bitcoin Treasury company. Another Bitcoin treasury company. We saw one this morning, Volcon. For those that are just joining, they sell motorbikes. What was their ticker again, guys? VCLN. They are up 300%. There's a $5 million company. The reason they are up is because they are officially introducing a $500 million Bitcoin treasury to their balance sheet. So there you go. The Ethereum deep dive is not happening tonight. It's happening next Wednesday. I had some scheduling issues with some of the guests, but I got David Hoffman. David Hoffman is, if you're in crypto, he is an Ethereum OG, and he's going to come on to the show. So I think it'll be a really good deep dive on Ethereum as like a long-term thesis. And we're going to be talking about why these Ethereum treasuries are getting as much as momentum as they're getting. So that'll be next Wednesday at 9:30 p.m. Eastern. SharpLink Gaming, SBET, that's up about 4% of the pre-markets. BMNR, the news on BMNR is they now have 1 billion of ETH. They have more than SBET. SBET has 280,000. Tom Lee's company has 300,000 Ethereum. So that one is 20,000 more than SBET. And then Bit Digital right here, 411, that's up about 4% in the pre-markets. Okay, Grab. Why is Grab getting a little bit of a move? So I don't know if the market's really reacting to this. Quite frankly, I think Grab's just getting a little bit of momentum because it had a really good close yesterday at 514. I mean, that's just if you've been looking at Grab's price action, for them to close above 510 was, I think it's bullish. We'll see how the stock reacts. Maybe it's not bullish. Maybe it just goes back down to normal. But I thought that was very nice to potentially indicate the beginning of a trend. The bullish news yesterday for Grab, which I don't even know if the market knows about this, but I saw this yesterday and I was just like this goes back to my thesis about regional consolidation. So take a look at this. Someone said I was taking a Grab ride in Malaysia and I asked about other e-hailing apps in the country. The driver said there are 3 more: Boost, Maxim, and InDrive. Guess what? Maxim and InDrive, both Russian companies, will cease operations in Malaysia on July 24th because they allow drivers to operate without valid public service vehicle licenses, e-hailing insurance, or proper vehicle inspections. And I double-checked this, and this is correct. The Malaysian government is getting rid of, or is forcing Maxim and InDrive, Russian ride-hailing companies, to leave the market because they didn't have their shit together. So starting on July 24th, Grab's market position in Malaysia is going to get even stronger because 2 of their competitors were frauds and they're leaving the market. So shout out to my Malaysians in the audience. We got Keith in the audience. We got Jerry in the audience. Shout out to everyone in Malaysia. I mean, this again, I've been saying regional consolidation, I think, is going to be a massive moat for Grab, simply because like people say their lack of margins are why they don't have a moat. I think those people don't have enough creativity to realize the fact that they're even gap profitable, not adjusted EBITDA, but gap profitable, is highly indicative of a moat because they're gap profitable in one of the most competitive regions on the planet. And if you give them enough time to keep executing as the region consolidates, those gap profits are going to only inflect because their margins are also going to inflect. So if we get a good Q2, I think the anecdotal evidence I'm seeing is very bullish for Grab. But again, this is one of the more long-term names. It's not going to be as volatile as an Open Door, but I do think it is risk adjusted and a bit more safer in these markets. Tesla right here, 323, Palantir 151, Nvidia 172, and Robinhood 103.5. Rocket Lab, massive move yesterday. Bank of America said 50. Bank of America said 50. Citigroup said 50. I don't have an issue with it. 50 is 50. I did not expect Rocket Lab to make this type of move this year, but it did. And quite frankly, if the momentum's there, who knows if 50 is the floor? Who knows if 50 is the ceiling? Maybe 50 becomes the floor. So we're going to find out as the market continues to see where the space industry goes. All right, folks, we got 30 seconds. 30 seconds until this market opens. We got a lot of different headlines. We got AMD, we got Robinhood, we got Open Door, we got the Ethereum treasuries, we got Palantir breaking, potentially 152, Tesla trying to get back to 330. We got lots and lots of different narratives in this market playing out in real time. And in the next 15 seconds, we are going to see how the global capital equity markets open up for Thursday, July 17th. Thank you, everybody, for being here. 9:30 a.m. The stock market is now open. All right, wake your ass up. Let's get into it. Robinhood, 103.33. 103.3 is how Robinhood opened. Palantir, 150, 150. We got to 152 in the pre-markets, 150, 150. We are breaking above 150 on Palantir. That is green. Tesla, 323. A little bit of a red candle, but that's still up. about 0.5%. NVIDIA, TSM, again, they crushed earnings. That's why NVIDIA got to 172 in the pre-markets. TSM, they opened up 3.5% green. They should. They had massive numbers, massive guidance. CEO was very bullish on the earnings call. TSM right here is up about 3.5%. SoFi, she might be going for 22. She might be going for 22 today. Grab right here opens up about 1%. That's at 519 on Grab. Google right here, 182. S&P 500, that's green, 624. That's up. AMD, 161, baby. Congratulations, advanced money duplicator on AMD. That's at 161. Let's get SoFi to 22 today. Let's make it happen. Let's make it happen. She's 20 cents away. She looks like she wants to get there. Let's make that happen. Where is Open Door on the open? Open Door down from the pre-markets. It was at 220. Now it's at 180. So you're up 20% from 160 last night, but you are still down from the height of the pre-markets. Lucid, again, they got a $300 million Uber investment. Lucid right here, 298. That's down from the 350 level it was at in the pre-markets, but Lucid is still up 30% on the day. And that's what we have on Lucid right here. AMD 160.2, NVIDIA 171.6, Grab 520. Not bad. Breaking above 520 would be very, very nice to see. And then closing above that would be awesome as well. So Grab right there at 520. Meta right here, 74. Salesforce 258. PayPal 72. Elf is down about 0.24%. Where is Nebius? That stock is up 3.64%. Is CoreWeave up as well? I think CoreWeave is up. CoreWeave is actually down. Wow, Nebius and CoreWeave. Usually they go together. Over the past 5 days, they've been kind of going the opposite. So CoreWeave's down. Nebius is up. Circle, we had some good crypto legislation that was not passed yesterday, but we got closer to the procedural vote to getting it passed. Circle right there was up to, about 15% yesterday. It's down 4% today, so giving back some of those gains, but Circle still doing very well. Nubank right here, almost at 14. That's not too bad. Where's Webull on the open? Webull is 1340. Webull 1340. Rock Lab, do we have 50? Oh my God. Holy crap. 49.91. Did we touch 50? It's about to. It's about to touch 50, folks. Here we go. Let's see. Let's see if we get there on 50. There we go. There's 50. There is 50. Dolores 4. Rocket Lab 50. That's a big one. I got to bring out the bell. Congratulations. $50 on Rocket Lab. Dude, Matt is running away with this ETF. Matt is freaking running away with this ETF. I mean, you know, quite frankly, I don't think Matt is that good of a friend, because I said, dude, what's going up with Rocket Lab? I'm up 108% in 2 months. And then Matt said, well, you could have been up 1,000%. And I asked him point blank in front of everybody on X last night, why didn't you tell me about this F4? And I just really wish that he cared enough to, you know, help his friends out when he had an investment thesis. But Rocket Lab right here at 50, that's up 5% on the day. I know some of you guys are loaded up on Rocket Lab. And I mean, for those that have 10,000 shares, stock's up $2 today. You're up $20,000. Congrats. I mean, it's massive, massive move on Rocket Lab. Robinhood right here, 103.2, trying to get back to 104. If we can get 105 today on Hoodie, that would be very bullish. Pouncer right here, 151. Tesla 322, fading off a little bit of that pump from the pre-markets. NVIDIA going a little red. Where's ASTS? Is that one moving with Rocket Lab? That one is up 1.5% as well. D-Wave breaking 18 or breaking 17 right here, got to 1782, did not break 18 yet, but 1728, that's up 2%. Dude, Rigetti was up 40% yesterday. Rigetti right here giving back some of that momentum, down 3% based on that new quantum computer innovation that they announced yesterday. So shout out to Rigetti. That one had some fun. Oklo right here up another 4%. All the nuclear names are getting some love. Nano Nuclear as well is up about 3% right now. Nebius, again, that one moving. That's up 3.9%. S&P 624, Tesla 323. Baba down a little bit on the day. Delta right here, 2%. Where is United? United had a great earnings. That's up 5%, folks. There you go. That's up 5%. United's up almost 110% over the past year. It's still down a little bit year to date, or kind of break even now that it's up 7% right here, up 6.5. But last year it had a monster year, and this year it's been lagging a little bit. But if you held it since 2024, you've done very, very well. The fact that the street's giving the nod to United on earnings means that they're pretty freaking bullish about the consumer. And if you're just joining and you missed the first 10 minutes of the show, the macro data, very important to take a look at. 0.6% versus 0.1% expected on retail sales. Massive beat, aka the consumer spending. And then jobless claims, 221 versus 235 expected. Labor market is strong. People have jobs, they have disposable incomes, and they're spending. I know anecdotally people may agree with that, may disagree with that, but in the data that we're seeing, it's showing that people have the money to spend. And as a result, if you have the money to spend on a United flight because you're going on vacation or you're traveling, United earnings is reflecting that, and the market is reciprocating by giving it a premium, up about 5.7% right here. SoFi 2172. Where is Open Door? Open Door 187. 187 on Open Door. Is grab above 520? Wow, grab 527. All right, not bad. Not bad. We gotta hold 520 and close above that. We got to hold 520 and close above that, but it's nice to see it get some of that momentum. Again, I think earnings are going to be strong, but with Grab, you're just not going to get the type of volatility like some of these other names. So if you can at least make these small moves every week and hold on to that, again, because I think this is not a trade, this is an actual investment for the long term, then I think that'll be bullish. So Grab just needs to break out. It's trying to break out. It's coiled up. There's interest in it. There's a massive community forming on Twitter of real due diligence, not just, oh, it's going to go to the moon, like actual people really putting up amazing pieces of due diligence on this company. So we got to get above some of these levels to hold it. The Grab right there at 529 as we open up the markets. Pounce right here, 151, Robinhood 103.80, and then Tesla 321. Is Rocket Lab going for 51? Rocket Lab, oh my goodness, dude. Rocket Lab 51. We hit 51, 51.12. Congratulations, 51 on Rocket Lab. 50 freaking one on Rocket Lab. I mean, does this thing want 55? Is that what we're doing? S&P 624. What do I think about Micron? I think they got hit because of ASML yesterday. I don't know exactly how they're correlated, but because ASML had crappy guidance and they're part of the overall supply chain via their lithography machines for the semiconductor stack, I think the market's thinking, okay, Micron might also have some issues. And there was that rumor that came out a couple of days ago that the overall supply for memory is higher than demand. And that's where Micron could be facing some issues in terms of just not having as much growth as the market thought. I really am not that deep on Micron. I don't know if that's justified given their numbers were insane. Like we saw their earnings live a couple of weeks ago. But I guess perception right here from the street is that this one's run a lot and maybe some of their demand is not going to be as strong as we think. So that's why that one is down. I don't own it, but I wouldn't be buying the dip right here just because I don't understand the company as well. But I don't think this is like massively overvalued by any sense of imagination given their growth. Circle right here, that's down about 4%. Bitcoin 117. Where is Ethereum? Are we holding Ethereum? 3.4. 3.4 on Ethereum. Yeah, they just reported 36% growth. I mean, it's not like it's a company that's not growing. The street's just looking forward and saying, hey, how much more demand are we going to have for memory and HBM? And I feel like we're going to have a pretty solid amount of demand because GPUs need that stuff. But if there's way too much supply, then maybe that's how the street interprets there being a little bit of a lag when it comes to the supply-demand imbalance. So that's what we got on Micron here. But I think long-term it'll be fine. Ethereum right here at 3,400. ASML, is that one recovering a little bit? That one only down about 1% on the day. It got to a low yesterday of 40? It's a 748. So you got a little bit of recovery, but still overall down 10% from that 800 level it was at a couple of days ago. Tesla right here, 321. Tesla just turned red. AMD 160. SoFi cannot get the $22 break yet. It's trying, but it can't get there. And then Google, that one's also going red. Wow. Google 181. Rock Lab, did we just see 52? No, we saw 51.45. We saw 51.40 freaking 5. Micron got hit because of a Goldman downgrade of a leader in their sector. Who did they downgrade? Was it Samsung or was it that Skylink company? I think I'm saying their name wrong, but it begins with an S. That could also be, I mean, if Goldman's downgrading the whole sector, I mean, just naturally, you're going to have people sell it off at that point. So that actually does make sense. Sky Hinks, right? Yeah, Sky Hinks. They downgraded Sky Hinks or SK Hinks. Okay, yeah, that actually explains it way better than ASML. XRP is running, folks, up 5%. Get ready for the Steve text messages that I'll probably be getting in like 10 minutes about XRP. So goodness gracious, 321 on XRP. Where is Open Door? Open Door 191, 187, 25%. Okay, so I just copied and pasted that Wall Street Bets post on Open Door. By the way, look how the guy starts it off. I know 99% of you idiots won't read this, but for the rest, classic Wall Street Bets, dude. Classic Wall Street Bets. And I went into Grok and I said, summarize the bull case. And this is what Grok summarized for the bull case on Opendoor. Financial stability, despite a 98% stock drop, Opendoor is not bankrupt. It has 1.1 billion in cash, 1.1 billion in capital, 693 million in cash. Operational improvements, Opendoor has downsized, cut marketing and waste, and followed a Carvana-like restructuring. It's now focused on efficiency. New business model, Opendoor shifted from buying homes above market value to purchasing at 10% below market value. Seasonal strategy, Opendoor learned to avoid buying homes in the summer and focus on winter and spring. Housing market recovery potential. A frozen housing market has hurt Opendoor, but expected rate cuts could unfreeze the market. So that's just rate cuts are bullish. 6, path to profitability. Q2 2025 is expected to be EBITDA positive, the first profit in 3 years. Short squeeze opportunity. Hedge funds shorted Opendoor to push it out of the Russell 2000, causing a price drop, 20% short float. And then scalability with 600 million in cash for home purchases and only 2 billion of an 8 billion credit line used. Opendoor can scale acquisitions by 3x. Do those 8 points in the bull case from this Wall Street Bets post that's going viral, do those 8 points convince anybody on Opendoor? That is my question. Let's do that in the chat. Do those 8 points that I just read, is that enough to convince you on Opendoor? Are you bullish Opendoor? Let's do that. I mean, I would have to go a bit deeper, but my gut reaction is no. You know what's so ironic? Again, for people that were part of the January market opens, I wanted to buy Opendoor in December. I was on the phone with Steve for 2 hours. I was like, Steve, rate cuts, Opendoor, they're down 90%. Like, this is going to be the move. And then Steve called Chris, and then we all got on a Zoom for about another 2 hours. And we looked at their gross margins. We're like, dude, this company can't make money. Like, even if you do get rate cuts, which, by the way, we haven't got any freaking rate cuts. So I'm very happy I didn't buy Opendoor because, like, the whole thesis that I had was rate cuts. We didn't get rate cuts. Even without rate cuts, their gross margins are 6%. They don't make money. In 2021, they couldn't make money. In 2021, the housing market was booming. And that's what kept me away. But now Wall Street Bets has found the stock, and I guess they see something else in it. This one right here, 173, that's up 15%. Pounce right here, 151. Robinhood, are we going for 105, folks? Are we going for 105? Are we going 104.3? I'll check resistance in a second. We might be going for it. SoFi 2170. Where's grab? Grab right here at 527. S&P 625. It looks like Hoodie wants it. It looks like Hoodie wants it. 64% of you say no. 64% of you say no on Opendoor. Robinhood 105. It looks like she wants it. 105 is 15,000 shares. 15,000 shares on Robinhood to get to 105. Wow, Joby. Just incredible, dude. Absolutely massive move. And I think this is legit. This is not just meme stockish. I mean, they put out some stuff that is very bullish for investments, manufacturing capacity, and then the overall scalability of their flights by proving that it works. And Joby's getting momentum, up 3.6%. Opendoor is a company that buys and sells houses, essentially. You can, like, buy your house online from Opendoor instead of going through, like, an actual broker and doing all that stuff. That's their business model. And it just didn't work for the past couple of years, which is why the stock has been hit. It is also a Chamath SPAC that went public back in 2021. Oracle, wow, all-time highs on Oracle. This is because of TSM, folks. This is because of TSM. Joby is an eVTOL company. Joby is an eVTOL company, electric vertical lift and takeoff for Joby. 245 on Oracle. My goodness, dude. This is TSM written all over it. NVIDIA right here trying to get back to 172. Pound here trying to break 152. I think we got there for a little bit and then we got rejected. Opendoor again right here, 179, 180, trying to hold that level. AMD just below 160. And then SoFi, I will check SoFi resistance as well for 22. That one has kind of been stuck at 21, but it's at least been above 20. I mean, 20 is looking like, I think maybe it's a week too early to tell, but after earnings, we'll see. I think 20 is becoming support. And if 20 is becoming support on SoFi, if you bought at 7 or 8, you probably don't care because you're up 3x. And now you can just kind of be patient without having too much anxiety about if this one will ever make a move. 22 has 120,000 shares. 120,000 shares. Space is up 20%. Okay, so I did see Space's Virgin Galactic Holdings. I did see some headlines yesterday, not headlines, but like Twitter people yesterday talking about Virgin Galactic being the next one to make its move. Now, why are they saying this? Not because there's anything fundamental about Virgin Galactic, but it's kind of like the resurgence of SPACs in 2021, specifically from Chamath. So you have SoFi, that's a legit company, and it's making its move. You have Opendoor making a move. What was the other bankrupt company that Chamath SPAC'd? Virgin Galactic Holdings, space travel. up 18% right here. So I mean, this is the definition of toppy 2021 feelings. I don't think this is indicative of the whole market. I think this is a subsector of the market that are gambling, they're bored, and they're chasing. And I think if they get wiped out to zero, it does not affect NVIDIA or the S&P. I think if it goes to the moon, then you got a lot of people hopefully that take some profits and that put that money into NVIDIA. So I kind of think there's a win-win situation here because I don't think this is indicative of the market. I think this is just rather people are bored and, you know, they're gambling, which is what happens in a bull market. I mean, to an extent that plays out. One can say that's a little bit too much money in the market. I also agree. I feel you. But it's just not a bear case on the actual earnings growth that we're seeing from a United or a Pepsi or an NVIDIA. And so I don't think it's the most bearish thing for the broader market. MP. Okay, so they did an offering yesterday. That's why these guys are down. Are they still down? Yeah, they're down 4%. Yeah, they did a $500 million offering after the close. I mean, it makes sense, dude. The stock's up like 80% in a month. You probably should dilute and raise some more capital. So for them, giving back 4%, 5%, even 10 to 15% after an 80% move, I don't think is the craziest thing in the world. I'm a realtor that Opendoor has attempted to work with. I would not buy the stock based on their model, but it may go up based on speculation. Yeah, I think speculation is driving it. I'm not convinced by that 8-point summary that I just read to you guys, but in general, it's been a pretty bad business model. The question is, can they really make any change to appease some of their retail investors that are believing this company potentially can turn things around? Where is Rocket Lab? Are we seeing 52? 51.97, folks. Let me check resistance at 52. It is pretty damn close right here. Dude, Rocket freaking Lab is this week alone is up 32%. 52 has 15,000 shares. 15,000 shares at 52. My goodness, dude. My freaking goodness. Microsoft all-time highs. Yup, that's green, baby. Microsoft, wow, 509. Microsoft, one of the best Max 7s this year outside of NVIDIA. And Meta, one of the best Max 7s this year. And Microsoft was flat in 2024, but 2024 was a great market for the Max 7. So the fact that that was flat tells you right here, 117. Also, if Azure has another 35% year-over-year growth in cloud revenues, that is also going to be pretty damn bullish. That is also going to be pretty damn bullish. SoFi right here, 2170. Where is Bitcoin? Bitcoin's at 117. Okay, these charts on Robinhood are being a little slow, so we will switch to the stock I sold yesterday, which is Webull. Where is Webull, by the way? VCLM, that company that raised $500 million for a Bitcoin treasury, they got halted. They got to 58. They're now at 39. They got halted. We're going to see how this one opens up, but they got halted. Webull right here. This stock is, wow. Dude, can barely hold the momentum. Can barely hold the momentum. 1307. Spiked to 1370 in the pre-markets off that crypto news. Just was not able to hold it. TSM's up 2%. United Airlines up 6%. Rocket Lab up 7.7% right there. Pretty incredible move right here on Rocket Lab. And then Robinhood 104.5, trying to get to 105. I'm a homeowner that tried to sell on Opendoor. The offer was so low that I can't imagine anyone selling to them. I would not buy the stock. All right, there you go. You got a realtor in the chat and a homeowner in the chat that have experience with Opendoor, and it wasn't the best experience. I mean, again, when I did my fundamental DD about 8 months ago, the margins just weren't there. It made no sense. And the rate cuts still aren't here, folks. I mean, hopefully they come in September, but until they come, the market's really pricing in that they're going to come. And if they don't, that's the issue. And I think they will come. But the market has also taken Opendoor up a lot based on that expectation. So when it does come, is it just like, all right, it's here and that's what we thought? Or do we get even more of a boost when it comes? Wow, SBET's tanking. SBET's tanking. Folks, welcome to volatility in the Ethereum treasuries. Yesterday was a great day. Today, not a great day. It is what it is. This is the nature of these Ethereum treasuries. Where is freaking BMNR? BMNR, that's also down 4%. Is that because Ethereum's tanking? Ethereum's not really tanking. Ethereum's down from 348 to 339. That is down $90 is not tanking. So that is weird if the treasuries are following a $50 move. That is a bit weird. Where's Grab? Where's Grab? Grab at 528. All right, Grab's still holding 3%, 529. I will I'll check 530 resistance on Grab, but Grab volume was already 10 million, which is about 25% of its average volume in the first 20 minutes, which is not too bad. 529 right there and Grab. Webull right here, 1312. Volcon, all right, that got unhalted, still up 330%. Let's see how this one goes. This one raised 500 million for a Bitcoin treasury. It's a $5 million market cap turned into a $21 million market cap. They somehow raised 500 million to buy Bitcoin. Stocks up 326%. Stocks up 326%. Is D-Lo moving? D-Local, that one is up a little bit. United's up 6%. Rocket Lab still trying to get 52. Ethereum, basically 3,400. D-Wave, 1722. Robin is trying to get 105. NVIDIA, 172, baby. Back for 172. Tesla, 322. HIMS is down 1%. Rigetti's down 1. Kinder Morgan's down 2 after they had earnings yesterday. BT, another Ethereum treasury, that's down. Wow, ASTS, that's up 4%. ASTS and Rocket Lab moving pretty nicely today. Rocket Lab right here, 51.48. NVIDIA, 172. Grab trying to break 529. And then United, 93.67 on the day. Unities, that one broke out a couple of days ago. Is that one still moving? Wow, 11%. That one for the week on Unity. Someone gave a super chat like a week ago, I think on Tuesday last week, and said, I think Unity is setting up to be a really good breakout. It's up 32% in the past 5 days. If that person is here in the chat, if you're loaded up on some Unity, congrats right here, up 32%. I think I read something about them last week around a different change they're making, particularly around the video game partnerships that they're developing. Remember, they had a big Apple partnership with the Vision Pro that flopped, and then the CEO did some stupid stuff back in 2023, and that's when this stock basically fell to $15. Their stock-based compensation was ridiculously overpriced compared to their net income. They didn't have any net income. I still don't think they have any net income, but it might be getting closer to that based on some of the partnerships they announced, and that could be causing the breakout. Also, quite frankly, could just be technicals on Unity having some level, which is what the person who sent the super chat was saying, is that the technicals look really nice. Sharp Link right here, down 5%, trying to get a little bit of a green candle based on Ethereum moving up back above 3,400. And then Robinhood up. We are close, folks. We are close. 15 cents away. 15 cents away. Let's see. Let's see if this can happen. It's pushing it. It is pushing it. Let me see if I can get some other fundamentals on Unity right here and see if there's some other news. Okay, Morgan Stanley today. We believe Unity ads is delivering no less than a 15 to 20% uplift. Okay, there you go. Morgan Stanley's bullish. Morgan Stanley's bullish. Yeah, that's a more fundamental reason. Wow, the title of their note this morning is 3 reasons this could be just beginning for Unity. 3 reasons this could be just beginning for Unity. And one of their main arguments is about Unity ads. I didn't even know Unity did advertising, dude. I did not even know they did advertising. All right, there you go. So Morgan Stanley, pretty bullish on the prospects of Unity. Oscar's tanking. Where's Oscar? Bitcoin at 118. Oscar's just had a pretty crappy 2 weeks. Oscar, wow, 1445. Okay, so where's UNH? If Oscar's down 5%. Wow, UNH down 2%. Oh my, 287. So that one below 290. I mean, not the most bullish. Not the most bullish in terms of price action. Overall undervaluation, yes, if you have a long-term thesis, but definitely short-term price action. That one's getting hit. And then where's Lemonade if Unity's down, or if United Healthcare is down? Lemonade's actually up 2%. So that insurance company is up 2%, even if the other ones are down. United right here, 5%. Rocket Lab, 51.42. Grab, 527. Where is Palantir? I think we're at 151. Palantir, 151.84, trying to get back to 152. Hoodie, very close to 105. We are very freaking close. Are we there? 104.94. Webull says she touched it, but it was probably for like a millisecond. Let's see if it can actually break above it. NVIDIA's all-time highs, are we? NVIDIA all-time high? Where is NVIDIA? NVIDIA, it was at 172.50, 172.23. Is that all-time high? Yeah, that's all-time high. 172.30. That's all-time. Wow. NVIDIA, 4.23 trillion, folks. 4.23 trillion on NVIDIA. All right, Robin, we got to see 105. Let's see. That would be an all-time high as well. Webull saying it touched it. It was very, very quick. Barely was there. And if we touch, that means we should get back there pretty easily. It might take a couple minutes, but let's see if we can actually hold it. Big Bear AI, is that moving? BBAI, that one is up 9%. And the volatility is there. Wow, NVIDIA really breaking. 173, got to 173.40. 173.40. Oscar still down 5, UNH down 2, Grab up 2, TSM up 3, United up 4, Rocket Lab up 7, Ethereum still holding 3,400. And then Palantir 20 cents away from 152. From 152. SBET just back tested. It's fib retraced. It's building to go up even more. Yeah, I mean, that the technical explanation you're giving makes way more sense than anything fundamental because Ethereum barely moved down. So outside of just a technical retracement, doesn't make sense for any of the miners, not the miners, the treasuries to take that big of a hit. 36.59, that one's recovering. So bottomed at 33 right here. Now trying to get up. All right, Robinhood, here we go. 5 cents away. I think we touched 105 again, but it was for a literal millisecond, bro. It needs to break above. Let's break above. Let's break above. The demand is there, though, dude. You can see the demand. People want these shares. They are ready to take it higher. They are ready to take this thing freaking higher. Palantir 152. Are we there? Palantir, we did hit 152. There you go. There she goes. Palantir 152. We hit 152 in the pre-markets, but now we're 152 actually as the market opens up. 152, 151.89 right here on Palantir, 104.90 on Mr. Hoodie. AST past 56. Space as a thematic has really got momentum, and these Bank of America City upgrades on Rock Lab I think is what's been helping the broader space industry get as much momentum as they've been getting. But ASTS right here, up 7%. There she goes. There's Hoodie. There's the breakout. 105, baby. 105 for Mr. Robinhood. Congratulations, everybody. 105 for Hoodie. Dude, I bought some shares at 103 yesterday. I'm not going to lie, bro. I'm not going to lie. Every time I have bought at new all-time highs, the comments on Twitter are like, why is this guy buying at all-time highs? Those comments were there at 37, bro. After we broke from 32 and it got to 37, I was like, we're going to 40. I just bought 100 shares at 37. And every time, I mean, like, I'm not doing it for fun. Like sometimes it's for fun, but I'm doing it because I'm looking at what's in front of me. At 37, I was like, they're going to crush Q1 of 2025. At freaking 72, I was like, we have S&P inclusion coming up, and they just introduced the expansion of prediction markets. Like, I see the revenue drivers. At 100, I'm like, all right, we have S&P inclusion. And yesterday when we broke out at 103, I'm like, we still have S&P inclusion because they picked freaking Datadog last week to get in. Like, these funds are going to have to buy these shares at 100, at 105, at 110, at whatever price it is. And I don't know. It just kind of seems obvious to me. And I think they will put up the growth to justify. That's the thing. If they can't put up the growth, this is going to get destroyed. But based on all the monthly metrics we've seen, they're going to put up the growth. Like it's like, and if they're going to put up the growth, like if they're an actual company that can grow, the street's going to reward it. Robinhood right here at 105, United still up 4%, TSM up 3%, and then Rock Lab right here trying to break 52, 51.44. The other reason I've been, super excited to just keep buying Hood is because, again, I told you guys this like 1,000 times at this point. I made this mistake on Palantir. Palantir was going up. I got way too concerned about valuation, not concerned enough with the fact that, dude, this is in the words of Tom Lee Da Vinci, this is a one-of-one company. They can't be replicated. Their growth is there, even if the valuation's aggressive, and no one's competing with them in the respect of how they're attacking the industry. Same thing with Robinhood. They really don't have the type of competition that people think they have. They have the legacy incumbents that they are coming after. And then everyone else who's floating around in the ecosystem, they're trying to get the crumbs that Robinhood's leaving for them. So Robinhood right there, 105. That one is why it's exciting. I mean, speaking of Robinhood 105, let's play this 1-minute clip I posted at like 2 a.m. last night because, yes, I was up at 2 a.m. Partly because my air conditioner wasn't working in my room and I couldn't sleep because it was too hot. But also because I found Vlad saying this and I had to post it. This is a CEO who wants the freaking pressure. And this clip, I think, highlights why this is a one-of-one company.
Do you like being public? I've never met a public CEO who actually likes it.
I like being public, actually. Yeah,
You do?
I do.
Why?
I think it's great because I think we've flipped, in my head at least, from thinking about all the public company stuff like earnings and all of that, from being a nuisance to being just a fun opportunity to connect with our community of shareholders and retail investors. So if you look at our recent earnings calls, I don't know if you've seen them, we have quite a lot of fun. I've got them. The vision is it's like a post-game press conference. So I've got the Robinhood logos behind me, and the big mics. This. Yeah, and it's basically like post-game press conferences are a lot of fun. They're fun if the team wins or if the team loses, because if the team wins, you've got them wearing the nice like designer clothes. They're feeling confident. They're talking good. If you're rooting for the team, you want to see them win. If they lose, sometimes you get dirt about like what players not pulling their weight, or they come in with like the towel over the shoulder and they're like, getting railed by the press. Like, you played bad. Why did you not get any assists? Why did you only score 7 points? So, getting a star player getting railed on by the media after a terrible game is always entertaining. So, if that can be this is like the business equivalent of that.
That is the mentality of a mother freaking winner, bro. A winner embraces the pressure. They embrace the pressure. Pouncer, by the way, all-time high is 152.23. I'll check resistance on 153 to see if we're heading above that 152.50. But same thing with Carp. He embraces the pressure. And he quite frankly doesn't give a shit what anyone says, because he knows he's built for this. He knows he's built for this. He knows he's built for this. Shout out to Nick right here. I bought Pouncer at 8, 9, 12, 22, 45, 90, and 130. I should have been doing the same, and I didn't. And I'm not making that mistake on Robinhood. Robinhood right here, 105.20. She's breaking out. Pouncer 152.20. Is SoFi trying to get 22? SoFi is 4 cents away from 22. 4 cents away. 150,000 shares are waiting for it at 22. If we can get 22 along with what Rocklab, Pouncer, and Hood have done today, it would be exceptional to see that today. 21.93. Let's see if it can break through, getting rejected at 21.97. Pouncer getting hit just below 152. You got that red candle right there, but it's holding 150. Unity's up 11%. Grab 525. BMNR still down 2%. Webull up 3%. Big Bear up 11%. Big Bear trying to get back to $8. ASTS up 7% now. SoFi again, 21.90. And then NVIDIA, all-time highs, 173. 173.30 on NVIDIA. My goodness, dude. My freaking goodness. Mentality of winners, folks. Mentality of winners. I mean, a winner says, hey, if I have a crappy quarter, I want people to ask me about why the quarter was crappy. I want the pain of dealing with the media scrutiny, because if you get all the love, you're going to get all the hate. And you got to be able to take both at the same time, so that over the long term, if you really execute as a generational company, you're going to get way more love than hate. And because you went through all the hate, you probably deserve all the love. And I think that's how Vlad thinks about it. That's how Carp thinks about it. The reason those two companies do video earnings calls and don't hide behind a screen, because they don't want to deal with, the scrutiny of actually embracing the investor public off their results, good or bad, is because they're ready for the pressure. They want the smoke. They want the smoke. SoFi still trying to get 22, did not hit it yet. Unity 38, Ethereum 3,400, D-Wave 1737, and then Rocklab 5130. Grab right here, 524. Volcon is still halted. It was up 330%. Now it's up 285. So you did have a red candle to the downside. Oscar getting demolished right here, down 5%. UNH as well. My goodness, they are getting hit. The insurance names down about 4% of the day. UNH right here, down 2.5. Where is Open Door? Where is Open Door? That one kind of losing momentum. It's up 19%, but it's not really breaking above $2, which is where it was in the pre-markets. Volume is already... Is this real? Volume is 221 million shares in 30 minutes. I mean, technically, that's, it's a dollar stock, so I get it. But like, goodness gracious, bro. Coinbase breaking out of 400. Breaking out of 400. Shopify as well. Wow. Shopify, is that up 5%? Shopify is up 2%. I think it was up 3% yesterday as well. So Shopify having a great week. Shopify breaking out. Coinbase announced some like a base event, Coinbase base 1 or something. I didn't get to look too deep into it. They had some event in Los Angeles yesterday, and they introduced a lot of new stuff. We'll try to get some updates, but that's probably why the street's excited right here about Coinbase. Robinhood still holding 105, NVIDIA holding 173, and then Palantir. Let me check resistance at 153 on Palantir. Pound to resistance at 153 is 31,000 shares. 31,000 shares. SoFi not getting 22 yet. Not getting 22. They announced a new social finance app. Okay, we'll try to go a little bit deeper into what Coinbase had. Street obviously likes it, given some of these announcements right here. And that's why it's getting momentum. Is Meta under 600? Meta looks like it might fall there. It got to 699.4. 699.4. Lucid is still up on this Uber investment. For those that are wondering, why is Lucid up 33%? Uber is putting 300 million into them for robo-taxis, which just honestly, I think it makes no sense, but the street loves it. That's up. NVIDIA just below 173. Wow, hoodie. Are we trying to go for 106? Are we trying to freaking go for 106, dude? 106 resistance here on hoodie. Dude, there's only 9,000 shares at 106. There's only 9,000 shares. Oracle all-time highs, not stopping. 249. Dude, that's another reason yesterday I was like, I'm done with Webull, dude. I'm getting, because like once I could have done this a while ago, but it occurred to me, wait a second, if I can do a long dated covered call on Hood and recoup the losses on Webull, the only risk is that Hood tanks. But if Hood tanks, I don't care because I want to hold Hood. I'll buy more. So that's why it was pretty obvious that yesterday when I just sat down and thought about it, I was like, why don't I just sell Webull and then sell a covered call against Hood? If those Hood shares get called away, it is what it is. I have enough Hood. And I'll just recoup the premium that way. Versus holding Webull and just hoping that it goes up. It's like that wasn't really a strategy. So I think it wasn't a horrible move, especially because I'm way more bullish on Hoodie. Hoodie 105.3 right there. SoFi, she's trying 8 cents away. ASTS 56, Big Bear up 12%, NVIDIA 172, and then Palantir 152.50, trying to get 153. Done with Webull, but using Webull. Yeah, that's the one thing about Legend, bro. Legend has got, like, even after hours, Legend doesn't show you clearly the price after hours versus during the market. It's like some of these basic things they got to fix, but they're having an event in Vegas. I will be there September 9th and September 10th. So hopefully they introduce some new updates to Legend in Vegas. And we see some more of that stuff. We will get a bell ring when SoFi crosses 22. We will get a bell ring, especially because SoFi's been stuck in these low 20s for about a week and a half here. She just needs to give us 10 cents, and we will get 22. We will get 22. Okay, I'm not buying Meta below 700. Obviously, I would like to buy it below 700 in general, but I'm not buying it at 699. Like, I want to see, can this thing actually get a dip, or is this just going to be chilling at these levels? The real issue for me on Meta is that they need to split their stock, because I don't really like buying shares I can't sell covered calls. Like, I don't want to buy 10 shares of Meta, but I would love to buy 100 shares of Meta. And if they split their stock 10 to 1, I could spend 7,000 to buy 100 shares versus 70,000 to buy 100 shares, and I can sell some calls against the thing. So I just am really hoping Meta and Netflix can split their damn stock. Costco as well. That would be nice. Just make it a bit more accessible to buy. But I don't know, dude. I don't know if Zucks wants to do a split. I think maybe Zucks wants to see it go to 1,000. And so maybe we don't get that split. Robinhood, oh boy. Are we trying to go for 106? There's only 9,000 shares, folks. There's only 9,000 shares. Yes, OpenAI is having an event at 1 p.m. OpenAI is doing a live stream at 1 p.m. I don't know what they're announcing, but they're announcing something. And whatever they announce, we're gonna see if it's bullish or not. Robinhood 105.80. She's trying. She is trying. Mike says, amid any concerns about percentage of your portfolio in Hood, mine is getting pretty damn large. My gains are pretty heavy on that stock and solidly average across the rest. Your thoughts? I think there's two things when you think about a stock getting to a large percentage of your portfolio, or are we at SoFi 22? Okay, I will answer that question after we do SoFi 22. Do we hit it? We hit it, folks. We hit it. 2202. We hit it. There she goes. There she goes. We broke through 120,000 shares on SoFi at 22. So it should get back above there. There she is, SoFi 22 Dolores. Congrats, everybody. She's doing her thing. She's doing her thing. 22. 22. She's feeling like Taylor Swift. 22 for SoFi. 21.95. She'll be back above 22. I mean, if she broke through that level of resistance, you got some immediate people that are going to be selling at those levels, but she will be back above 22, hopefully pretty soon. And if you can close above 22, that would be very exciting. Okay, so in terms of answering that question, when a stock gets to a significant percentage of the portfolio, the kind of three ways I like thinking about it is, number one, do I want to own this stock for a very long time? That's the first question. Because let's say you randomly buy Opendoor at 70 cents and Opendoor now doubles on you, and it's like, I don't know, you put 100 grand into it for fun or whatever, if you have like a very big portfolio, and then it doubles and then it becomes a big percentage. Like, you have to ask yourself, do I really want to hold this? So that's the first question. So for Hood, if you want to hold it, I think that's the number one question you have to ask. Number two, how much of it do you want to hold is the next question. I will continue answering that question after I ring the bell. For what, I can't get through these answers, bro. 106 on Hoodie. It's a good reason to stop yapping. It's a good reason to stop yapping. All right, let me just quickly. The second thing is, how much of it do you want to hold, right? So if you own 8,000 shares, do you really want to hold 8,000 shares forever, or are you happy with 5,000 shares? And that's a personal question you have to ask yourself. How much exposure do you really want towards the asset class? And then number three, which is what I've been talking about for the past couple months now, is instead of having to sell the stock, you can sell some covered calls. Force the market to take Robinhood to 110 for you to get your exit. You don't have to sell at 106 because you think it's becoming too strong. Say, hey, Robinhood, or hey, Mr. Market, I'm going to sell a 110 call 2 weeks out. I need to force you to go up another $4. I'm going to take the $3 of premium or whatever the market's giving you. So that's $7 that you're getting from these levels. And then I will be happy if these shares get called away. Now, if it gets to 120, don't cry, because you were okay with getting less exposure, right? But if it stays below 110, you picked up the premium, and then you get to rinse and repeat. This is why I think learning about covered calls is very important for any investor that is having a massive position in a concentrated name, because you can hedge that position and use that position for income generation. If you have thousands and thousands of shares in one stock. So there you go. My goodness, Robinhood 106.05, baby. 106.05. Palantir trying to get to 153. Nvidia 173. Big Bear 13% up. If you're in Big Bear, congrats. Nice little day, up almost 14%. 809 on Big Bear. Oracle 250. That's an all-time high. SoFi trying to get back to 22. Meta 699. Again, the reason Meta might be down as well is because the street might be concerned that Zucks is spending too much money on researchers. I don't think that's like a big concern, but that could be the reason why that one's down. Coinbase right here, 411. That's breaking out. Bitcoin's not even moving like crazy. So Robinhood making its move along with some of these other crypto derivative plays is really nice to see. Palantir 152, and then Robinhood kind of breaking above 106. Breaking above 106. There you go. Absolutely incredible. VRT, so data centers, we know that spend's not going anywhere. That's up 5.5%. That's also getting some momentum. TSM earnings shows you that we're going to need more demand for data centers and energy. That's probably why the nuclear names are getting some love as well today. So TSM kind of set the standard for a lot of these names that are running. Hood's having performance issues today. Okay, so the reason I switched to Webull from Legend is because the charts were taking too long to load. Honestly, maybe they're getting too much traffic today. Maybe it's one of those days. I mean, this, by the way, the past couple of days we have, so bullish for Q3 because the volatility is high. I mean, look, I'm not trading Opendoor, but there's probably a lot of people buying it on Robinhood, and that's juicy trading volumes for Hood. So when you have some of these names moving the way they are, Robinhood benefits from all that volatility, and that could be great for their overall business right here. Palantir 152.65, and then Robinhood just below 106, 105.90. Where is Rocket Lab? We didn't hit 52 yet, right? Rocket Lab 51.80. She's trying for 52. She is trying for 52. Okay, Sham did do an interview. I'm going to try to find it. Let's see if it's on Twitter yet. I would really like to see Sham this morning on Fox. He is at the Industrialize conference in Detroit. I almost went there, but I got invited, but I want to stay home with the grandparents. So I would have been in Detroit if not for the grandparents being home. They're leaving in about 10 days, so I wanted to spend some more time with them. But Palantir being at those conferences is a big deal because reindustrialize is one of those things where, like, Warp Speed, I think, is one of their next big verticals to grow. Like, that could really get them that 55, 60% growth that we're looking for. But they've got to be able to make deals with a lot of American manufacturers, and they've done a great job already. I mean, they have like 30 customers in Warp Speed, and it's only been like 8 months since they launched it. But as that scales, that's just another vertical for the overall company to grow. VRT right here up 5%, Bitcoin 118, SoFi 2190, and then Hoodie, dude. Are we going for 107? Are we going for 107? Are we doing it? I'm going to check resistance, folks. I'm going to check resistance at 107. 107, 4,000 shares. There is a shot. There is a shot. Where's Grab? Are we still holding 520? Grab 523. Close above 520 would be very nice. Again, the major news on Grab, which I don't even know if the street knows about it, but because I follow it heavily, I know about it. 2 ride-hailing competitors in Malaysia were shut down yesterday, and they will officially not be allowed to operate as of July 24th, which means Grab is going to take all of that business from them just because the region's consolidating, because they were using improper insurance applications, and they didn't have the proper e-hailing licenses in the country of Malaysia. And as a result, the Malaysian government said, you got to get the hell out. So a bit more consolidation for Grab to take market share. And as a result, that could be one of the reasons why their earnings continues to get momentum. Palantir, are we almost at 153? Palantir. Oh boy, we are 5 cents away, folks. 5 cents away. Let's see. I mean, usually when we get this close, she tends to do her break. Palantir. Let me check resistance. I think I checked it already. It was what, like 30? Yeah, 30,000 shares. 30,000 shares. 30,000 shares. Writing some puts on Palantir. Wish me luck. Dude, I mean, obviously momentum is leading this name and people are excited about it. I mean, again, you're not going to see me justify the numbers and the market cap from a pure numerical perspective. It's trading at 115 times sales. I get it. It's expensive. It is not the easiest name to be able to say like, hey, this is a great risk reward, but I'm not going to get into all the other qualitative elements of the thesis, which is why people care about it. And I think that's why people are piling in. I also think, let me just say this right here, if Palantir takes a dip and it goes back to 135 or 140, I really hope this community is like emotionally aware enough to recognize that it's already at a $360 billion market cap. If it falls 25 to 30 billion, even 40 billion from here, that is okay. And this stock eventually will keep growing into its multiple. But I think if you're a long-term investor in Palantir, you've been here for a while, you probably don't care because you know how special this stock is. Wow, 153. There she goes. 153. She breaks through. 153. Resistance is gone. Palantir. She's doing her thing. She's the unicorn that no one believed in except a few of us. And for those that believed, she is rewarding you very heavily. 153, ladies and gentlemen, on Palantir. Speaking of Palantir, I told you guys on the market close yesterday, I was trying to find one of those pictures I posted in December 2022 when Palantir really was in the gutter. And shout out to Ori. He found it for me if he's watching right here. He's also a very, very big Palantir bull. And he messaged it to me. And so I found it. These were the days. December 6, 2022. These were the days. 50 shares, $6.97. Again, originally people are gonna be like, hey, Amit, you should have bought more. It's like, dude, first of all, I didn't have as much money as I do now. It's just like I was just out of college. Whatever money I had, I was throwing it at this thing called Palantir. I was all in. And then my comment here is, if Elon makes a time machine, I know the first thing I'm going to tell Amit from 2022 about, which is, I don't care if you have to sell your left testicle. Buy more of this freaking Palantir stock. Okay, that's what I would tell Amit from 2022. So if Elon works on that, that'll be the first thing I do. 153. 153 on Palantir. Chris says those days sucks. I bought at 597 and was so deep all in and everyone was hating on it. Yeah. I mean, the Seeking Alpha article of Palantir to 5 became real. Like, I think when Palantir was $8 for like about 6 months going into the end of 2022, someone came out in December, ironically, when Palantir went below 6 and said Palantir will go to $5. And all of us in the community were like, Stupid Seeking Alpha article. This guy knows nothing. And then we didn't literally go to $5, but we went to $5.97 or something. And it was just like, oh my goodness, dude. Like the Seeking Alpha article guy was right. But you know, it's a one-of-one company, and it came back. Hoodie 106.3, Nvidia 172.80. You got Lemonade at 40, Rocket Lab at 51.51, and then you got Grab right here at 523. Trying to hold these levels. Palantir right here at 153 as well. Where's Misty in MicroStrategy today? Misty is at, wow, 22.87. Okay, so that one trying to get to 23, and then MicroStrategy 4.53. That one's slightly down on the day. Slightly down on the day. What is the deal with Micron? Again, dude, I think this is a little exaggerated, but Goldman downgraded the leader of their sector in memory storage, and it seems to be that's the reason. But it also tanked on the ASML stuff like originally. It kind of feels like the street's just getting a little bearish on some of the parts of the tech stack or the supply chain stack when it comes to semiconductors. Micron's still up a lot this year, so it's not like it's underperformed, but yeah, that Goldman downgrade was not the best. All right, are we getting some red candles? It's almost 10:30. Are we getting the 10:30 slam? S&P, you got some red candles. It's at 625, still green on the day, but you do have some red candles. Big Bear AI doing great today. For those that are in that one, that is green. Trump tweeted. Okay. Let's see what he said. Trump said, dude, he tweeted a lot of stuff, bro. He's tweeting all these articles. Okay, I got the actual tweet. Too late, great numbers just out, lower that rate. DJT. Okay, he's telling Powell. He doesn't even say Powell anymore. He just says too late. For those that were on early in the show, we watched Kevin Warsh, who is the potential new leader of the Fed, the new Fed chair. And boy, did he go to town on freaking J-Powell. I mean, talk about being disrespectful. I mean, he just completely said they're full of shit without saying they're full of shit. So we know that whoever Trump is going to pick to be the new Fed chair is going to have a completely different paradigm and not really use tariffs as their excuse to not do rate cuts. SoFi right here, 21.85. But that's something that we're going to see potentially happen over the coming months. Coinbase right here, 411. Open Door 175. That's up 17%. ASTS up 5%. Nvidia 172. Robinhood still holding 106, just below that at 105.90. Oscar down 5%, and then UNH down 2%. Unity up 13%. Palantir just below 153 at 152.27. All right, folks, let's bring someone onto the show that can help me better understand what's going on with Micron, ASML, and TSM earnings. Ladies and gentlemen, Mr. Jose.
What's going on, man? And hello to everybody watching.
I think we got to start off, Jose, with Micron because everyone is confused. I mean, do you have a real take on why this one is getting hit as bad as it's getting hit?
I mean, I was here a little bit early, so I heard you were correct. I think the market right now is you're having a lot of negative sentiments from analysts. We had, I think, a downgrade either Monday or Tuesday on the actual stock because there was some form of HBM demand slowdown or something like that. And then we also heard today, like you mentioned, someone kind of downgraded the leader, SK Hynix, in this space. So it's kind of all trickling down. I think it was here where I talked about it on Monday, where I believe the HBM market is so vast. So just using that term is not the right way to go about it. We just saw TSMC report earnings. They mentioned AI accelerators, AI demand is insane, and all those AI chips are going to need some form of HBM solution integrated into the platform. So I don't know. I think the market is, like you mentioned, I think we saw a lot of excitement since the April lows, and now we're trying to find a reason of why we got to kick these semis out. There might be some names, but Micron, I don't think the reasons for these reports, I don't think are more of an overreaction, in my opinion, for Micron.
So do you think there's a structural problem in the semiconductor space with the perception of overcapacity of memory storage, or you think that might be a idiosyncratic issue, but that is not a bear case for Micron?
I mean, typically in the memory space, that's the biggest issue. It's typically a very cyclical. It's very oversupply. The imbalance within inventory with supply and demand becomes a big thing. But that was HBM. There's some technical aspects behind it that you have to use a lot more inventory to even make the same type of memory in theory compared to like your consumer memory, and just that technical manufacturing process, I think, helps alleviate a lot of those supply demands. But I think, unfortunately, sometimes we get put in the same basket and we kind of say, hey, look, it happened before, it has to happen again. I think HBM, as long as Micron, as long as SK Hynix continue to innovate at the levels that they're innovating, they're somewhat escaping the commodity. But if we ever do see a hiccup of, look, Micron maybe didn't do so well with HBM4, so they have to do something else really quickly, that's when you'll see real pain, because that's when they come back into the commodity space. So as long as they keep innovating, which they're doing, we're seeing a lot of great reports from Micron. As long as they keep innovating in that space and are one of the leaders, they're not obviously SK Hynix is the leader, but if they're one of those, I think investors will still have a nice run through, especially since the consumer tech hasn't still picked up. I mean, I don't see many people buying new phones, new laptops, new TVs lately. I don't.
Right.
Eventually, when that happens, all those products need even more memory. So you're going to see even more imbalance this time on the supply side opposed to the demand side.
Okay, so let's talk about TSM. Amazon, by the way, guys, 222. They, in my opinion, they crushed earnings. What do you think?
Yeah, definitely crushed earnings. I mean, if you're an AI investor in general, or if you were bullish in kind of the overall AI sector, this was a great earnings. I mean, the first thing that was super impressive is they increased their full year guidance. Before they were expecting about 20% year-over-year growth for the full year. Now they're expecting 30% year-over-year growth because of the strong quarter that they had this quarter and the past quarter as well. So increasing full year guidance by a nice few extra percentage points is bullish for a massive giant like this. The other bullish market is they continue to see a massive demand in forms of AI chips, and there's still an imbalance in there, especially with the smaller chips, your 2 nanometers, your 3 nanometers, and your 5 nanometers, which most of the AI accelerators. So I think for the AI perspective, that story is still good. As a TSMC shareholder, some things that you might want to listen up to is they did talk a little bit more about tariffs are creating a little bit more uncertainty, even though they still expect a lot of growth and they up their guidance. They still believe tariffs can create some uncertainties for that market. And for that reason, they're actually giving us a conservative number for the upcoming quarters. So theoretically, if they're being very conservative, read between the lines, that means these numbers could actually pump even a lot bigger in forms of full year revenue growth. So the other thing is they did talk about kind of margin impact due to them building more plants overseas, here in the United States, for example. So obviously it's a little bit more expensive, but they still believe their gross margins will still be around 53 or higher, which has been their overall goal for multiple years from now. So nothing too scary for margins. They're still the tech leader. They're still seeing huge AI movements. I think even though they kind of gave us the growth outlook, the biggest bearish takeaway, if there's one, is there's still uncertainty, even for a big player like this who provides chips for everybody.
So there's nothing you saw going through the numbers that was like bearish for the broader semiconductor stack. How do you reconcile that with what ASML said? Are they just two totally different names?
Yeah. So for TSM, I think for the AI accelerator and the high computational, no change, very bullish. But if you are kind of feeling more like in the automotive market, they did see barely any growth in the automotive space. So your more older products, analog devices might still be weak. So if you have a company like Texas Instrument, analog devices may be on semi, they might see some pressure still. So the real growth story is still only in the AI market. Now with your question with ASML, I personally believe this is kind of like a buy the dip moment. I think the market is overreacting here.
What exactly are they upset about? Is it guidance or is it something deeper?
There's two things I think the market is very upset about. First is because of export restrictions, they actually had to reduce their backlog by about $1.3 billion. They had to adjust their backlog due to some export restrictions. So first, that creates some fear that, look, what if more export restrictions come out? How would that impact your backlog even further? They still have over a 30 billion euro backlog, so it's still pretty healthy backlog. But just seeing that this was one of the first few times I've seen them adjust the backlogs due to the export restrictions. And these export restrictions are also on kind of their older generation technology. So that's the first thing. The second thing is they changed their tone a little bit. The past few quarters, they have said that fiscal year 2026, which I think is almost calendar year 2026 for them, was going to be a growth year for them. Now they mentioned due to uncertainties, they can't say that anymore. They're still prepared for growth, but they don't want to lie to their investors and say that it's a definite truth.
Right.
And I think that sentiment there kind of switched the flip for ASML. I don't think that is necessarily bad for the semiconductor market, because this seems like and I think so. I think they're just being very conservative, extremely conservative. I mean, we saw TSM be conservative. I think they're just taking it even a further approach. For ASML, right, it's not necessarily bad for the semiconductor market because it's all about the supply chain lines. TSMC and all these companies, they have enough supply chain lines to build even the type of growth that they're seeing now. So they can say, look, maybe I'll wait an extra quarter or two before I build the new machine, because their supply lines aren't running at 100% utilization rate. So they still have some growth in their supply lines before they even need to buy a new equipment. So the semiconductor market is still good. ASML, unfortunately, has to wait for a selected amount of customers before they buy products. But on the bullish side, TSM said they're still sticking to their $38 to $42 billion capex, and most of that money will most likely go to ASML. So long term, very bullish on ASML. Short term, I can see why the street maybe punished it, but for long-term investors, I don't think you care what the street cares for the next quarter or two. If you're looking for a market beater, I believe ASML can definitely be that case.
Yeah, it seems like they're too important of a company as well for them. And there's too big of a revolution happening with AI from a CapEx perspective for them to have an quarter and bad guidance, and that to be the thesis breaker for the name, right? It feels like it's exaggerated.
Yeah, I mean, you see TSMC say that it's going to build so many fabs here in the United States, and they're building so many in Taiwan. Those need to be filled with some type of machines eventually. Maybe there's been some delays on those fabs, but they're going to be built. And once they get built, they're going to place those orders on ASML. So I don't really care if those orders got delayed by 1 quarter or two.
Right.
Long term, TSM, Intel building fabs, all these other places building fabs all over globally and expanding. There's really only one player they're going to go to buy their lithography machines, and that's going to be ASML. So the orders are coming. It just might be delayed a few quarters.
Right. Everyone, Jose's YouTube right there is in the chat, so please make sure you subscribe to that. I'm also linking his newsletter, What the Chip Happened.
And that newsletter later today, we're going to have update on both ASML earnings and TSMC earnings. And now with earnings season coming back up, this is going to be the best place you're going to get a quick snapshot of earnings for semiconductor. And obviously, I like to talk about big tech and AI. So anything dealing with that, it's a nice 5-minute, 7-minute read on quick information with what the chip happened.
Yeah, I had a feeling you said that you were going to say that ASML is going to be heavily covered today along with TSM. So definitely make sure to subscribe to that to try to get more information on those two companies today. You got a busy month coming up, Jose. You got a lot of semiconductors. So
yeah, it's exciting. It's exciting.
This newsletter is going to be important.
I love what I do, so it's fun.
Okay, Nvidia 173 new all-time highs. I mean, are you going to stay on my show for the future, or are you going off to the island here? Is like what's going on?
If I do go to the islands, I'll still stay on the show. That's not a.
I mean, you could buy your own island, buy your own Starlink, and you could just
and be good anywhere. Yeah, exactly. Super excited for these things.
Is this too much for Nvidia? Is this frothy? Is my question.
I mean, it's a little bit higher than their forward PE is now sitting at like 38, 37, a little bit higher than the typical low 30s. Nothing too crazy. We are going to see analyst expectations with the new China product coming out. Analysts are going to continue to increase price targets and stuff like that. So I think a lot of bullish sentiment. Long term, AI is going to continue to revolutionize the world. We are not yet at the moment where AI has stopped. I mean, I'm pretty sure today we have OpenAI going to do a live stream of like what many people are saying, kind of their agentic solution. Even if it's a bad agentic solution, it needs a lot of compute, and that's the worst it's going to be right now. It's going to get a lot better and better and better.
That is hilarious, right? Even if it's a crappy model, they have to buy more NVIDIA to train it.
Yeah, because it has to be better. And I mean, I'm personally using a lot more AI solutions on a daily basis. Gemini has been cooking lately. I've been using a lot of Google products lately. It's wild. So I'm pretty excited about this, the overall AI momentum. So, I mean, there's always room for some random headline to come out. We just heard reports that Microsoft might be slowing down on data centers. We just see DeepSeek version 2, some headline that could create massive destruction for short term. But I think the market will eventually wake up and say, no, this is just another DeepSeek 1 moment where it's more fear headlines than actual sentiments behind it.
I love it. Jose, thank you so much for joining. Jose's Twitter in the chat. We will talk to you a lot over the next coming weeks to learn about semiconductors. But yeah, dude, incredible stuff. And it looks like the AI market is not slowing down.
Definitely. Thank you. And take care, man.
Thank you. Take care. All right, folks. Of course, when Jose joined, Hoodie gapped back up to 106 because why not? There you go. 106 on Hoodie. I mean, she broke out to 106.50. The reason I think this is happening, quite frankly, is because of the crypto legislation that also is getting voted on today. So that, along with some of this Ethereum momentum, plus just people getting more excited for Hood's future, I mean, that could be why this is happening. And again, we are not in the S&P 500 yet. When that happens, I think, it can get exciting. I mean, the only reason I'm saying this is because we saw it happen with Palantir. Like, we've been through this once. We saw it happen with Palantir. I mean, Hood is not guaranteed to get into the S&P. No one, quite frankly, no one expected Palantir. I mean, even Palantir was there. They didn't expect to get into the S&P because they always thought they would be outside of the cool boys club, but they got in. And so if Hood actually does get in, she's just going to get a lot more net buying pressure on the stock. Ethereum right here, 34.29. So that continues to be green. Now, the Ethereum treasury is having a pretty shitty day. SBET, it was down 7, then was up, then was down 10. Now it's back up. So that one's still down 3. Had a great day yesterday. BMNR is well down 2, even after Peter Thiel bought, after BMNR disclosed a $1 billion stake in Ethereum. The treasury is still having a bit of a volatile day. Broadcom, great day right here, 285. That's green, up 2%. Oracle as well, 250. That's green. So all of those continuing to follow all-time highs on NVIDIA at 173. Wow. People are buying the Grab 550 call, Grab 550 call, 829, expiry 210,000 of premium. I mean, we know the $5 call for August 1st got bid up a lot last week. That's right after earnings. Yeah, I mean, dude, in my opinion, we got to break above 6 for this to be a real breakout. We break above 6, that's like, all right, we're probably not going back to 4 again. But it's going to need a lot of momentum, and it's going to need more people to get interested in the story, which I think is happening. Well, one thing we can say for sure is we know the toots are in. 81% institutional ownership. So the toots have just been waiting, but they've loaded. They have loaded. Ethereum 34.20. Where's Big Bear? That one's still moving. That one's down a little bit. It's up 12%. It's down from 830, but still at 799. Still at 799. I've been putting so much profit from high beta names into Grab. Quite frankly, that's the way to do it. If you make like 20,000 on Open Door, you kind of take some of those profits, put it into something that's cheap, that's trading at this point 40% cash. That's relatively safe against an Open Door. That's profitable, and that you believe there's a long-term thesis. I think, that would be the part of this rally that makes it way different from 2021. In 2021, people bought the big meme names and they lost everything because they didn't sell, or they're still believed in the meme names and they're bag holding, like a GameStop. But if they take profits on those memes and then they put them into NVIDIA and Hood and Palantir and Grab and, ASML on a 10% dip or an AMD, like that's where this rally is different. That's where you're exchanging some of that capital into good quality names. And those good quality names are getting that capital from the meme stocks, which can continue to support the good quality names and allow them to have a bit. By the way, I know I kind of shitted on GameStop yesterday. I actually listened to Ryan Cohen's Fox News interview. And I'm not going to lie, kind of like the guy at the end of the interview. Like the CNBC interview was horrible and it left a bad impression on me. I guess he was more comfortable on Fox News. The Fox News one, kind of, I don't know. If I'm in GameStop, you kind of just like, you kind of believe the guy's gonna pull it off to an extent. I don't know. I watched the full 20 minutes and I was like, all right, I hate that they don't communicate with shareholders. I hate that they don't take questions on shareholder calls. I hate that they're constantly diluting. But I do kind of believe that this guy is going to have a plan to figure it out. But he is absolutely not a short-term minded guy. I mean, he flat out said, if you're in the stock for short-term gains, get the hell out because we have a long-term vision. Now, I don't know what the hell that long-term vision is because they haven't really explained it. And maybe they're still working on how to articulate it. But kind of did like him more after that interview. Can you look at Palantir calls expiring tomorrow? Yeah, let's pull up some of the Palantir call options and see what they're looking like for tomorrow. I mean, dude, the premiums on Palantir are incredible today, but obviously they are incredible because the momentum is there. So tomorrow's what, July 18th? Dude, you have 26,000 open calls for 150 on Palantir. Robinhood right there, 106. Palantir, 150, 194. You have 12,000 open calls for 145. You have 36,000 open calls for 140. All of those are going to be expiring tomorrow. And those are the main ones. So 140, 145, and 150 are where you have, and then 152.5 has 41,000 shares. 16,000 of them have been traded today. And 155 has 43,000 open calls and 32,000 of them have been traded today. This is why Palantir continues to maintain some of the momentum. The options market, these calls need shares to collateralize them. And as a result, you either are buying 100 shares to collateralize your calls or you're selling 100 shares. And as a result, you've got way more buying activity at these levels. If you're going to have call options worth 150, 152, 155, you get buying pressure on these shares. So there is going to be a lot of calls that expire tomorrow for Palantir. Maybe the market makers try to hold it down. Maybe it busts through, but tomorrow we're going to see kind of how that plays out ultimately for Palantir. 151.91 on Palantir. SBET, it now goes green. There she goes. SBET goes green. SBET goes green. There you go. The Ethereum treasury is green. And Microsoft, where is MSFT? 511. That's up 1%. 511. That is up 1%. So Microsoft all-time highs. Where is Nubank? Nubank 1396. That's up 1%. 1402. That is green as well. So Nubank trying to get to 14, and then Hoodie still at 106. All right, let's see if there's some other macro headlines and see what else we've got going on. We saw the Trump post. Oh, there's an Elon headline. SEC Elon Musk asks a U.S. judge to give Musk 6 more weeks to respond to regulators' lawsuit concerning his late disclosure of his Twitter stake. Dude, I forgot freaking Elon's dealing with the Twitter lawsuit from years ago. I forgot he's still dealing with that. My goodness. I mean, yeah, all right. So you got to deal with that with Elon. But there you go. I don't think that's going to affect Tesla. Where's Tesla, by the way? Is Tesla still at 320? Tesla 321.68. All right, Tesla 321.75, 321.68 on Tessie. Is D-Wave pumping? Are we getting a quantum pump? Hold on. QBTS. Wow. Dude. R.I.P. Screlly, folks. R.I.P. Screlly. For those that are in QBTS, $18 on D-Wave. Look, I'm not in this one, but for those that are in it, congrats. If you're short like Skrelly, I don't know what the hell this guy's going to do, because at some point, the short can't continue to stay short unless you keep putting more money into the trade. And he was short when this thing was 14. It's at 18. I don't know if he has unlimited amounts of capital or access to unlimited amounts of capital. But yeah, this one I don't think is going to be working out for Skrelly. Goodness, dude. My goodness. Well, 18, there you go. Again, I don't fully understand quantum as a thesis. I don't understand all the business use cases, but I do know there's a passionate retail audience. And although, some people want to say it's a meme, which I get, because like, what is quantum? Does it have use cases? Yada, yada. People are just bidding it up. You got to admit, D-Wave, Rigetti, IONQ, they have held their like 1,000% gains that they've had since last year, all this year. The only time they fell was when Jensen said they're 15 years away. And then they fell 50% in a day. And then they recovered because Jensen walked back his statements and said, I didn't really mean to say they're that far away, yada, yada. And then you had Zucks and Satya Nadella go on podcasts, talk about the future of quantum. Google came out with Willow quantum computing. So whether or not you agree that quantum has a thesis, the point is the big tech CEOs of our generation have positively said they believe in quantum. And as a result, it's getting momentum right here. $18 on D-Wave. Shopify as well. That one having some love. What is the news on Shop? Why is it pumping this week? Let me see if I can find something on Shopify. But that one, no, it's all technicals. It's all technicals. I don't see anything fundamental. So when I search for Shop on X or any ticker, usually I'm looking for the top 3 or 4 tweets. That's where you get the headline. If you see all of this, you see all these charts, it's like 4 charts in a row. That's TA. That's everyone saying, look at this. There's like 8 charts in a row. Look at this. There's so much. Once you see all this TA, you know that it's all right. People are just saying that there's oh, do we have a headline right here? 22 hours ago, Shopify jumps on a Financial Times report on ChatGPT checkout integration. Okay, that's from yesterday. So that maybe could be helping. The Financial Times reported that sources familiar with the plans described OpenAI's intent to monetize ChatGPT by charging merchants commissions through purchases made with the platform. Okay. That could be a bit of a fundamental reason. It was kind of buried behind all the charts. But so if you buy something on ChatGPT because you're like, hey, I'm looking for a new chair, the chair pops up, and then you want to buy it right through GPT, you would check out with Shopify. Damn, dude, that's like legit. Like that's just changing the entire paradigm by how people shop. If people legitimately are using a chatbot to then find a product and buy. And by the way, I've tried to do this. I've gone on ChatGPT and I've asked for like product recommendations. And usually you get like, you just don't get the best stuff yet. It's not as advanced to really give you like the right Amazon link for what you're looking for. You'd rather just go on Amazon and search it. But yeah, that could definitely be bullish. Shout out to Quantess right here on D-Wave. She is a resident quantum queen. She was buying this thing below $1, which is pretty freaking incredible. So that's basically an 18x on D-Wave, 18.10. That's up 7% on the day. Again, whether or not you understand the thesis, if there is a passionate audience behind it and the stock has been able to hold its momentum. I mean, look, if Open Door doesn't hold what it's doing, then it's just a bubbly, frothy name. But if it gets to like $4 or $5 and holds it for the next year, that means, there might be a real thesis that's emerging, or there at least is a passionate audience that believes in that thesis and is not willing to sell. That's basically what we've seen with Quantum, D-Wave, IONQ, and Rigetti. Whether or not you believe in it, there are people that do, and there's enough people that are simply not selling. It's been almost a year now of them holding on to that. Maybe that happens with Big Bear. I mean, I think it's a lot of froth and hype, but if Big Bear goes up to 10, 15 and holds those levels and the company starts executing, I mean, maybe there was a real thesis here and you can't really just call it hype. That could definitely be the case. Where's Pew Pew Pew? Where's that grab a gun SPAC? Wow, down another 20%. This is why it's scary to chase some of these names, bro. This thing was up 40% in the pre-markets yesterday. Then it drops 25%. Now it's down another 20% today. again, it's just one of those things that like it makes you wonder, you know, like, are some names running too high? And it makes you a little scared to get into some of the other names that are running. Yeah, that definitely is a rug pull. How much do we know even how much Trump's son owns of this thing? Because I would hope he owns a decent chunk. Newbank trying to get 14 right there. If he's sponsoring the SPAC, at least we know he has some skin in the game on this. Robin, it's still over 106. Nvidia 173, AMD 160, ASML 750. ASML going green. It was red today, going green, and then the S&P 625. That one's still holding green. Adam's going to be on at 11:20. Adam's going to be on at 11:20. So in about 30 minutes, Adam will be on. And so we will get an option selling segment from Mr. Adam Bergman today. Okay, macro. Let's see what else we got going on the macro. And then we will keep going from there. Trump is signing executive orders. Okay. So I don't know what the executive orders are, but we are going to see some stuff later today on different executive orders. Okay, we have home builder sentiment. I think we missed this about 20 minutes ago. Let's pull that up because we do have some of that data this morning. Muted? Hold on. Okay, is it better? Is it better? It's back? That was weird. Okay, should be good. Should be good, should be good, should be good. Yes, we're good. Oh, that was weird. That's weird. Okay, cool. I was saying we missed home builder sentiment, so let's go to that real quick, and then we'll keep going from there.
Sentiment index also hitting the wires, and for that we head east to Diana Olick. Diana?
Well, Rick, home builder sentiment in July rose 1 point to 38.3 on the NAHB index. That is right along expectations, but anything below 50 is considered negative, and the index stood at 41 last July. It has been negative now for 15 straight months. The slight boost came from the recently passed Budget Act, which provided for some tax relief for households, home builders, and small businesses. But the builders still cite poor affordability conditions, particularly from elevated interest rates, as a major headwind. That's why 38% of builders said they cut prices in July. That's the highest share since NAHB began tracking this in 2022. Just 29% were cutting back in April. Now, if the index is three components, current sales conditions rose 1 point to 36, sales expectations in the next 6 months increased 3 points to 43, and buyer traffic saw a 1 point drop to 20, which is the lowest reading since the end of 2022. Regionally, builder sentiment was strongest in the Northeast, where it rose 1 point, flat in the Midwest, and dropped further in the South and West, where it is weakest. Sarah, back to you.
Okay, thank you very much, Diana Olick. Well, President Trump, Carl, did put to rest immediate fears that he would fire Fed Chair Powell. It's still out there, this idea about, will he, won't he, Fed independence. He obviously continues to go after him for what he sees as wrong policy and insult him because he wants to see lower interest rates. I think it's interesting that just in the last 24 hours, right here on CNBC, the top bankers in the country have come on and made a pretty strong case for Fed independence and warning that that is very important. Have a listen.
I think central bank independence, Fed independence is very important, and it's something we should fight to preserve.
The stability of this country is actually necessary and important to the whole world. And I think a stable Fed and independent Fed is key to that.
Jamie Dimon agrees, also said at a conference, the independence of the Fed is absolutely critical. Playing around with the Fed can have adverse consequences, the absolute opposite of what you might be hoping for. So while everybody is sort of breathing a sigh of relief that the president's, denied that he was looking to fire Powell, said he's a bit more conservative and the Republicans have told him to go forward with that and that he's not going to do that. It is notable that, you have some of these top bankers, every investor we talk to say, don't even think about it. Fed independence is sacrosanct.
Right. And you have Warsh on Squawk basically arguing that collectively the regime at the Fed is missing what he thinks is a huge turning point for productivity and hence disinflation.
Yeah, I mean, he
So we listened to that in the morning. Again, Kevin Warsh, he basically legit just said the Fed is full of shit and they have no idea what they're talking about. And Again, if he replaces Jay Powell, we know he's going to be cutting rates, but he is part of the ideology that the Trump administration has across the board, which is that the Fed is making up stuff in regards to their fears of inflation due to tariffs because they're political. And as a result, if we get that replacement, which we will by May, no matter what, I don't think Trump is actually going to fire Jay Powell. That would spook the markets too much. But if we do get a new Fed chair in May, then we're going to probably get some of these rate cuts coming down. Broadcom 285. Wow, Broadcom 1.34 trillion, all-time highs. Where's the rate cut probabilities for September? I'm going to guess 58%. That's my guess. The answer is 54. It went right back down to 54%. If we don't get a cut by Powell in September, I know Trump said it's highly unlikely he's going to fire him. I don't think Trump is going to want to wait another 9 months to be able to actually get his rate cut. I mean, who knows, bro? Who knows? Maybe he said yesterday he talked to Republican lawmakers about it. It's not like he has completely barred the idea out of his mind. He said it's highly unlikely, but there's a shot. There's a shot. It's just a question of, does Powell give us that cut? And I think what they're trying to do is really put the pressure on Powell through the media to give us that cut. But we're going to have to see if Powell actually agrees right here. Shopify still up 2.4. Tessie 322. Fear and greed at 75. That's correct. Fear and greed is not at extreme greed yet, folks. We are still at fear or greed, not extreme greed. Not extreme greed yet. The Robinhood giveaway for the 5 Bitcoin is 21st of July. So that's in 4 days. That's on Monday. So if you deposited any amount of money in Robinhood over the past month, you will get automatically selected through a lottery to potentially be one of 5 people to win a Bitcoin on Monday. And if you win it in the chat, let me know. That would be pretty cool if someone wins it right here. Robinhood trying to get back to 106. D-Wave right here, still moving 1818. These treasuries, they were going green and now they're back to being red. Lots of volatility today. SBET went green like 5 minutes ago. Now it's back red, down 3%. And BM&R still down 1.62. I am not giving away 5 Bitcoin yet. Hopefully in life I get to the point where I can, but not yet. But Robinhood is. Now, Robinhood's app was down on the day. I mean, I haven't been using it because I've been live, but a lot of people have been reporting it is down. I think it's back to being normal, but to me, that just means there was a lot of traffic coming in, which is bullish, but hopefully seems like the app is working fine now, which should be good. Netflix. Oh, shoot. I forgot we got Netflix today, bro. I forgot. What's my take on Netflix earnings? All right, let's do a pump or dump. What do we think? Dude, do we buy Netflix before earnings? Do we buy some Netflix before earnings? Dude, remember I bought a share at 900 last time? And then I sold it at like 904, and then it freaking jumped to 1,040 over. It's basically I pulled a Nike on Netflix. And then it went to 1258 4 months later. So we would have been up $400 on that share. Dude, I don't know. The thing about Netflix is like it's at all-time highs. Now, granted, when it was at 900, it was also at all-time highs. We're in a bullish market, so any good momentum should pump them. But it's like, dude, it feels expensive. It's trading at 60 times earnings. I mean, it's not like I don't think the content did well this quarter, and we know Q3, Q4, if they give us some good guidance, that tends to be their holiday quarters, the content's going to do fine. If they announce a split, I definitely think Netflix at least has a 5% move. Squid Game 2, all-time high subscriptions. Okay, so Squid Game 2 sucked, but I can't deny that everyone wanted to watch it, so that could be the tailwind for subscriptions as well, right? Dude, I'm not buying 100 Netflix shares here, bro. I'm not spending $120,000 on freaking Netflix. Honestly, if I do it, it'll be one share. If I just make it fun, it'll be one share. That's it. And I'm actually gonna hold it. I'm like, no matter what happens, I'll hold the damn thing. We'll do one share. We'll do one share at 3:59 p.m. for the hell of it. But I don't know, dude. I don't know. I genuinely don't know about a pump or dump. I really have no clue. I want to say pump because it's a bullish market and there's not going to be a reason earnings should be bad. But when you're priced this high, you never know. WWE is bullish as well for that. Yeah, that's true. That's true. Squid Games 3 did come out. I think it was this quarter, though, for Squid Games 3. So That shouldn't affect them for Q2. But it should be a tailwind for Q3, which is good. Stranger Things 5. Dude, was Stranger Things a good show? I've never tried Stranger Things, but I know people like that show. Microsoft right here, 511, Palantir 152, and then Hoodie just below 106. But I've never seen Stranger Things. UFC and Netflix. I mean, there are a lot of tailwinds for Netflix, dude. You can't deny it. And I've been wrong about Netflix for like 3 years at this point. So I wouldn't bet against them, but I just don't know if we get a pump from here. They started milking it. See, that's what they tend to do with some of these shows, dude. You tend to stretch it out too far and just ruin all the episodes, and then the seasons get bad. And Breaking Bad is one of the only shows I know that really they stretch. They only had one. There was this one episode in Breaking Bad where the two guys are stuck in the meth lab and they're like looking at a fly for 60 minutes. You guys remember that episode? And the fly's like going around and I was like, what is this episode? It was a character development episode. It was the only bad episode the entire series had. But every season just got better and better for Breaking Bad. The fly is not peak, bro. That episode was not good. It's just two guys talking with a fly in the room for 60 minutes. I was like, what is this, bro? The Fly. Okay, so all you guys disagree with me then. The Fly is a great episode. I disagree. That was a realistic episode, though, for meth heads. Dude, meth is kind of crazy, bro. You got to be at a certain point in life to be doing meth, right? Like meth is different. Meth is not weed. I don't even think meth is cocaine. Meth is like, you got to be at a certain point of life to be like, you know what? I'm going to do some meth. It's kind of wild, but I think it's also why they made the show as tailored around that type of drug in Mexico. Meth, bro. Freaking meth. I've never tried it, so I wouldn't know the experience, but from seeing Breaking Bad, it is, it's one of those drugs that can get you hooked. Tesla 322, Shopify 123, Hoodie 106 pounds. You're back above 153, baby. Back above 153. Back above it. Your Tylenol high is from meth. Please try it live, dude. Could you imagine that stream? I think YouTube would have a little problem with that. Oh my gosh. I still stick to my guts that you can get high from Tylenol, bro. I was floating back in 2020. I'll never forget it. I went downstairs. I took 1,000 milligrams of it. My back was hurting. I started floating. I don't care what you guys say. It's possible. It is possible. Google gets an upgrade, 215. 215 on Google. We expect a solid 2Q with a revenue of $94.6 billion. This is from KeyBank, driven by search, YouTube, and cloud. We expect positive commentary on AI, mode, Waymo, and expense inefficiencies, and for management to reduce the value of Alphabet's platform to approach AI. We raised our EPS by 2% and introduced 2027 EPS of $12.25 above the street. Did Waymo have an update today? I think Waymo did. Waymo, oh, wow. We're covering more ground in Austin starting today. Safe and fully autonomous Waymo rides only on Uber. See you on the road in Austin. Dude, Waymo's not slowing down. Tesla's trying to expand in Austin. Waymo says, you know what? We are going further in Texas, and they're expanding as well. I mean, I think it's time for Google to pump, dude. I think it's time for Google to, this is kind of getting to, and this type of a bull market for Google to barely be trading at 17 times earnings. It feels a little undervalued. Feels a little undervalued. Yeah, mocktails and Tylenol, bro. It'll do it. It will do it. By the way, please, no one ever try meth. Like, I'm not one to give advice on like life or anything like that, but I might, if I had to offer any advice on if you should do it or not, I would say not doing it's probably the better idea here. Granted, no, I'm just kidding. I'm just kidding. I'm just kidding. I'm just kidding. I was trying to think in my mind, what could be a funny justification for doing it? I can't think of it. So yes, don't. Let's stick with the don't do that. Let's stick with the the don't do meth. Clipped. Dude, if I ever won for president, I'm done. Oh, I got to show you guys what Steve did yesterday. on the show. If I ever run for president, dude, you think Trump's got dirt on him? You think Biden's got dirt? The types of clips they will pull out from my live streams. I mean, it's going to be different, bro. It's going to be different. Okay, so this is what Steve said on the freaking market open yesterday. The market closed. So he was live with us. If you have kids in the background, there might be a little profanity right here, but this is what Steve did yesterday.
And look, if I'm incorrect on things, I will more than happily say I'm incorrect. Okay. If Tesla ends up going to 500, obviously I'm going to be incorrect. There's no question about that. But I'm willing to say I'm incorrect on things. But don't tell me that I am incorrect and I'm distorting things when I am taking it directly from their website. You know what I mean?
Yeah, I feel you.
And I showed you. What would you like me to do? What would you like me to do? There are people walking. Fuck you. But these people think that I won't get out of my car.
That was Mr. Steve yesterday. He's a New Yorker. He is from New York. Robinhood back above 106. He's from New York. These people don't think I'll get out of my car. Dude, Steve would get out of his car. You remember the one time Steve got angry on that podcast we did with Tanner and DDI debating SoFi? And like Tanner kept talking over him and Steve, that was the one time I've seen Steve publicly get angry. Like he legit raised his voice. And the way I calmed it down, I was like, Steve, that's kind of turning me on right here. And then he started laughing. But it's the only time I've seen him get angry. But you mess with Steve, he will not be afraid to fight back. Robinhood 106 pound share. Wow, dude, 153.50. All right, let's check 154. Let's check it. Let's check 154. I mean, if we're doing it, we are doing it, baby. 154 resistance, 37,000 shares. 37,000 shares. I mean, dude, it's momentum. It's pretty damn incredible. And I am curious, are the toots buying it here? And what do you guys think? You think the toots are buying at all? Do you think this is all retail? Or do you think there are some toots that are jumping in? I mean, look, if I'm managing money, it's the risk reward, right? It's just tough on a valuation perspective. That doesn't mean if you've bought it at 20, you have to sell here, but that also doesn't mean if you don't have any position, you buy it at 150. So I am kind of curious who's bidding it up, but someone's bidding it up, bro. It's $3.50 above 150. And I don't know what the hell they're going to report on earnings. I would imagine they have to give us 40% growth at this point. And if they don't, maybe the stock tanks. If they do, maybe we go higher, but it is absolutely remarkable what we're seeing in terms of the street's fascination with this company. And if it is just retail, then the question is, okay, people say retail is dumb money, but I think we have a little bit of evidence over the past couple of months that retail is not necessarily dumb money. And in fact, retail was selling a lot of these stocks as they were surging into June, into the end of June, and they were taking profits. So, if you say it's just dumb retail buying it, I'm like, well, a lot of retail were net sellers of Palantir. So maybe it's different elements of retail coming in that have just never heard of the name and they don't care about the valuation, but it's not like it's just retail buying it up to buying it up. Like we saw retail take profits on this, which theoretically has not been the best move because Palantir has gone higher, right? But nonetheless, taking profits is not a bad thing either. So I think it's a mix of retail, but it's also probably a mix of institutions as well, even if it's not massive institutional interest right here. Shopify up 3%, Tesla 323, and then Microsoft 511. Microsoft broke all-time highs at 512. Broke all-time highs at 512. 70% of you said pump on Netflix. 70% of you said pump on Netflix. They better give 69% growth. See, I don't think they're going to have the NVIDIA quarter yet, but I think they eventually will. But I think they got to give us 38 to 40%. And I think we're going to see, they did 39 last quarter. They're not they're not deaccelerating. That's for damn sure. So what's higher than 39? 39.5? No, 40. I mean, like, I think they're going to put up 40 at that point. And when they put up 40 with adjusted operating margins, hopefully closer to 45, 50, like, yes, it may not justify 153, but it definitely doesn't mean it has to fall to 100. And it definitely doesn't mean it has to go to 170. It could be flat. But I think if they put up the numbers, it's up to the street to then figure out how much they want to bid it up. But Palantir's only thing they can control is putting up the numbers. That's all they can do. Same thing with Hood. All they can do is put up the numbers, and then the street figures out what's left. And they've been putting up the numbers, both Hood and Palantir. So now it's a question of just how much the street wants to bid it up and continue giving them a multiple or take them down. But if they put up the numbers, I think they will get the bid. Broadcom right here, 287. That is also at all-time highs. Rocket Lab, are we at 52? Rocket Lab, 3 cents away, folks. 3 cents away. There you go, 52. 52 on Rocket Lab. We came in just in time, bro. Just in time for 52. There you go. 52 on Rocket Lab. Incredible. Incredible stuff. Congrats to those on Rocket Lab. I mean, I'm in it. It was at 47 yesterday. I didn't know what was going on. Now we're at 52. So there you go. Nick, thank you for the 10 super chat. Amit, thanks for your advice on call debit spreads. I put some on Zeta 2025 for Jan 27, and they're up 100% already. Wow. Congrats. Yeah, we'll go deeper into call debit spreads in the future. The reason I like them is because you're offsetting the volatility of buying a call with the safety of selling a call. And so if you're willing to max your profits at a certain level, which could still be very attractive returns, then I think call debit spreads are a pretty decent strategy. So awesome stuff. Thank you for the super chat. Thank you for being here. Rocket Lab right here, 50-2 on Rocket Lab. Are we buying Googs before earnings? I mean, dude, I have enough Google, so I don't feel compelled to. I also think it's ridiculously undervalued. I don't know. It'll be a game time decision, but at least for me. But for anyone buying Google, I don't think you're going to be upset. Now, could this thing tank? Sure. If Sundar somehow doesn't deliver on like just the framing of where they're going in AI, but it is too undervalued and they have too much of a moat, in my opinion, for them to take this back down to 150. Like, that would just be weird. So I think Google should maintain some of this momentum. Do you think Netflix will go higher on earnings? Yes. I mean, I agree with you guys. I think it'll pump. I don't know if it will, but I think it will pump. There's a clip right here by Chris Camillo that he just posted. The caption is Hood versus Schwab. It's a 50-second clip. Let's see what he had to say on this one. And again, Chris Camillo, friend of the channel, he has been very, very happy. I think that he said the other day, Robin is his number one position. And he said definitively he's not selling on their July 4th episode. They did one dedicated to Robinhood. He said he's not selling a single share, which means it's only becoming a deeper position for him in the portfolio.
You do not want to be sitting with a grandpa company like Schwab.
Schwab used to be an online broker that charged for trades, and then Robinhood came along and they had to offer free trades. I'm not investing in Schwab. I'm investing in Robinhood. I'm just trying to ask the question, what is to prevent Schwab from saying, oh, well, we can do prediction markets. We can do tokenization. We can do these things. Once Robinhood gets in trouble or doesn't get in trouble, they've laid the groundwork. We'll just do what they do.
They ultimately will do a lot of the things that Robinhood is doing, but they were going to do it way later, way slower, in much more of an antiquated way, and they are not going to capture the minds of the customer set, meaning that if you are a young-ish investor, you do not want to be sitting with a grandpa company like Schwab. You do not want to be sitting with a grandpa company like Schwab.
So there you go. That is Mr. Chris Camillo's take. Here's that clip when he talked about not selling Hood 2 weeks ago.
To answer the question of the title of this episode, it sounds very much like you're not selling Robinhood, you're doubling down.
Well, it's not necessarily that I'm doubling down, but I am not selling one penny of my Robinhood. I haven't even thought about it for 1 second, but I'll give you the why behind that.
And you know what's funny about this? Tanner and I were talking about this a while ago as well. Tanner did a great podcast with Devin Ryan. He said Robinhood's going to go to 500 in the next decade. You know what's so funny? I put Tanner's podcast on the big screen yesterday downstairs, and my noticed that Chris isn't wearing a hoodie under the jersey. Dude, we're bringing the hoodie jersey back soon, baby. We're bringing it back, even though it's hot. It's like 80 degrees in my room right now, but we're bringing it back. But I put on Tanner's podcast yesterday downstairs, and my mom was listening in the background, and she heard Devin Ryan be like, yeah, so I think in the next decade, Robinhood can go to 500 a share. And my mom was like, what? And she turns around. She's like, who is that? I was like, oh, this is one of the Robinhood analysts. And she's like, okay, I'm never selling my Robinhood. I was like, first of all, Mom, I'm not going to let you sell your Robinhood. Remember my mom wanted to sell at 70? Remember that screenshot I posted? She texted me at 70. She said, hey, can I sell and I'll buy back later? I was like, no, that's not how this works. But yeah, as soon as she heard that, she's like, okay, I'm never selling. So she's taken Devin Ryan's words for it. Devin Ryan, again, was one of the most bullish analysts when the stock was back at $8. And it's a great podcast by Tanner. He articulated the bull case for them 5Xing from here over the next decade. And it seems like there is a shot that could happen. Rock Lab right here, 52.27. My goodness, dude, this one's not slowing down. 52.24. It's up another 10% today. Another 10% today. I went on Dumb Money a month ago. I went on them on their show. So if you guys want, if you go through their, we talked about NVIDIA and Google and Robinhood and all that stuff and Palantir. So I went on their show a while ago. And so yeah, we did a collab episode before. Amit, your mom, dad, and sister have mirrored accounts. Yeah, dude, they're in all the same places as me. They are heavy in NVIDIA, Palantir, Hood, and Grab. And my sister way more heavier in Grab than my mom and my dad, but it's kind of how I'm managing the family money within those four names. And they all just have really good averages. So it's just like, even if those stocks take 20, 30, 40% haircuts, they're going to be green. And so that's why all their portfolios collectively every day have just been like, because NVIDIA, Hood, and Palantir have freaking like every day, it's like another $1 or $2. And they come home from work and they're like, what is going on? And I'm like, well, it's the stock market. Dude, yesterday, my sister, I forgot to tell you guys this. I was sitting down, just like on my phone. My sister comes up to me and she's like, so, you know what I did today? I was like, what? She's like, today I finally asked ChatGPT what Palantir does. I was like, I still don't get it. She's up 750% on Palantir. Her average is $20.17. And she was like, I think it's like $20.50. And she's like, I finally asked ChatGPT what they do. And then we actually spent 20 minutes talking about the company. She was like, so why did they start in 2003? Like, what happened with the whole PayPal mafia stuff? And she's like, any company can use them. Like, why does the government like, so how, but she's like, I thought they're AI. She's like, so are they responsible for ChatGPT? I'm like, no, NVIDIA is responsible for ChatGPT. But the point of what ChatGPT makes the LLM is what Palantir uses to help companies. And so we went into like a real deep discussion about it. And the funny thing is she has never, not once asked me to sell those shares for her, which is incredible because she, like you would think, all right, you're up 750%. You would think, okay, maybe I should take some profit. She's like, all right, just keep Palantir. Granted, she has not known what the company does for a year at this point, but yeah, she's been excited now to see it. No, they do not pay me a fee to manage I don't take a fee to manage my family's money. That's a little weird in my opinion. Yeah, I would not charge my parents. Dude, I'm just happy like that I'm just happy they gave me the portfolio. Again, it took a lot of convincing 5250 on Rocket Lab. To my sister in June of 2024, I was like, please, can we take the money out of your Bank of America? It's just sitting there doing nothing. And can I put it into Robinhood, give me the password, and just trust me? Just trust me on this one. She finally said yes. And that was the last time Palantir was 20. I mean, we got one more chance in August with the yen carry trade, but the last time, it's not a Hood, Palantir. The last time Palantir was 20 was after Q1 in May, and I bought as much as I could for her. And then we doubled down on Hood, and then I got NVIDIA for her like 120, 130. But yeah, dude, it's been incredible. I know a lot of you guys have similar situations. A lot of you guys have similar moments, just like, telling your family to get into a name, and hopefully that name has worked out. NVIDIA 173, Oracle 250, and then Grab at 526. But yeah, I would never charge them a fee, dude. Like, my sister doesn't care about finances at all. Like, at all. Like, dude, she's up 750% on a company and she has no idea what they do. Like, you would think she would care to like learn about it. She doesn't give a shit. She doesn't care. She has a life, right? She's just outside of the market. So I'm just so happy she's letting me take control of it because she's my sister. I love her. I want to make sure that, she's secure in life. I want to make sure she does well. I want to make sure that when she needs to buy a house, she's good. Her car is breaking down, but she refuses to buy a new car. She has a 2016 Corolla. I'm like, please, you can afford to buy a new car. I was like, let me buy it. I'll make the payment. I'll make the freaking $500 a month payment for you. But she's like, she's a bit stubborn is what I'm trying to say. And so it took her a while to give her my portfolio, for her to give me her portfolio. But now that she gave it, I can manage it. I don't understand. She has a life outside of the market. What the hell does that mean? Yeah. It's a good question, right? What the hell does that mean? Amit, can you link your Grab thesis paper? Yes, I'll link that in a second. And so Grab is the next one for my sister and my mom. She's been looking at Grab now, and she's been, asking, should I get more Grab? And I'm like, yeah, like you should. Like, if you want to buy more Grab at these levels at $5, I don't think it's the worst thing in the world. Now, my mom, she's not upgraded to options level 3 on Robinhood, and I'm trying to get her upgraded, but she hasn't been able to buy spreads. But my sister got upgraded a couple months ago, and so I brought a lot of spreads for her. So if Grab gets to 10, my sister's portfolio will be doing very well. But ultimately, execution is what's needed to get there. Pouncer 153.30, folks. She's not stopping. Robinhood 105.50, and then Rocket Lab still holding above 52. D-Wave looks like it wants 19, folks. 18.95, up 12% on the day. This one looks like it wants 19. The Grab thesis, by the way, I linked it in the chat. Dude, I've been trying to get her to buy a Tesla. Like, oh, there you go, 19. 19 on D-Wave. Congrats to D-Wave, folks. There she goes, 19. Can someone check if Skrelly is doubling down or not? Can someone, figure out what's going on? Because at some point, you have to close the trade and take the loss, right? Or is he doubling down? Someone needs to let me know. But I've been trying to get her to buy a Tesla. She doesn't like it, bro. She doesn't like the Tesla. She's like, again, I told you guys she's stubborn, right? Like she doesn't like the self-driving. She thinks it's weird. She doesn't hate Elon or anything like that, but she just she doesn't like Teslas. And every time she gets weirded out. She gets freaked out when I do self-driving. I'm like, don't relax. You don't have to have self-driving. It's still a really good car. She has the range anxiety stuff. And I'm like, dude, we literally just installed a charger in the house. Like, you will never have to worry about range anxiety. But she's not convinced. So I'm trying, but it is hard to get her on the Tesla bandwagon here. Tesla right here, 322. 322 on Tesla, and Netflix 1259. All right, Adam should be joining soon. I sent him the link. Adam is a friend of the channel. He is someone who has built his own channel primarily rooted in selling options. I'm going to link his channel right here in the chat and pin this link so you guys can subscribe to him here. Adam's a great friend. I had lunch with him last week. He works, but he doesn't work. So he works in terms of his businesses that he runs, but he is basically retired primarily off the stock market. Last year was a great year, particularly in MicroStrategy for him. And he made a lot of money. And he's been able to use that money now to get into more safer plays instead of buying call options, selling options to be able to generate income. So he'll come on the show and he'll share some new plays that he's thinking about once he gets on. Okay, what other macro news are we seeing, folks? Let's see. We don't have too many headlines today. We have the Uber Lucid stuff. We had some of these names break some key resistance levels. Trump, Powell stuff, nothing too crazy. We talked about ASML and TSM, which were great numbers. Let's see right here. Oscar, yeah, I mean, dude, this one's just, I don't know, dude. This one's been ugly. This one, I still think the implications of the Big Beautiful Bill are not fully understood. Definitely not by myself, and I think the street's kind of fading it right there. Zeta's breaking out today as well. This one's up 7%, right? This one is up 8%. There you go, 1617 on Zeta. This is a marketing data analytics technology company. I'm probably butchering it, but they do marketing analytics if I'm not wrong. D-Waves, she's breaking out as well, 1912. Is this an all-time high? I think it got here before. Last time it got here, it got to 1977 back May 30th. Okay. So it is not an all-time high, but it is trying to retest those highs. Where's Open? Is Open Door still up? Open Door? No, Open Door collapsed, folks. This was at 220. It's at 162. All right. You had some people say, screw it, I'm selling today. I mean, it's still up 8% on the day, but it is down a good chunk from where it was even after hours yesterday. After hours is at 169. Right now it's at 162. So that one's getting hit. Is Grab moving? Grab is 529. All right, we got to break 530 on Grab. That would be bullish. Wow, 23 million shares on Grab. Volume every day is 35 million. So that's more than 50% of the volume in the first 2 hours of trading, which is nice. But you got Grab right there at 529. QS, QuantumScape, is that one moving? That one is moving 18%. This is not a quantum company. If I'm not wrong, they're like in biotech, I think. But it sounds like a quantum company because it's called QuantumScape. QS, that one is up 18%. All right, folks, let's bring on a friend of the channel, a personal friend in my life, someone who has supported me in my journey as a content creator since 2022. We both kind of came up together in this entire stock market world. Oh, batteries. Okay. I got the B right. They do solid state batteries, not biotech. All right, batteries. So there you go. That's what they do, batteries. Well, we're going to need a lot of batteries, right? That's a little bit healthier than biotech to me as an investment thesis. But ladies and gentlemen, Mr. Adam Bergman.
Yo, what's up, Ahmed? How you doing?
Dude, your microphone. This is like $1,000 microphone. This is crispy. I love it.
Bro, it's literally a $5 mic.
The $5 mics is better than this $500 piece of shit that breaks every day. So,
yeah, I'm tired of these mics. Honestly, the best mics is these cheap ones, believe it or not.
That's facts. That's facts. Adam, thanks for being on, man. It's been about a month since he's been on, guys. His channel is pinned. It is called Retired ASAP. Adam talks about retirement strategies with option income and dividends. So you guys can subscribe to his channel. First of all, before we get into it, dude, how's life? How's the past couple months been in this market for you?
Man, it's been good. The first half of the year was not so great, and definitely a huge comeback. And having fun, man, enjoying, saving up for the move. And I'm doing good, bro, just like you. Me and Ahmed meet all the time. I mean, all the time. We do meet up, and you guys are jealous, right? I get one-on-ones with Ahmed, and I don't need to do a meetup. And yeah, man, we're both doing good. Thank God. It's blessings for both of us, which is amazing, dude. It's amazing.
Dude, you were at the first meetup. Adam was at the first meetup, at the first New York City meetup. So it was, it meant a lot for me for him to be at the meetup. Hopefully he'll be at the Miami one. And, you know, it's pretty cool to just grow with you as a friend on this journey as well. Okay.
Thank
so
you.
Option selling, bro. You and I are into it. It's a big market.
Yes.
Retail is getting more interested in being the casino versus the gambler. I think let's just get started. I think you got like 3 or 4 plays. Give me what plays you're looking at right now when it comes to some stocks to sell some options on.
Yeah. So as I was doing a lot of SoFi, a lot of Hood, a lot of crypto plays, but as those start going through the stratosphere, they're no longer worth it for me to do cash secured puts because I have to keep raising my strike prices, and I'm not comfortable selling cash secured puts on SoFi at 18 or 19 or Robinhood at 90s. I just don't want to do it. And there's always other stocks over there. So recently I put into
before you continue, can you tell people the big SoFi play you've had for the majority of the year so far?
Yeah, so the first half of the year I'm out of the play. So the first half of the year I was doing a $14 strike on SoFi, and I did that play for around 4 or 5 months, and I collected on $655K of collateral. I collected $62,000, and many times the SoFi had a $14 strike, but SoFi was trading at $10 or $11, at some points even below $10. And, you know, I was calm the entire time, collecting my premium the entire time. I ended up collecting roughly 9-point-something% in 4 months. So I think, and you just got to be comfortable in uncomfortable situations. And at the end of the day, SoFi went above 14, obviously. I got out of the position. A lot of people were saying, you're crazy, you're going to lose on that, you're not going to make money, you don't know what you're doing, you're under. And I said, guys, I've been here before, just calm down, relax. And, you know, at the end of the day,
SoFi is a legit company.
It's a legit company. I borrowed $655K from Robinhood. I paid $0 in interest. I printed $62K of premiums that I put into my pocket against 655K of Robinhood collateral, where I don't need to pay interest because I didn't actually use the money because I didn't get assigned. I think I got assigned 1%. I got assigned out of like 500 contracts. I got assigned like 12.
Right. Yeah, it's pretty incredible. And again, for those that don't understand what he's saying in terms of not paying interest, in option selling, your broker will, if you enable margin, give you the collateral for a cash cleared put. Again, a cash cleared put is you're willing to buy 100 shares of a stock at a certain price. If SoFi is 15, you're willing to buy it at 14. You need to have $1,400 of collateral, and you get paid a premium to then buy those shares at $1,400 or $14. The risk is SoFi goes to 13, and you have to buy at 14, so you're down $1 a share. The benefit is if SoFi, you believe in it, goes to 20, and your cash cleared put was at 14, you keep the $1,400 in your collateral, and then you keep the premium. So if you're not actually using the money that you're collateralizing, aka the margin to buy the stock, you don't pay interest on it. And that's pretty standard across every brokerage. And that's why if you have a very big account, you can get access to a lot of cheap money to be able to then use to generate income.
Yeah, really cool. And it's like double dipping. So some people are like, oh, but you lose out on games or you don't use that money. So it's a opportunity cost. And my answer is it's not an opportunity cost because I literally use the money to pay all my bills through, dividend investing, and I still get my appreciation. I just make more because I'm still getting the appreciation on my stocks for covered calls with premium on top. And for cash secured puts, I do about $1 million a month of cash secured puts, and I have the money to cover it. But why use my money when that money is invested in stocks and I'm allowed to borrow from Robinhood? I pay $0 in interest and I'm just printing money. It makes no sense to me the other way. But everybody has a different situation. Everybody has a different thing that they're trying to accomplish. But I've been doing this for quite a while now, and I'm getting the hang of it, just starting to get the hang of it.
Right. And for those that are super confused and they have no freaking clue what we're talking about, honestly, you should leave the stream right now and watch this for the next 3 hours, or just keep this in your watch later. This is a 3-hour video I did breaking down cash cleared puts and covered calls in the simplest way possible. It's literally repeating everything 25 times so people can get it. So please make sure to watch this video. And then when you come back to the segment another time, you'll have a better way of understanding what we're talking about.
The funny thing is, like, I still remember I went to Restoration Hardware the other week with my family, and that's the rooftop that we sat after the Vlad interview. And I remember when Amit interviewed Vlad, I met him in the city. That was the first time we actually met up, I believe. And went to a really cool rooftop. We started talking, and I was selling options against my Palin. Sorry, my screen keeps turning black, and I have no idea how to fix my wiring, and it's so annoying, so I apologize. And then I was like, hey, Ahmed, look, I figured this out. I'm selling options. And he's like, yeah, you got to show me in person. And I was showing him, I was selling weekly options at the time on Palantir, and I was making like good money, like $1,000 a week, like good money, maybe 1,500, but like not small money, not crazy, but not bad. And I was like, Ahmed, I'm going to keep doing this, man. I think this is going to work. And this was like, 3 years ago now, right? Yeah. Something like that rooftop. And that was one of the reasons why Ahmed got into options. I'm not the only one. Like I know TJ. Yeah. TJ does it with I think TJ does it with the largest account that I know of on YouTube. I'd probably do it with the second largest account that I know of that I see people. And TJ's great. But anyways, we have different styles. I've been saying that all the time, but because of us and a couple of other people, I guess Ahmed got into it, and Ahmed then I think Tevez got into it right after Ahmed, a couple of other YouTubers. So it's like all trickling down. It's interesting. Really cool.
And I think the reason we got into it is because a lot of us made some good money last year by gambling, quite frankly, by buying call options. And, I don't want to just say it was pure luck because like Robinhood at $8, you should have been buying call options, right? But at the end of the day, when you buy calls or buy puts, you need the stock to move up or down. When you sell them, there's a fundamentally different paradigm. You're not going to make as much money, but you're definitely not taking on as much risk, which is also very important. What new stock are you looking at, Adam, to sell puts on right now?
So
real quick before you continue, I just got to address it. Rocket Lab 53.
Sick.
Are you in this, Adam, at all? Rocket Lab?
No, so I wanted to make an entry. I actually did a video on Rocket Lab when Rocket Lab was 1950. I was doing cash secured puts, and I think it was trading at like 20. And I'm like, I really want to get assigned. I wouldn't roll these. I really want to buy the shares. And Rocket Lab just took off. So I'm not mad. However, I do have a plan that I haven't had. So I pre-IPO'd Voyager. Voyager is being slept on by a lot of people right now. And I think there's two communities that's going to pounce on Voyager stock. I ended up buying a lot more Voyager even post IPO. And Voyager actually has an investment from Palantir of $50 million. They use Palantir software, but also they have an investment from Palantir. And Voyager has two communities that are sleeping on them, but when they're not sleeping, it's going to go up. And that's the Palantir community and the Space Mob community. So Voyager is not talked about, although some people start talking about it. And they're part of like the space station right now that's going up into space, Trump's Golden Dome. So hopefully I have a mini Rocket Lab, because Rocket Lab is a mini SpaceX.
Yeah, the space vertical or the space thematic is getting so many people interested. Rocket Lab 53, it's breaking out up 11%.
Unbelievable.
It's still only at 25. I mean, it's expensive, but it's 25 billion is not like, the craziest. So at the end of the day, you might have some people just piling in. Okay, so what is the new stock you're looking at for selling puts on?
So I started selling puts on Oscar, OSCR, which is great. So you want to sell puts on a stock essentially that's really good, had a massive drop, and you're taking advantage of the implied volatility to the downside. And God forbid you have to actually buy the share. So I don't want to get assigned, right? I don't want to pay interest on the $1 million that I borrow. That's my shtick, my thing, what I do. You guys can do differently. But even if I had to buy the shares like SoFi at 14, I know eventually it's going to go up into the right. So you're trying to find companies like that. So I started putting Oscar into the rotation, Lemonade in the rotation, Snap in the rotation, and believe it or not, Hims. So I actually got back into Hims, and I was out of Hims for quite a while.
For those that don't know, Adam was literally the only YouTuber literally talking about Hims at $3. So
yeah,
he's been in this for a minute. Yeah.
So I got back into Hims. So what I'm doing is I'm doing strangles on all these positions actually. So I'm doing a strangle is when you have a cash secured put and a covered call at the same time. So what I'm doing is I'm buying shares of the stock, I'm selling covered calls, and I'm doing cash secured puts for income. And it's very important to understand, there's two types of cash secured puts that you do. You can sell a cash secured put for an entry point, which means you want to get assigned, you want to buy the shares, you just don't want to buy the shares at this current price.
Right.
Or you could do cash secured puts as an income play where you do not want to get assigned. And that's how I do it usually.
Okay, so let's walk through some of these names. First of all, Oscar, why is this an attractive candidate to you?
So if you just go to Stock Visuals, the guy's website from the community, I forgot his name, the Spanish dude, unbelievable website. Stock Visuals is called, the Visual Stocks.
Visual Stocks, yeah.
You know what I'm talking about, right?
Yeah.
Everything is up and to the right, very similar to Hims. So in this specific case, I'm literally buying this on momentum, and there's a huge following behind that. I've kind of shifting my investment thesis where it's all about the Colts, it's all about retail right now. So I'm a Peter Lynch, Ray Dalio type of investor where like I invested in Hims because I use the products. I invested in Hood because I use the products, Walmart because I use the products. So if you can use the products, you have an advantage against Wall Street as a retail investor. I still do that, but now I'm shifting it to the last couple of years. You could see it and just look at Hood, Palantir, look at SoFi. All of these companies are literally running away because of retail, and retail is what pushes everything right now. And if there is a dip, retail destroys that dip. Like, I mean, look what happened to Hood and Palantir. It got eaten. So I think Oscar is one of those companies that has a retail following, and the people that follow Oscar are the same people that are in Hims. So Hims and Oscar are the same community, just like ASTS and Rocket Lab is the same community. Right? It's very, very interesting. So that's why I did Oscar. It's getting absolutely obliterated. One of the reasons is because of the Trump recent bills. Yeah, but Oscar is so selective with which states they can go to, and they can add states like crazy. All their charts is up and to the right. So that's why I did Oscar, because fundamentally it's a great company. $3 billion market cap, crazy retail community that's following
I just want to say, what you're saying about retail, this can't be understated, because ASTS, we did the deep dive on my channel at 25, or I think it was like 32 or something. It's at 55 right now. And that is because there is such a deep cult on this name. And I think some guy shared a 250-page thesis that he did on ASTS with me. When you have these types of people in the community, that means there's alpha. Now, that doesn't mean the stock is going to go straight to the moon. It has to be a fundamental company like Open Door. I don't know if there's anything fundamental to it, right? So there could be a retail cult, but there's nothing fundamental. Oscar, there's absolutely something fundamental to it. It's just, as you said, experiencing a headwind due to the Trump big beautiful bill stuff. But that is where the opportunity is. It doesn't mean it's going to go back to 23 anytime soon. But if you're selling puts and you think it's kind of bottomed, or you're okay buying it at 12 or 13, not the worst thing in the world to get some of that momentum either.
Bro, I actually bought options on Oscar today. They just filled. So I bought options. I'm selling covered calls. I have shares, and I'm selling cash secured puts on it. But it's like, if you're going to look at, can I share my screen?
Yes, you can.
Share screen. Window.
Yeah, and let me highlight this comment right there. This is absolutely correct. Not all communities are created equally. Some of them are just hype and nonsense. Some of them have real people doing DD, and it's up to people to figure out which ones are legit.
Yeah. So, I mean, look at these charts. Everything is just, total members are just going up. Total premiums earned is just going up. Medical loss ratio, this is great. Their cash flow is just up. Their net income is up. Their revenue is just going up. Stock-based compensation, pretty much even, steady flow, like nothing crazy over here. Cash is going up. That is staying stable, right? Like, what else do you want? It's unbelievable. Like, I think this looks beautiful to me. All right, just a quick view.
Okay, so what about Lemonade? What do you like about that?
So Lemonade, I really like the founders of Lemonade. Lemonade at one point hit like 160, and now Lemonade went down to, I think it's trading to like $40 right now. And all these companies are $3 billion market cap that I'm going to talk about. So they're kind of micro caps or very small caps, which have huge room to grow. So I'm trying to get them before that run. The Lemonade also took a beating. It went all the way up to like 180. I think it closed the day to 160. And then it just came down. And if you look at Lemonade, it just has like a channel of, let me try to pull up short. Second. So this is what I like about Lemonade. Can you get back on my screen? Yeah. So if you look at Lemonade, you see that it's just literally, it went all the way over here. It went to like 160. I think it went all the way to like 180s. Just like a lot of companies, it just wasn't ready. Same thing happened to Palantir, guys. It went up, and then Palantir took a dump because people were hyped for no reason. Now there's a reason. And then Lemonade is just trading at this crazy channel literally for the last 3 years. And it just had this little mini breakout over here. And I feel that there's going to be another breakout. Maybe you can even call this a nice cup right here. This is the handle right here. And then it's going to pop up in terms of technical analysis. But I like this because I know that if you're going to go and sell cash secured puts on it, if you go to year to date, the lowest points was right here at like 25. And other than that, you're in this range right here of the low 30s.
And for puts, you like something that's range bound, right?
Correct. And you could sell cash secured puts at these $30 marks, the low $30 marks, and still get a beautiful premium, even much more than 2%. So for me, this is beautiful in terms of charting, and then I can go into the technical analysis after that. But yeah, Lemonade is essentially, if you believe Tesla is just a car company, Lemonade is not for you. But if you believe Tesla is an AI company that's giving you cars, then Lemonade is an AI company that's giving you insurance minus the health insurance right now. I'm literally looking for Lemonade to give car insurance for me a quote. I want to see how easy it is to pay out and stuff like that. So that's why I like Lemonade. I also like the founders. One of the founders, he actually exited Fiverr. He sold Fiverr, I believe, for like $1 billion. And it's a $3 billion market cap. But you already know that it could go higher. So you're looking for that break.
Right. Okay. What about Snapchat? What is your, by the way, guys, QQQ all-time highs, S&P 500 all-time highs. So we are breaking all-time highs across the indices, which is very, very bullish. Snapchat, what is the reason?
So Snapchat, I was selling this at $8. I would not be selling Snapchat at the current prices of $9 or $10. I just found a certain range. And the range was that 750 was the lowest that it went to. So if I'm selling Snapchat for $8 cash secured puts, I have a huge probability. You see, it's literally range bound again for over 3.5 years. And even if I have to buy it at $8, which I'm not because I'm really good at managing, I know that it would pop above $8 and I could get rid of the shares if I needed to. And I was right. So I did it last month and I did it the month before that. And again, people are like, you're crazy. You put so much money into it. How are you going to put up like over $750,000 on it? You don't know what you're talking about. Guess what? I was doing it literally when the price was like $8.20 and $7.80, and right now the price is $10. So everybody likes to be negative, and everybody thinks they know what they're talking about, but very few people put their money where their mouth is, and I'm in time again. So Snapchat is great, but I wouldn't be doing it at these prices. If I could get the money at $8 strikes, I'll do it. I'm not sure if I can make my 2% with $8 strikes in.
So
and HIMS.
Right. Okay. Yeah. Him. So what are you selling puts on? Is that because the Novo drop created a better entry here?
Yeah. Yeah. A huge opportunity. So I was selling cash secured puts at 34, and HIMS I think is trading at 41 right now or something like that, or 50 even.
Yeah.
So I don't know where we are, but you see what I'm saying? Like I wouldn't be selling cash secured puts at $50 at $34, which is what I was doing on my channel. Like I literally made a video. I showed people where to sell it at, and the range was $34 to $42, depending on how risky you want to be. So that was a great call. Lemonade at $8 was a great call, but I'm not selling lemonade at 10, and I'm not going to be selling HIMS at $50. But Oscar, I'm still going to be selling at $11 because Oscar keeps going down. So now next month, I'll probably put all my money into just Oscar cash secured puts because that's still a deal, for example.
Right. So Oscar, Lemonade, HIMS, and Snapchat are kind of your main plays. Pound right here, 153.54, guys. SoFi 21.86, and grab. We are getting.
Congratulations to the Palantir community, man. You guys are absolutely awesome.
Hey, hold on. You are in the, even if you don't own it, you are in the community still. Don't act like you're not.
Yeah.
You are buying it at $7 with us. Here.
So just to be quite honest, I don't personally hold Palantir anymore. It's okay. I did well. It's bittersweet. I really want it. Like I tell Ahmed all the time, I'm looking for a dip. However, I do manage my 2 kids' accounts, and they both own a lot of Palantir. My son has 500 something shares, and my daughter has almost 100 shares. By the way, my son is almost 4 years old, so that's a lot of money for a 4-year-old. And my daughter's just turned 2. And my brother actually has like 1,800 shares, which I'm helping him manage get out of a cash secured put. So I am kind of in the Palantir community, but I don't physically have it, and I'm so tight about it. I'll be honest. I'm looking at entry point. I just made a video about covered calls though for Palantir for my viewers of how to pull out money.
Covered calls. What do you think at these levels?
So at these levels, I was doing the. So if you're gonna pull up my screen, so I think I just did a 175 covered call. So if you will go to trade options, so for example, I'm always doing 4 weeks. So instead of buy call, I would do sell call. And guys, this is a probability of you keep getting appreciation of Palantir. You don't want to sell your shares. All right. This is not for somebody that wants an exit. This is you collecting full appreciation. So Palantir is going to keep going up in price. You collect the same appreciation, but you're also collecting premium on the side to do whatever you want with. So this is for people like you. I would usually go 4 weeks out. So today is the last day. It doesn't really count. So I would go 1, 2, 3, 4. So I would go August 15th. And I was showing people that the price that you want to be in was 175, 180 when I made my video, but I would actually be doing 181. I would actually be doing like 190s right now.
Why?
So you want to be, so in general, if you want to keep your shares, I like to have at least 90% in my favor, which means that the delta is going to be closer to 10. So so this would be like a good play right here, a 10 delta,
right?
And gives you 93% chance in your favor. The point is you want to sleep well at night, and you don't want your shares to be called away. So you are saying that you are willing to take a risk that Palantir is going to go up 30% in the next month. And for this, they're paying you $1.46. So what I'm trying to say is that Palantir, when Palantir was right here, right at $27, it was a lot easier for it to go from, $30 to $40, which is 30% increase. But when Palantir is trading at the market cap is what, like 350 billion, 400 billion right now, right? 350. It's like for Palantir to go to a $500 billion company in 1 month from here. And I don't care who you guys can shoot the messenger. Palantir is overvalued. I love it. I hope it keeps going. There is no justification except for what happens in the future. And absolutely, they're knocking it out of the park. But you are bidding for perfection. So you at 200, I feel is safe. So instead of you just sitting there and just collecting appreciation, why not automatically collect an extra $1.47 a share? Now, for anybody that bought this at $10, you're literally collecting 15% on your money monthly for doing nothing.
Right.
If you bought this at $100, you're still collecting 1.5% for doing nothing on your money. You sleep well at night. But if you take 1.5% and you times it by 12, well, you just made an additional 15% on your balance here. You almost didn't risk any appreciation. So you're making appreciation and another 15% if you bought it at $100. But if you bought it at $10 or $20, it's a no-brainer. You're making an extra 5% a month on your initial investment, right? Even if you bought it today at $150, it still adds up.
It's
right?
1%. So if you bought 100 shares today at 153, that's 15,300. You're getting $1.50, 150 divided by.
So you'll do 100 divided by 153, which is how much you bought it today. And then you would times it by the 1.5 that they're giving you. So you would collect literally 1% on your money right now. But if you're doing it every 4 weeks, times it, the weekends and stuff like that, it's times 12. So
And
times
this
it by 12.
Yeah, it's 11% a year. There you go. On top of what your capital appreciation. And this is what someone asked me today. Hey, my hood position is getting too big. I'm a little worried. I don't know what to do about the sizing. This right here, I think, is one of the answers. Either you sell hood or Palantir right now, right? You can do that. Or you say, Mr. Market, I'm going to force you, at least on this example on Palantir, to go to 200 to take these shares away from me. And if you don't, I collect the premium. If you even get to 199, I'm going to have a nice share appreciation from that move to from 150 to 199, and I keep my shares. And so I think, and if you have to sell at 200, but you already wanted to sell, why don't you sell at 200 versus at 150?
Yeah, like look at this. If you go to hood, all right, and you go 150s, $150, this gives you 95% in your favor. Just do the math. Let's say you even buying hood today at 105, right? Let's say 100 divided by 105. And then they're giving you the 1% times 1. Dude, you're still collecting 0.95%. If you times it by 12, you're collecting, again, another 11%. However, you're literally saying every month, I am willing to say that hood is not going to go up 50%. Guys, let me just say that again. You're saying I'm willing to sell hood if it goes up 50% without taking into account rolling, wheeling, or other management skills.
Yeah.
I mean, and for this, you're taking a risk of appreciation of 50% every single month. And for this, you're collecting another 12% on top of full appreciation. That's the way I love to sell covered calls. That is the way. The premium is not the prize. The premium is the cherry on top of the prize of price appreciation. Double dipping, making a shit ton of money, supplementing your 9 to 5.
Right. And a couple of nuances to this as well. Palantir right here, maybe trying to break 154. Number one,
beautiful.
The premiums are jacked up today because obviously hood and Palantir, the whole market's running. You sell covered calls on a day where the premiums are jacked up. The call buyers are willing to pay more than on a red day, because on a red day, no one wants to buy the call. So that's one reason why these premiums look good. But number two, one of the things that Adam's showing, and a lot of you guys may be doing it a little bit different from him because you want more income. I mean, if you really think Palantir is way too aggressive right here and you sell the 165 call, you're going to be collecting a lot more than a couple $100, because 165 people are paying a lot more premium for those calls because they're closer to the money. Adam's saying, hey, what if you go out 30 to 50%, but because these names are so volatile, they're so liquid, and there's so much momentum, and let's say you really want to keep the shares, you can still get an additional 10 to 15% a year annualized on those shares by expecting they won't move 30 to 50% in a few weeks, which is not the craziest.
Bro, that is the greatest, I'm trying not to curse, that is the craziest possible dividend you can get, right? Any stock that you invest in, like Verizon, was giving you 7% dividend. Everybody was salivating at that, but you're not getting the price appreciation. Over here, you're getting pretty much full price appreciation, extremely little risk, and then you can manage the position, and you're still getting that 12% dividend. It's insane to me not to do something like this, especially when companies are running so hot like Hood and Palantir, which they can keep going, but realistically, those 50% gains, 100% gains are harder to do as you go forward. And this is without taking into account managing your position, rolling, wheeling, buying out, and many other various ways. And there's always dips along the way. So when Palantir, Hood, S&P 500 went up, well, then when we didn't get into S&P 500, it dropped. So if you managed your position right after that, you kind of get out of it. And then you could always get out of jail free card and roll for 6 months, which is what I did with my Hood positions because I didn't want to get a Palantir situation. I rolled it from 65 and 75 to 115s, and then I rolled my 115s to 140s, kind of giving myself slack to live and fight another day.
Exactly. I agree. And so look, in a bull market, if you just want to let your stocks run wild, then yeah, you don't sell calls. You let it go. But I think what Adam's saying here is not to cap your upside. He's saying, hey, do you think it's going to go up 50% in a month? It could. But if it doesn't, even especially because a lot of these stocks have already had such a big run, that's where you collect a little bit more premium by just selecting very low deltas. And so it's not for everybody, but it is a strategy if you are focused on pure income and not just buy and hold, and you have heavy positions of some of these names. It's not the worst idea. Second of all, this is also very important for people that have a big position. So for example, if you have 1,000 shares of Robinhood at $30, that is much different than buying 1,000 shares of Robinhood at 100 and then selling calls. Because now if you're buying it at 100, what's the risk? Obviously, let's say Robinhood tanks to 75. So now no matter how much call premium you get, it's not really going to offset. It'll offset a little bit, but not the 25% haircut you would get if it drops to 75. But if you have shares at 30 and Robinhood tanks, you collect the call premium. And even if it tanks, you're still in the green because your average is 30, but you collect a little bit of premium on the way.
Yeah. So, and before we go any further, this is literally how I fund my retirement right now, right? So you guys can say whatever you want, the haters, blah, 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 but I show these plays every single month. Last month, just in premiums, I collected 29,000 something. This month, I made around 55K. The month before that, I think I'm like 33K. So every single month, I make tens of thousands of dollars selling options premium. I show people this. Yes, I trade about $1 million every month. I borrow the money against Robinhood, pay no interest on it, call it whatever you want. And this is just one type of way that I do it. If you want to be more aggressive, you could be more aggressive. But my whole point is selling options and getting premium is not the end all be all of this. The whole point of this is to be able to beat your position's appreciation with the options premium, use the options premium to get into a different play. So for example, when I was selling Palantir options, I was using that money to buy MSTR, MicroStrategy. Yep. And I could not care less. I remember I was telling Ahmed, I couldn't care less how much I paid for it. I didn't try to time it because the money was free. It was free money from cash secured, from covered calls to then put into quote unquote risky stocks. And that's how I keep building my portfolio and have asset appreciation plus premiums, so on and so forth.
Agreed.
It's just my strategy.
And it allows you to be more like if you make 30,000 off some option premiums, you can take 10,000 of that and gamble on Open Door, and you kind of don't feel, that guilty because you made it from the option premiums. The other thing that's important here to understand as well is what happens when it's going parabolic. So for example, I told you guys I had covered calls on Hood. I rolled them 3 weeks ago. I got the hell out of the way. Rolled them to 140 December and 150 January. Do I think it could get to 140, 150? Maybe. Realistically, my price target this year has started to get into the 120s with S&P inclusion. I could have done 120, 130, picked up a lot more premium, but I'm getting the hell out of the way, just like Adam said, because I want to sleep well at night. I want to protect my shares. So when you do think a stock is getting ready to break out and there's all these catalysts in front of you, I think that's where the art of rolling, which we'll talk about on another episode, is very important to be able to manage the position long-term as well.
Yeah, I like real fast before we go on to the next segment, like NVIDIA, for example. I had NVIDIA covered calls at, I think, 165 ending last week. Instead of rolling it when NVIDIA was like 163, I think at the time, it was like right around my strike. I rolled my NVIDIA to 205 for January 26. And this does several things. Number one, I still get my price appreciation to 205, which brings us to roughly a $4 trillion company. So psychologically and technically, that's hard to break that $4 trillion mark.
5 trillion. 205 would be
5. Oh, holy shit. $5 trillion mark. It's dude, unbelievable. I ended up buying those Nvidia shares at 116 at the dip, literally just to get premiums. And if I do get them assigned, I get them assigned in 2026. So I have a long time to deal with the taxes, and I could use some of that money to make other plays. Premium is not the end all be all. I keep telling this to people. Premium is the icing on the cake.
Agreed. Porter, thanks for the $5. This discussion was super helpful. Been waiting for a deep dive on this topic as a noob in this space. Maybe we get Adam every week, every other week, if we can steal some time from him so he can share his plays. But
Yeah, and can I do one quick plug if you don't mind?
Yeah, go ahead and do it.
Before we go any further, so there's a lot of YouTubers that are full of shit that make money on your backs, selling courses for thousands and thousands of dollars just to join somebody's Discord. They're full of shit, always talking about buy option leaps on stocks that are all-time highs. You all know who I'm talking about. They're all fugazi. I have one-on-one bookings that I did for people. You want to talk to a multimillionaire who does this, actually showing you guys transparency, not made money selling courses on your back, who had a channel before everything I spoke about actually came true? Book a one-on-one with me. $78, 45 minutes. Instead of doing months and months of research, just come talk to me for 45 minutes. If you guys are not happy, you can have your money back. Simple.
And look, Adam is a personal friend of mine. If you're going to actually pay someone for stock market stuff, you want them to be one-on-one. You don't want it to be $700 course, join my Discord, and then I never talk to you, right?
Bullshit. It's bullshit. These guys are robbing you guys. Thousands of dollars to join the Discord, to speak to an AI bot. All these Discords are managed by AI bots. It's an LLM on the way somebody speaks. It's not you speaking to the people. Don't be dumb. The people on top who's selling you these Discords, because I know, because I was going to build a Discord and people were offering this to me, and I said, hell no. You're talking to AI bots trained as an LLM on the way the person speaks, and you guys are paying crazy money for this. You don't need to pay these people.
Agreed. I mean, I was telling everyone last night, I got paid when I was in college in my consulting business for one-on-one public speaking debate coaching, right? And you had these wealthy parents that paid me a lot of money to help their high schoolers learn about debate, but they're paying because I'm actually with the student one-on-one teaching them. I'm not giving them a course on how to get better at debate. And so if you're going to pay for anything online, you got to pay for someone's time, and you might have to pay a little bit for that. But if that time is valuable, that's way better than, $1,000 course. So,
yeah, man.
Okay, Adam, last question for you. I want to throw a couple stocks at you, and I just want to get your raw reaction. We'll pull up your Robinhood. Let's start with NVIDIA. Like, put or call, what would you do on NVIDIA as you look at the option chain, and how would you get into it?
NVIDIA, I wouldn't do any cash secured puts whatsoever. I will only do covered calls. If you guys want, let's do a little bit of technical analysis. So I learned my technical analysis from Jesse, believe it or not, micro to macro.
He's
and
good.
He does
He knows his stuff.
He's unbelievable for long. And I adapted everything he does for my short options, which is selling options. And I got really good at this. And now I'm trying to learn how to use it for long options, which I'm still good at. I'm pretty good at long options, but I'm so honed on doing this for short options. So I'm just saying, shout out to Jesse. 99 people watching him will never learn. Guys, learn. Stop following YouTubers blindly and just learn what they're doing, and then you can apply it to your specific needs. So if I was going to do NVIDIA, I would end up doing always 4 weeks out. I do sell, call, and you want them all to expire at the same time. So it's very, very simple. I wouldn't look at anything less than 90 right off the bat. Anything less than 90, I wouldn't look at. So I would start with something like this, 195. Probably I'll be doing 200s.
And you always do 28 days out?
4 weeks. And it just turns out, because the weekends don't count, right? So it's always 4 weeks. And I do this, even if I open up a contract in the middle of the month, I'll still do it. Like, if 1 week passes, I'll do it for 3 weeks. If 2 weeks pass, I'll do it for 2 weeks, because I'm doing thousands a month. And if I cannot manage thousands a month with different positions on different days, it's just so much easier for me because I know I manage it. When I sell an option, guys, I almost never manage it before the last week ends. So the options expire Friday. I will manage it that Monday or that Tuesday, just to let you guys know. That's my system. So it's just easier for me to manage. So I will go August 15th. I would automatically be looking at this one right here for 200. or for 195.
And the
These would
reason
be
you're
like
not doing less than 190 is because the delta, right?
correct. Well, the chances of you winning, yes, the delta and a bunch of other things. So all of these Greeks, including implied volatility and a couple of other things, is what gives you this 90% chance in your favor. So it's not exactly delta, but if you guys want to make it very simple, the delta is the amount of the person on the buying side has that the contract is going to be a winner, which means the opposite side, the people that are selling it, have the opposite percentage in your favor. So really simple, a 12 delta gives the person the option, that percentage that is going to happen. So you have roughly an 88%, very rough math, that it will not be assigned, that is going to expire worthless. And it kind of correlates.
As a seller.
Correct. So as a seller, especially if you don't want your shares to be called away, what I do, and it works really well for me, is I go at least 90. If you've been in the stock for a long time, just do 95, right? Go somewhere like this one, 200. Because the premiums that you're collecting is not based on the strike price. The premiums that you're collecting is based on your initial investment, your initial entry point. So if you bought NVIDIA at, let's say, 173, sure, this might be really small. So if you go, for example, let's say you buy NVIDIA today, you would do 100 divided by how much you bought the shares for. So let's say 173, and then you would times it by the premium collected, which would be 58 cents, okay? Times 0.58. So if you just bought NVIDIA today, you're only making 0.33% on your money. But if you did this for 12 months, it still would add up to an extra 4% and you sleep well at night. However, if you bought NVIDIA, let's say you bought it somewhere at the dip at like 115, 120. Let's say you bought it at 120. And then you times it by the same 0.58. Well, now you're collecting 0.5%, right? And if you times it by 12, of course, you're getting 5.8% plus the NVIDIA dividend. Well, you're making an extra 6% a year on top of the appreciation that you're getting from NVIDIA. But if you bought NVIDIA for, let's say you bought it $50 a long time ago, like Tanner and all, we bought a long time ago. Well, if you bought it a really long time ago, all of a sudden you're making 1.15%. So it's not based on the strike price, it's based on your entry point.
Correct.
I hope that as opposed to cash secured puts is based on the strike price, not based on the entry point.
100%.
So,
yep.
So I would do the 200 right here, right off the bat. This like looks good to me, where you sleep safe at night and you're collecting a premium. And there's not much technicals over here in terms of the moving averages. So you want to look at everything acts as a ceiling and a floor. Everything technicals is just a ceiling and a floor, one way or the other. Since you're at all-time highs, the only things you really have is the top of the Bollinger Bands. So these two blue lines right here, one blue line, two blue lines. This acts as a standard deviation of 95%, which means that anything out of these two lines is a 5% move one way or the other. So you're already at the top of the Bollinger Bands. There is a risk that this might go a little bit higher over here. However, if you're going to go to the RSI, you're well above 70 over here. This is going to cool off. I don't know when it's going to cool off, but it's going to be coming down. And then if you go to the stochastic oscillator, it's very similar to the RSI, but anything above 80 is overbought. The thing is, anything overbought can be overbought for a while, right? So it's been literally overbought since the end of April, right? April 30th. So it's been overbought for a while. The point is, there's going to be a cool off. But TSM reported earnings. TSM is killing it. And selling chips to China now. So you just want to be safe.
Which is, I'm happy you said that. Just because you're selling options doesn't mean you forget about the fact that you need to care about what the hell is going on in the real world. If you don't know that TSM crushed earnings and you say, oh, NVIDIA might have a bad quarter, it's like, well, no, TSM just crushed earnings. You might want to be a little bit more conservative with your strikes because of that.
Yeah. And one more thing, you might want to do this contract. If it was me, I would probably do this contract to August 22nd and I will go 5 weeks. The reason I would do it for 5 weeks, and I'll explain to you really fast, is because one thing that you have to take into account for stocks like this that are running super high, and I would probably be at like the same 200 probably right here. So I would collect a little more premium. It'll be, you see the premium starts becoming a lot juicier, 86 cents right now. The reason why is if you go to NVIDIA, and this is extremely important for stocks like Palantir, NVIDIA that are running super high in hood, all you got to do is look at the earnings. And as you can see, earnings is August 27th. So you want to make sure that your options expire before earnings. So August 22nd would be a really cool date instead of August 15th. You give yourself an extra week before earnings. That's the key here. So I would probably do the $200 strikes on NVIDIA. I would probably do it on August 22nd. And I would do, yep, the 200 right here.
Can you show me puts? What put will you do at these levels?
I would not touch it.
If you had to sell a put.
If I had to sell a put,
yeah. Meaning you're obligated to buy 100 shares. What levels would you be comfortable at?
So if you want to do the put over here, you have all of these lines over here. So there is support at 158, which is the 20-day moving average. There's support right here at the 144, strong support. So if I had to, just by looking at this, I would want to be anywhere below 140 for a cash secured put, like 144 or lower, because there's a strong volume shelf right here. This big line right here is a huge volume shelf. And you have the 50-day moving average. Besides for that, you have the 20-day, which acts as support. You have the middle of the Bollinger Bands that act as support. So I would do 144. So if I wanted to do this, I would do the same thing August 22nd before earnings. I would do, instead of sell call, sell put, I will go to the 144. There's no 144. 145 is okay, or 140. Let's say 145, and that would give you 86 cents. So then the calculation would be 100 divided by 145, which is strike price, times the premium collected 0.86 cents times 0.86 cents equals. So you would collect 0.6% on your money for a pretty safe bet of 145. So if I had to do this, I would do the 145, just because because NVIDIA is running so high, it's due for a break. I don't know what that break is going to be, but it's due for a break. Like, for example, NVIDIA was trading right here, and you see there was a kind of a break right here. It dropped a little bit. You just don't want a massive break like this, you see?
Right.
We had and this was in June, right? So you had a massive break from here, and it just completely dropped. And if this happens, you're going to get screwed if you're going, let's say, the normal 160.
Can we do the calculations just to show people? If I'm super bullish, 165, what return would that give me in a month?
Sure. For cash secured put?
Yeah.
I'll give you guys this one, but if you guys want buy the book, like the rule of thumb, what you really want to do is get in on 160. That is the number, rule of thumb. Why? You want to do roughly 20 delta, and you want to have 80% in your favor. And you want to have 2% in 4 weeks. Since this is going to be a 5-week play, you would like to get around 2.5. The problem is you're probably not going to get this with NVIDIA, but let's do the math. So this is the rule of thumb play right here. This is the quintessential thing that I show people on my channel. And from here, you adapt to what you need. So let's do the math. Go 100 divided by the strike price, which would be 160 equals, and then you're timesing it by the premium collected, 275 times 2.75. So this is a good play. You get 1.7% for NVIDIA, not bad. You want to get around 2.5.
Just to put in, there's not a lot of businesses where you can get 2% in a month on your money. Obviously, the downside is NVIDIA tanks, right? And then you are back holding the shares. But if you're super bullish and NVIDIA holds these levels, there's just not many places in the world where you can make 2% in a month on your money.
Yes, and one more thing, there's a superpower that you have. It's called rolling, which I cover on my channel, and I'll speak about it. It's just, I think people want to go through these type of plays and things like that. But rolling is a master superpower that people don't know about. Look, I was rolling SoFi. Again, I have videos on my channel. $655,000, bro. They had me by my neck. $655,000. Everybody said I'm done. At some time, I had 14 strikes. SoFi was trading at like $950. I was still rolling it on days when SoFi was trading at $1025. And I still collected roughly 25 to 50% of my initial premium. It's a lot of information to go over.
In a nutshell, rolling is closing the contract that's underwater and opening a new one to give yourself more time. It's deeper than that, but yeah.
Exactly that. And the net premiums, so when you're selling an option, you're collecting premiums. When you're buying your existing option, you have to pay for the premiums you owe. So the option you sell, the new one, cannibalizes the amount that you owe. The point is, there's a lot of ways to manage these situations, which is a different video on a different topic, but I'll be happy to go over as many plays as you guys want. What's next?
So I think we'll do one more. So that was good. I don't want to take up too much of your time. We did NVIDIA. People seem to be liking this segment. So maybe we'll do a little weekly thing, bi-weekly thing, but Adam's channel is there in the description. You guys can get more info on his channel. You guys put the stock in the chat. What stock? Yeah. All right, this we usually say don't spam ticker, spam a ticker. What ticker should we see if there's any value of puts and calls on? It needs to have premiums though. Grab doesn't have premiums. We need something that actually has some premiums.
And while you guys are doing that, just so you want to sell covered calls on green days, you want to sell cash secured puts on red days, but you want to manage a covered call on a red day and you want to manage a cash secured put on a green day. Just saying. You guys will learn that later.
Stu Tessie. I'm seeing Tesla. Stu Tessie.
Tesla's a good one. Tesla covered call or Tesla cash secured put? Which one?
Do both. Let's do both.
Okay. Tesla's good because it's going to give us a lot more information. All right. Oof. So Tesla.
Adam, you were in Tesla a while ago. You were in a pretty sticky situation as well. If you want to tell people.
Yeah. So I was this is how I was learning. I was selling cash secured puts on Tesla, and I believe that my strike was like 225, 250, something like that. And Tesla went down to like 200, I think, at the time. And I kept rolling it as well, and I rolled it for like 9 months. And then for one day, I was able to buy out of Tesla when I had like up. I think I had to pay $50K to get out of the position, and I ended up using the collateral that I saved to sell a SoFi 6-month play that I collected like $75K. So I covered the $50K, and I made $25K on the play. And I remember sharing it with Ahmed. Don't quote me on the numbers, but they were something like that. And I was so happy because this is when I was learning. And I'm like, bro, I got 3 contracts. I owe mad money on Tesla, or 4 contracts. And I was stressing at that time. But now I'm comfortable in uncomfortable situations.
Yeah.
So Tesla is, one second.
We'll do a couple. I think Adam, I think you're good for like the next 20, 30 minutes. So
I could do whatever you guys want. Yeah, I got nothing to do. I'm retired. I'm retired.
Yeah, no, we'll do some more tickers after this. We'll do some. So let's do to keep it going. Let's do like a covered call on Tesla, and then I'll give you another ticker so you don't have to spend too much time on it.
Sure. Just trying to adjust my screen for some reason that's not so again.
And let's assume that the premise on these covered calls at least is you're buying today. So let's assume someone's buying 100 shares at 320 to try to map out
1 second.
how you think of it.
Okay, let me just zoom in on this 1 second.
While you're doing that, let me just go through some stocks right here. SoFi just under 22, 21.95. Big Bear. I mean, incredible day. Down a little bit from 840, but it's up 15%. NVIDIA is trying to break 174, folks. S&P and the Qs all-time highs. Grab broke 530 at one point. Palantir right here, 153.72. Palantir as well, trying to get to that 154 level. Voyager that Adam just mentioned, that's up 6%. Oscar still down 5%, so that's a candidate for puts today, whereas a lot of these others are candidates for calls. Shopify with that OpenAI integration, trying to get over 120 freaking 5. Rocket Lab, are we still at 53? We are just below 53, 52.30, but that's up 10% of the day. Mercado Libre, another company that has to split their stock one day, hopefully 24.09. CrowdStrike 473, Supermicro 53. AMD, which has been doing well, that's at 159, just below 160, did hit 160.5 in the morning. And then Palantir, which got very close to 154, not there yet, but maybe she wants to get back there.
Bro, Palantir, I'm so mad. I want Palantir again so bad, bro. I got like a lot of money on the sidelines. I want to get back so bad on Palantir. Okay, so what are we doing over here?
Adam, just make sure you get my invoice later because I charge to have you on the channel. So
now, bro, we growing together, bro. I'm super duper happy for Ahmed, bro. I'm one of his biggest fans, to believe it or not. And And I'm so happy to be part of this journey with him, and most importantly with the community. And I'm so grateful that he remembers me and he's supporting my channel and my growth right now. And it's just so good to have a community where you can just support each other, bro, because it's hard. Nobody cares about this shit.
And he met my grandmother last week.
She's a sweetheart. His grandma, his mother, it was great. Okay, anyways, let's get back to this. So what am I doing? Covered call for what do you guys want to know?
Tesla, covered call on Tesla.
Covered call on Tesla. So Tesla has a lot more information. Tesla is very interesting right now. It's literally doing the battle right now. The price of Tesla is literally at the 50-day moving average. If right below the 50-day, you see there's a red line right here, which is the 200-day moving average. And the 50 is on top, the 200-day and the 20-day is literally below. You have these huge volume shelves over here, and it's literally in the middle of the Bollinger Bands. So if you're selling the covered call, automatically you want to look at it and say, hey, I want to go at least to the top, if possible, of the Bollinger Bands. Top of the Bollinger Bands is around $344. The next thing that you want to look at is the RSI. It's literally in the middle, which means that it can literally go any way. The RSI is a little bit bullish over here, and there's two lines you're going to see, a yellow line and a purple line. This is like if you want to hone in on it. The yellow line is a smooth out line with the actual RSI being the purple line. When this crosses over, like breaks the yellow line, this is a bullish indicator, just like this was a bearish indicator where the purple line smashes down on the yellow line. Stochastic is similar. The green line is your main line, with the orange being your smooth out line. As you can see, the green line kind of touched the orange line and kept going. It didn't break through it, which means that this is bullish. It looks like it has ability to go up. So right off the bat, I want to be somewhere around 344, 350 if I'm selling covered calls. So if I would do this, I would sell a call.
So July 23rd is earnings. So that's, do you factor that kind of?
Yeah, I wouldn't sell this right now. But actually, the 23rd is fine because you have so much time to recover. So I wouldn't even think about this, to be honest with you. Right? Like for me, earnings in this specific case doesn't really matter. You could wait. You don't have to like do it now. Just wait if you guys feel uncomfortable. But if it's me, I wouldn't really care because you have like 3 weeks after this to manage. So I would do the covered call. I would start to look at it at around 355.
Wow, dude, they're paying $8 a share.
Yeah. It's crazy. So if you guys want to do you want to be a little safer? So another thing that I like to do besides for the physical technical analysis is I like to look at the price for year to date. So the highest that it went up to was around 424. So you want to kind of get into that price range if you can. So the first thing is the Bollinger Bands and a bunch of other technicals. And then you want to be somewhere between the top of the Bollinger Bands and the highest peak that you made year to date. Why? It's really hard to break through. All-time highs, it's really hard to break through year to date highs. And you can go for the whole entire year up to 480. So I'm going to use this one. So I want to be somewhere between that 350 range and 426 range. This is like ideal of where you want to be. So let's see what's going to give it to us. So I'm going to give you guys two options of what I would do. One, if you're feeling ballsy, and another one if you guys want to be a little bit more conservative. So I would probably pick this one if you guys want to be like normal, buy the book. This one right here, 355. But if it's me, I would be doing this one right here at 390. And so I would feel really comfortable.
I'll quickly calculate the return. So 395 a share, 355, so $355 divided by 32,000 that I'm spending today for 100 shares. That's a 1.1% return on the 390 and a 2.7% return on the 350 in a month.
Yeah. So it depends if you guys want to sleep well at night. And you guys could do anything in between, right? So you could do anything between this. You don't have to do that one. You could do 360, 365, 370, 375, 380, 385, 390. If it's me, I would feel really comfortable with 390. That means that I can sleep at night. That means that even if earnings are good, even if price goes to 400 of Tesla, you could roll it. You have plenty of time after earnings to manage this. Like, you know, this is giving you a huge safety margin, right? This is giving you like 22% runway in 1 month. and you're collecting $3.60. So
and again, that also means someone on the opposite side of this trade. This is the reason why I got obsessed with selling options over the past year and a half. Is that someone's buying that 390 call, and they're assuming Tesla in a month is going to be above 390, and they're paying $3.60, so above 393. I don't know if that's going to happen. No one, quite frankly, knows if that's going to happen. Now, if it does happen, you make a lot of money. But if it doesn't happen, and the probabilities are that Tesla might not surge that much, and even if it does surge that much, it needs to surge even higher to cover the theta, that the seller gets to collect more of that premium versus the option buyer, because the buyer is paying for that premium, and that buyer just might not be right about the direction of the stock.
Yeah, so those are my plays for covered calls. If you guys want to do a cash secured put, this is actually going to give really, really good. So on the downside, you have the same thing, the 20 and the 200-day moving average is this yellow. So let's just rewind. You're going to see lines. The line is going to be a yellow line, which is 20-day moving average, green line, which is going to be a 50-day moving average, 100-day, which is a white line, 200-day, which is going to be a red line. And all this means is the moving averages over that period of time. And each of these act as support, a ceiling and a floor. And the 20-day is immediate price movement. The 50-day is short-term price movement. The 100-day is mid-time price movement. And the 200-day is long-term price movement. So this is like general basic understandings that anybody can follow. It's not rocket science. It's super easy. You have all these lines color-coded, copy paste what I have color-coded and start from there.
By the way, folks, real quick, 174 on NVIDIA. New all-time highs, 4.25 trillion.
It's unbelievable, bro. It's unbelievable, bro. It's so cool. We are living in the greatest scenario wealth transfer ever. And guys, congratulations. Most of you guys made crazy gains. A lot of you guys are 100,000-aires, millionaires, multi-millionaires from being in the Palantir community. Shout out to Amit, Palantir, Hood, other plays now. Pat yourselves on the back, guys. We're a community not full of shit. A lot of people laughed at us, but who's laughing now? The same people that said fool and chill, the same people that said Palantir is never going to go above $20, the same people that were scared to put their money where their mouth was when I was trying to bet them Palantir against Tesla, Palantir against any stock they wanted. Some people still owe me money, but congratulations, guys. Congratulations. You guys had conviction, and you're not part of a bullshit community like a lot of them. Never been sold out by Amit, always supporting you guys. He gets tons of, requests for people to give him money on dumb shit that he's not going to advertise. So shout out to everybody. So Tesla, let's go to, so you want to, just by looking at this, to sell a cash secured put, you would like to be at around this 288 level. So 285 preferably. Now I'm going to look at the next thing, but you want to be at 285. If you could sell a cash secured put at 285 and make your 2% for 4 weeks or 2.5% for 5 weeks, then this is a good play, in my opinion. So let's go to Tesla. Let's sell instead of a call. Let's do a sell put. Let's go 4 weeks out to August 15th. Let's go all the way to the 285 and let's do the math. So 285 is going to pay you. Yeah, this is going to work. So
$565 divided by 28,000. That would be a 2% return.
This is a perfect play. 4 weeks, 2%. And look, without me even looking at the chain, guys, right? I didn't even look at the chain, but you have to have an idea. Look, 20 delta, 80% in your favor, 4 weeks out, 2%. Beautiful. So before I even look at the chains, I already kind of have an idea of what I want to do. So
and
for me,
the most important thing here is, are you comfortable actually owning 100 shares at 280, at 285? Because if you're not, then don't do it, because then you're going to feel like shit if it gets to 275. But if you think 285 is a reasonable, in however you define reasonable, price to own Tesla, then that is the number one reason I think you would agree, Adam, to actually sell.
Yeah. So that's Tesla. If you guys want me to do something else, let me know.
Let's do SoFi because it's running right here. SoFi.
Okay, SoFi covered call or cash secure put?
Let's do puts.
Okay. Ahmed, do you mind if I put a link in the comments for one-on-one booking?
Yes.
Because a lot of people are.
Why don't you text it to me and I'll put it there for everyone.
Sure. Let me. Let's do a second on the WhatsApp. Oh, I'm sorry. I could do it in the private chat. Got it.
Yeah, there you go.
All right, cool. And I'm not pushing it, guys, but if you guys want to know more, a lot of you guys I see in the comments are asking. In 45 minutes, I could show you all of this and more, and you guys will have 15 minutes saved, and I'll save you thousands of dollars instead of paying these jokers online.
People call you
okay.
the joke.
Yeah, dude, I forgot who was the first person to do that. And the guy who says this, and I don't even know who the guy was, right? Because I don't watch any sports really. And I saw him and I was like, oh yeah, I was like, that's a handsome dude. I wish I looked like him. But yeah, it's so funny. And then a couple of other people started saying it, and it's kind of like a joke of it.
You're the joker of option selling. So there you go.
Yeah, it is funny. Okay, so SoFi is great too, man. I'm so happy I kept my options. I got almost $1 million position on them right now. I was so happy, man.
Cactus
all right.
Jack, he mentioned it. There he is. He mentioned it. There you go.
All right, cool. Thank you. All right, trade options. SoFi. So SoFi is going to be very similar to Nvidia. You're not going to get much of technical analysis in terms of the top because we're breaking all-time highs, and the only thing you have over here at the top is $22. But honestly, f this shit. Like this is not going to be the top, so I wouldn't touch that. SoFi is running super hot, so it's due for a cool off, but there's so much information that's coming out. I don't know, man. SoFi is gonna crush, I think. So
I would do I would just vibes based. I would do 27, 28. Is that what you're thinking?
I want to be at the very least 25, preferably closer to 30. The reason why is, and a lot of people are missing this, is Anthony Noto has a performance bonus that expires just under a year from now. 25, 30, and 35. At 25, he makes 100 million, roughly. At 35, he will be making 350 million. So it's no coincidence, bro, that SoFi price is running right now, right when that bonus is coming. Maybe it is a coincidence. I'm not saying anything tricky or funny business, but it's so funny that it's kind of starting to align. So that's kind of what I'm hoping for, that it gets to closer to 35 personally. But if I have to sell a call here, first I want to see when the earnings is because I didn't know. So the earnings would be on
July 29th.
July 29th. So I'm not really worried about earnings. You got plenty of time. So I would do the same thing 4 weeks out, July 5th, August 15th. Sell a call. Yeah, guys, like I'm a hitter right on the head. So 28 is where I would like to be. And maybe even 29. So 28 to 30 is where I would like to be. So that would be the play. We could do the math if you want, but I wouldn't be selling anything less than that because this thing could run so easy to price discovery. And if you want to sleep well at night, 29, 30. Like I wouldn't even do 27 or 26. Like no chance.
So
you want me to do that?
Yeah. So 27, 28 is your range essentially.
No. The range would be minimum 28, preferably 29, 30, and 30 acts as a support because it's a whole number. So that's kind of like a mini support over there. So but you see, you're not getting a lot of money here, right? You're getting like 18 cents. I don't know how much the percentage would be over here.
Yeah, the premiums are just not like 18 cents divided by, if you bought it today, 2,200, that would be, 0.0.
Yeah, so
it's just not a lot.
28 would give you the 1% mark. So if you guys, dude, I'm going to say it really fast. If you have SoFi, do not sell a covered call for less than $30. That's what I'm saying. That's what I would do.
Basically,
it doesn't matter.
You think it's in breakout mode and you don't want to risk your
You don't want to risk it, bro. Yeah, you don't want to risk it. So at least here you could collect your, 18 cents. It's still 18 cents. It's not bad. Some of you guys have SoFi when it was like $7 or $8. So you guys are like Palantir and Hood. You guys have hundreds and hundreds and hundreds of shares. This adds up, right? This is a multiplier. So if you're making 18 cents per share, and you have 1,000 shares or 2,000 shares or 3,000 shares, so on and so forth, it really does start adding up this little amount, which is how I was making money with Palantir, right?
But also, and I think it's important to say this is a lot of the Palantir community got screwed because of this. If you genuinely love SoFi, if you love it, if you believe in Nodo so much, do not sell any calls and get in the way of what could be a parabolic train, because you will regret it so deeply if SoFi breaks out to 35.40 and does what a lot of people think it can do. So sometimes the premium is just not worth it. But if you want to be more conservative, then maybe 20% of your position you sell calls on versus the whole thing.
I'm gonna highlight that Bluebird. They just made a comment, Bluebird. That's not solicited, right? That's a lot of people are on the comments. I got an email. The guy did a one-on-one with me. I showed him how to do things, all his work, and he made $3,300 last month. He's like, bro, you paid my bills, my rent, everything, and then some, doing this strategy over. And boring is the best, guys. Do not get fancy. Boring. 4 weeks out, 20 delta, 80% in your favor, 2%. Premium every single month. Do it over and over and over again. Don't deviate. Cash secured put, covered call, 4 weeks out, 90% in your favor, approximately 1 delta, 1% premium, month in, month out. Simple.
Well, two things. Number one, I think you're going to get a lot of bookings after this. But number two is the reason you're going to get a lot of bookings is because you are not telling people to buy freaking short-term calls. You're not promising them 500% in a month, which is what a lot of these YouTube that's what a lot of them are doing, right? What you're saying is, hey, keep it boring. 1% in a month, 12% a year is not bad on top of your share appreciation. Real quick question on this from Jasmine. What would you do if you needed to roll those 20?
Jasmine, tell me when's your date? What's your expiration date? I'll tell you how to get out, but I need to do a calculation. So do you have an expiration?
Actually, let me give you my cousin she texted me a picture the other day. So let me give you hers. She has SoFi $17 calls on August 15th. Oh, she's used Jasmine's. All right, she's there. August 1st. And then Jasmine, let us know the strike.
So do you want me to do your sisters or Jasmine or both?
Well,
doesn't matter.
Yeah, let's do Jasmine. We'll get her strike in a second. So August 1st is the expiration. And then her strike's probably, I would say, below 20. If she's thinking of rolling it.
Hold on, Jasmine. I'm sorry, I'm mixing up your sister and Jasmine. So 8-1, $20 strike is what you have right now. Jasmine, one more question. What was your cost on it? Just curious. Strike is 20. Yeah, I got you. So let's start like this. First of all, we need to reverse engineer this. Let's go to August 1st. And let's see what she has owed right now. So then I would do sell my call, then go to 20. And she owes basically $2.52. It's right here, right? $2.52.
What that means is she has to pay that $2.52 somehow to get out of this call. That's the debit. You have to cover that essentially.
Now, take into account she collected some premium when she sold this. And if it's going to be something like mine, I probably collected premium for many months. I'm not counting into this calculation because at the end of the day, you want to try to keep that premium kind of like as a safety net. So my calculations is based on literally this 251 that she owes. So
she's going to tell us in a second how much she paid for it.
All right. Now it's 240, guys. It's going to change this number. So I'm just going by 240. I don't care what happens. I'm doing $2.40. So you need to sell something to cover the $2.40. So the very first thing that I would do is I would actually not manage it today. I would wait until the first, maybe middle of next week, maybe Wednesday or Thursday of next week, possibly the Monday or Tuesday of the last week. Why? I want to dip. You don't want to do this on a green day. But if you had to do it, I'll show you. You want to dip. So if this thing can dip or is neutral, you're going to get a much better play than what we're going to do right now. So the very first thing I'm going to do, because you're pretty close on this, $20 is a really good strike. You're in excellent position. I know it sounds like you're not, but without me even going further, you're not in bad shape, believe it or not. So if you're August 1st, the first thing I want to do is go to September 1st. So let's go August 29th, right? August, so 1, 2, 3, 4, all right? So the very first thing is I want to see where I'm at right here. How can I get $2.40? So $21 right here. or 2050. So the very first option that you can do is you could roll it 1 month out, and you can, if let's say you did $2.67, this would get you an additional 50 cents in share appreciation, and it would get you roughly 20%, 20 cents in premium. So now it's $20.50 plus the 27 cents. So now you would be at, oh, thank you so much. And she collected 83 cents. Okay, so let's do the math. Let's say she did $20.05. Okay, let's say we roll this to $20.05. Let's add, I know I said I wasn't going to do this, but let's just, for shits and giggles, let's add the premium she collected originally. And then if she owes $2.40 and she would collect $2.67, I'm going to add another 27 cents plus 27 cents. So in reality, even if she had to sell this, she would be at $21.60, which is pretty much where the price is right now, plus or minus. So just really fast, your cost basis is the strike price plus the cumulative collected premium, either adding or subtracting depending on cash secured put or covered call. But I want to give you a win. I don't want to give you a maybe. I want to give you a win. But worst case scenario, you do this one right here, and now you're kind of even, and you bought yourself 1 month. But I honestly think SoFi is going to keep running, and is going to fuck your shit up. So so I would not want to be at 2050. I don't want to be at 21. I don't want to be at 2150. What I really want to do is keep your shares. And this is called a Hail Mary. So what I do is I roll this 6 months out. And instead of doing this, I would just go to January 26. Let me explain something very clearly. One more time. The share appreciation is the prize. Keep your eyes on the prize. The premium collected is secondary.
Yep.
It's not superseding. So all you care about is your asset appreciation. Even if you roll this for 6 months, break even, start a roll over next year on January.
Adam, by the way, this is what I tell my dad. My dad got into some sticky situation. I'm like, Dad, let's roll it out 6 months and we'll break even. And he's like, but then I'm not making any money. I'm like, yeah, but you're making $40 extra on your NVIDIA instead of having to sell it at $150, right? So
word up. So, and it's a mindset, right? You're teaching him a different mindset. Just like buying options is a mindset, buying stocks is a mindset, long-term holds is a mindset. It's all a mindset. And kind of this whole time you're like, oh, I want premium. And somebody here is telling you, like I even had a viewer, I made a video to address it and it was good, but he got tight that I said, roll it for 6 months as a Hail Mary, like get out of jail free card. And he's like, you didn't teach us this. You told us 4 weeks, 2%. This is completely different than what you were saying. You're using margin. And I broke it down and we're cool after this. And I explained that this is just a Hail Mary pass, literally getting this lovely young lady, I forgot her name, Jasmine, out of the situation. So let's go further. So what I would do is you owe $2.40. All right. So I would go to, this will be my number. So if I'm you, I would do this work right here. So I would go $26 for January 16th. This covers your play. You make 5 cents, whatever. But you keep the 83 cents of premium that you collected. That's in your pocket.
Yep.
You raised this to $26, which
$6 extra a share.
$6 extra a share. And if in January, SoFi is going to be like 27 or 28, guess what? We do another 6 month play and you'll probably get up to 32. Now you rolled 26 and I know that you can manage this to 32 roughly, like off the top of my head. So you know that you're not selling it for 20, you know you can get to 32. And that's like bad conditions. If you have a little bit of luck or some dips, I can't promise you, but you can probably get out of this position. So this is me. $26, don't even think about it, January 16th. And if SoFi drops, guess what? You could actually not roll out and up, you could roll in and down. That's also a technique that you could do. That's the play.
And again, for those asking what rolling means, when Adam comes on again one day, we'll go really deep into it. But he's essentially, the contract for $20 that Jasmine got 83 cents for has now gone up, which means the buyer won when they bought that contract. And it's $2.40. She has to cover that $2.40 somehow to close the current $20 contract. and open a new one, which is what it means to roll. And the reason Adam's going from August to January 2026 is because extrinsic value, which is part of an option, is the time value. And you can only get more value from either the strike or the time. In this case, you're losing on the strike. So to increase the strike, you need more time, which means to get that extra $6 a share, you got to add about 6 months of time.
Which other ones you guys want?
All right, we'll do one more and then we'll close it for today. I saw someone in the chat right here. Rocket Lab, they're in a $54 strike on a covered call. They got 54 cents a premium for August 1st.
Hold on, let me do this again. Do it again. So 54 cents they collected. Rocket Lab, what's the strike?
54.
54. Oh, so okay, $54 strike. Expiration?
August 1st.
August 1st. And how much did they collect?
54 cents.
Premium? So 54 is the strike and 54 cents collected.
Yep, exactly. Yep. So obviously,
first thing we're
Rocket
gonna
Lab at 53, you know, it's very close to challenging that contract.
One more thing. I like to manage this the last week of expiration. The reason why is, as an options buyer, time decay is your worst enemy, but as an options seller, time decay is actually your best friend. So by doing nothing and the price stays stable, automatically, you're going to make money. You don't want to be rolling on these days. You don't want this. So if it's me, I wouldn't be doing nothing today, irrelevant of what happens tomorrow or Monday. And I would wait for a red day, because even if the price goes up higher and you have a red day and then there's a drop, even if it's going to be higher than this number, you're going to be able to manage this much better. So let me just say it one more time. To manage a covered call, you want to manage it on a red day. To sell the initial covered call, you want to sell it on a green day. So this is a so messed up situation to manage. Like, you're going to get wrecked today. So just mind you that these numbers are going to change a lot, and I wouldn't be managing it today. So the first thing I want to do is see, when is earnings? Earnings are August 7th. Okay, not a problem. So let's just see what's up right here. Sell, fall. He's going to be down on August 1st. So then I'm going to do 4 weeks after August 1st. So 1, 2, 3, 4. So I'm going to take it to August 29th. And I'm sorry, one moment. I just want to see how much he owes. Sell call for August 1st. So let's reverse engineer. So August 1st, he owes $3.30. This is his play right here. Okay, so he owns $3.30. So I need to get him out of $3.30. And he's going to get wrecked because this thing is up 11% right now. However, you're still pretty good and below $54. So it's okay. So let's go 4 weeks out. 1, 2, 3, 4, August 29th. Sell call. Then let's go to Rocket Lab and let's see.
One thing real quick before we continue. There are some of you guys saying you could get assigned early on your options. That is true. Adam, any quick thoughts on that?
Yeah, sure. You can get assigned anytime you're in the money, which means that on a covered call, you are below the strike price. I'm sorry, above the strike price, and for a cash secure put below the strike price. The thing is, what I've learned, and this is not a scientific or mathematical, it's just from my experience doing thousands of these. People are super greedy on the other side.
Yes.
And the person that you're originally selling the option to, that person, that option that you're selling changes hands hundreds of times and you never see it. It's the market makers deal with it. Most people flip contracts. They don't assign the shares.
I mean, they don't exercise the contract.
Correct.
They force you to then give up the 100 shares. Correct.
Yes. And the people that exercises is usually the last person to have it in their hands after they changed hands multiple times. I found that the reason why I manage it Monday and Tuesday of the last week of expiration is because I've learned I only get assigned Thursday or Friday of expiration week from my personal experience, right? So I try to manage Monday, Tuesday religiously. I don't like even Wednesday. Monday, Tuesday usually gets me out of it 99% of the time. 99% of the time. So that's all I could say.
I've only ever had one option exercised on me. It's someone, it was like 2 a.m. at night. And I'm joking. I feel like some guy from Hong Kong wanted 100 shares of Hood that I needed to deliver to him. But it's one time in my life. Most people they flip the contract. They don't really exercise. And if a market maker does it, it tends to be at expiration, not in the middle of the contract.
Sure. So I'm gonna walk you through this. But if it's me, I wouldn't touch this. I would manage it the last week, and I'll explain to you why. This thing is way out of bounds with price appreciation. It's like way, way, way out of the top of the Bollinger Bands. It is way out of bounds for the RSI. Like it's at 88 and high is 70. And it is way, way out of bounds. Like the stochastic oscillator, like look where it is. It's like as high as it's ever been, right? And look, I'm just saying, like in the past, I'm not saying it can't go up. I'm just saying, look at the past. Like, look at this line, this white line. You see, every single time I hit this white line, drop, line, drop, line, drop, line, drop. It could be this, where it went up to the line, dropped, and came right back. But that's what you want. And then when it drops here, you're either out of the play or you manage the play. Literally everywhere that has been so high, there's a drop. So if it's me, I wouldn't touch this. But if you really want me to show you how we'll get out of this, no problem. You owe $3.30. Sell a call, $3.30. Why is this off like this? Sell a call, he owes $3.30. Oh, sorry, I'm looking at the wrong thing. Yeah, so like you could literally take this to 65 right now if you wanted to, right? Because you owe $3.30, you can get $3.40 at 65. But in reality, I wouldn't do that. Go to the next.
Real quick, let's just explain that, right? You got to call at 54. You have to make good on 330. You could extend it to 65 going a couple weeks out. Rocket Lab's already up like 100% in a month. I mean,
correct.
If it's going to go to 65, maybe it does. But if you want to just break even and save your shares, you have the ability to do so with rolling. And it's only about a month out, which is not that crazy.
Yeah. If it's me and you want to manage it today and you're like, hey, Adam, I really want to manage it today, what I would not do, I wouldn't manage this until the last week because this thing is going to break eventually. I don't know when, but from what I'm seeing. But if you do want to manage this and it's me and you're saying, gun to your head, Adam, manage this, I wouldn't do the 65. I would do 60. This way you're collecting $1.30 in premium, which is still pretty good.
And you're increasing the strike from 54 to 60.
Correct. And what I'm trying to say is, bro, it is so overbought. Like, just look at this shit. It's like crazy. Like, it's just look at this thing, right? It's just so aggressive. These things break. Look, it happened with NVIDIA, 140 to 100. Palantir, 125 to 100. Hood, 75 to 60. HIMS, 75 to 40 something. Doesn't mean Rocket Lab's not going to 100. People like have this that's not what I'm saying. What I'm saying is there are many bumps in a bullish trend. There's many dips, right? There's bearish bumps in bullish scenarios, as well as there's bullish bumps, bearish scenarios. And you as an option seller are waiting and salivating for those situations. And GOT being up 10% today is not the situation. If you wait for a red day, you're probably going to be able to roll this to 65 and collect $1. So the 60s are going to be like 65 for you, right? So you'll be able to, if you just wait for a dip, if this just dips tomorrow a little bit, you'll be able to do $3.40. I'm sorry, $4.65 on a 65, if that makes sense.
It's legit becoming a bit of an active portfolio manager. And some people don't want to do that. Some people don't want the stress of that. And if that's the case, then you don't engage in option selling. But if you do, and you kind of think you can navigate the markets if you're paying attention to it so much every day, and it takes you 5 minutes a day to just kind of figure out how to roll or maintain a position or not, then learning it to make some additional income is not the worst thing in the world either.
One person that caught my eye, shout out to Midwest. Midwest is an OG from Palantir. He's also an OG using my system for options. He's been doing it for probably like 2 years now. He's been doing it, and I remember when I had my other channel, he was my, I still have it just for documentation. He was a channel member, and this is when I was just starting it, and I was only making these videos for my channel members. I'm like, hey, I did this. I was like starting out, and doing this, yeah, like you could ask him. He's been super successful doing this from the few trades that I did follow with him. So a lot of people from the old school are doing this and doing good. I'm beneficial, like a lot of people. Shout out to everybody, the whole crew. I appreciate you giving me time to get on this and bro,
Dude, this
guys,
was
don't.
good. This was, I think the segment is maybe 45 minutes every week. People put some trades and you figure out how to navigate those trades.
Yeah, bro, 100%, guys. So I'm not pushing shit, right? I don't need the money, guys. I'm at seeing my account. I'm a multimillionaire and just making more money. I'm good. The reason why I'm offering one-on-ones is because people are contacting me and they're like, hey, bro, I paid $3,500 for a consultation. And he's like, I didn't get nothing out of it. He did at that time, I was charging $50. He's like, you answered for $50 more than they answered for $3,500. And I got access to a dumbass Discord. Besides for that, for my YouTube membership, I charge $10 a month. I did this because people asked me to. And for this, I do Sunday nights. So Sunday nights on my channel, 8 o'clock, religiously, I do a live on my channel where I literally do this. At 9 o'clock, it's only for YouTube channel members. $10 a month. That's all it costs. And it's literally 20 of us. And I'm going through everybody's trade calmly. I'll go over for like an hour and a half, 2 hours. The best $10 value you can get if this is something that you like. Calm, cool, efficient. Guys, don't spend your money on this bullshit. These guys are robbing you. And these big fancy $1 million numbers, most of the money they're making is off of your backs.
Yep.
Sure, they're successful, but most of the success came from your money. And then you have these big numbers of millions and you're like, oh my God, shiny things. I got more than all those bumps and I'm charging a few bucks. That's all I gotta say.
I love it, Mr. Adam. I think we came up with a new segment on the channel, folks. I think we did. There's his YouTube right there. His one-on-one link as well is in the chat. You can subscribe to it, book a session if you need to, and I will talk to you next week, Adam.
God bless you. God bless every single person in the chat. God bless your kids. And thank you so much for the opportunity to speak to you guys. I love you all. Continue to kill it.
Thank you, Adam. Talk later. All right, folks, not too bad. That was pretty fun. At the same time, NVIDIA broke 174. Palantir did break 154. And SoFi's making her move 2214. I think we're getting a breakout above 22. Let me check resistance in a second. NVIDIA right here, 173. Also, Grabby Grab is coming up above 530. I mean, if we could get a 520 close, it would be exceptional for this name. We got to see if it can happen right here towards the end of the day, but volume is pretty aggressive. 32 million shares, average volume is 35 million. We still have 4 hours left in the market, so pretty incredible on Grab. Rocket Lab still just below 53. Big Bear AI up 14%. SoFi right here, 22. Let me check SoFi resistance. My SoFi options on the day are up 840%. If it stays above 20 by the end of the year, these will be up 1,400%. So we just need 20 by January 2026, and it looks like 20. I mean, I think it needs a couple more weeks, but it really looks like 20 is becoming support, especially if it can break out of 23. 23, guys, 122,000 shares. 122,000 shares. I know a lot of you guys are loaded up on SoFi, so I know we have a decent chunk of people up, probably in that 7 to 8 to 9x range just on options that you guys bought when it was $7. Absolutely incredible stuff. Netflix, we do have earnings after the bell. By the way, the bell is in like 2 hours because it's 1 freaking p.m. already. So we'll probably end the stream here, but Netflix as well, 1261 on the day. Pretty incredible day, dude. Pretty freaking incredible day. Just an awesome day, dude. I mean, it's one of those days where the bull market momentum is continuing. Does it feel a little frothy? Sure. But again, if the companies put up the earnings, which SoFi is going to do, Hood's going to do, Palantir is going to do, NVIDIA is going to do, it's just hard to say that because Open Door wants to go up 30%, that those companies are frothy. By the way, Open Door is still up 12%, but definitely below that pre-market high. And then the Ethereum treasuries, SBET down 8%. The Ethereum treasuries just not having the best day. BMNR, that one's down 7%. Ethereum's having a good day, though. Ethereum's not like tanking or anything. Ethereum 33.91. So just more people that are selling some of those names after the run-up in the past couple of days. And you got CoreWeave down 5%, Snowflake's down, Carvana's down a little bit, Reddit's down a little bit, DJT's down, Pew, that's SPAC by Trump's son, that one's down 22%. But kind of the leaders of this market are holding on. NVIDIA right here, 173.58. as we end out the stream. Dude, awesome stuff. Awesome stuff. Oh, well, we got some Fed speak. 2 rate cuts this year, reasonable. All right, there is a Fed president saying 2 rate cuts this year are reasonable. I mean, I would hope so. This market needs some of those rate cuts to maintain this momentum. So hopefully we were able to get some of that momentum. JTB, thank you for the $10 super chat. I'm absolutely booking with Adam. Thank you to both. Thank you for being here. Mukabi, thanks for the $10. I scheduled for August 15th at noon. Yeah, I mean, look, Adam is a deep friend of mine. And again, you guys know I don't do private bookings or stuff like that. I don't do Discord. I don't do courses. But for someone like Adam, who has a wife, he has kids, obviously his time is very valuable, just like my time was very valuable when I did debate coaching. Like, if you want someone to literally walk with you, hold your hand step by step, answer every question, paying $70 to $100 an hour for that, I don't think that's unreasonable, especially if the ROI on that is that you learn how to make much more than that in the markets when it comes to option income. And number 2, Adam's a good person. I wouldn't have him on my channel if he wasn't a good person. And if you genuinely don't get any value out of that 45 minutes, you ask for your money back. He'll give you back the money. So from that perspective, I think for someone that really wants to get into it and wants that one-on-one mentorship, that is something worth paying for versus these discourses. GoBut, thank you for the $5 super chat. How much liquid cash would you need for these kinds of plays? 10K, 20K, 30K. For covered calls and for cash cleared puts, you need enough capital to either buy 100 shares or collateralize potentially buying 100 shares. So it's really not 10, 20, 30. It's if you're doing 100 shares on SoFi, you need $2,200. You can get started with $2,200. If you're doing it on Grab, you need $500. Now, Grab doesn't have good option premiums. I wouldn't be selling calls or puts on this, but you get my point. Rocket Lab, you need $5,200. Palantir, you need $15,000, right? So it's really 100 shares times the underlying price, and that determines how much collateral ultimately you need to deal with the option. All right, good stuff. Good stuff, folks. We'll be back in 3 hours for Netflix, and we will buy one share of Netflix right before the bell. And we'll have that trade on Netflix, see how it does. I think it's going to pump, but we will see. It is the first major big tech company after the bell. So we will be getting into Netflix. Thank you, everybody, for being here. 4-hour stream. I don't know if we've done market open 4 hours in a while. I think last time we did it was like a year ago. So happy that it was this segment today. And I think we came up with a new segment, and we will be doing a lot more of this, especially because I've been into option selling for a long time. I think this segment is perfect because both Adam and I can go through different trades and then assess how we would manage it. And for all of you that are thinking of new trades, that would be a segment that would be valuable. Real quick, before we leave, I do want to show you this. This caught my attention because, I mean, it's just the juicy story. And I'm sorry, sometimes you gotta highlight the juicy stories. A CEO of a company was caught at a baseball game locking arms with the head of HR. Yeah. You can see right there. And then the kiss cam finds them, and the CEO immediately realizes he's screwed. The company is called Astronomer.io. It's some AI company around DevOps and infrastructure for business operations. And so, I mean, if you end up cheating on your wife, both of them are married, by the way. Both of them are married. Yeah, that tends to be not the best situation. Someone in the chat says that is my wife. Well, it is what it is. That story is going so viral right now because he's the head of a tech company and she's the head of HR. So it is what it is. There you go. There you go. Anyway, a little bit of juicy stuff right there, but hopefully today's stream was valuable to everybody, and we'll be back on the market close. And we'll get into Netflix earnings. So there you go. All right. Thank you, everybody. Appreciate it. I'll see you guys later on the market close. Bye, everybody. Have a good one. Netflix after the bell. See you guys then.